Day 15 already. Going to be doing some back testing and then just continue with the 2023 mentorship. Yeah, I don't think they're ever going to get retired. No, I'm playing. They will. They will at some point. Basically, going over this day. Yeah, and going over that 2023 mentorship. There's got to be like an hourly inefficiency here. So we come up, take buy side during CPI. Then we come back down, rebalance this inefficiency. And then now we're probably going to head to this high here. We still have buy side that rest above here. So originally, we traded that. Oh my, that's beautiful delivery at 9:30. The 1 hour gap. Into that PD rate, up to rejection block. Then we come back down to that PD rate to take sell side. We come back up one more time. Previous new week opening gap. Then we come back down to this new week opening gap. 11:15 reversal, displacement, market structure shifts, fair value gap. And then we kind of close the day within here. Within that daily range. Let's get calling. I don't know what this annotation was. I think I was denoting the wicks. Right, that new day opening gap right there. How you been, bro? I appreciate it. Appreciate it. It's kind of is like a just an all right day, you know. 9:30 open, PD ray. New day opening gap. The new week opening gap. We come up, we take buy side here. Just a matter of time. Yeah, I would agree. I'm not. I started using market structure shift a lot more recently. I used to not at all, but I used to more look at change state delivery. But I honestly think that looking market structure shift is just a lot more simple. I think it makes it more mechanical for entries too, rather than change state delivery. Yeah, the markets will book the same way in my opinion, but I wouldn't recommend trading Bitcoin. I mean, not. I mean, I don't mess with Bitcoin. Me personally, I don't. We break through. We displace through 50% of that dealing range. Dealing range. Yeah, they're all gonna move the exact same, or not the exact same way, but they all have certain characteristics. I trade stock indices. Today, I kind of want to tape read some of the AM session, but that's in a minute, bro. I would agree. There is a little bit of difference in volatility. Like forex, there's gonna be a little bit more volatility during London. This would have been a 2022 model loss. Yeah, I mean, I think there's multiple channels for learning trading. I would recommend ICT though, because I think he just gets a bad rep because people are lazy, and he has drama associated with him. Personally, Appreciate it. That almost gets fully filled. Oh. What color should I have for inversion? Like oh, I kind of mess with that. Yeah. Let's investigate this last hour macro. Kind of just consolidate until close. Oh, why is it showing the weekly? We change that. We barely purchased high. This actually was a nice manipulation below that 130 price into an imbalance here. Okay, I think that's good for the day. We had retail sales. Watching this. Yeah, I appreciate it. These are kind of some muddy waters. Constant encroachment. Come up. We don't break above it. We displace through constant encroachment of that fair value gap. And what do we have here? We have a volume imbalance with an order block with a fair value gap. Another volume imbalance. Another volume imbalance. We come back, fall short of sell side, rejection block. The market opens and we displace higher. Almost breaking above this, clearing buy side. Coming back, displacing through constant encroachment. Then we finally take sell side. Sell side taken. Market structure shift here. Fair value gap. Right there. Actually would have played out. Is there a better 2 minute? Is there a nicer 2 minute entry? When was this? Oh, this was this day. Wait, do I have that? I do. Oh yeah, right here. Current new day opening gap gets perfectly priced too. Then we have a volume imbalance, a glitch in the matrix. Sell side that rests here. And here. Well, I need to I need to write some of these notes down. me 1 second. Back. Psychology. The number one rule is to trade is to preserve capital. No capital, you can't trade. Um, Probably just support and resistance. And then I was messing around with VWAP. I was trying to have like a VWAP strategy. All right. I didn't mean to do that. I can't go back either. Gotta reload it up. That was the one tab I actually needed. Yeah, that's nice to see. He went short in that imbalance with that order block. Okay. And 8:30 delivers right there.
Is good. That way I'll know I can begin. Checking Twitter now. See if you guys can hear me over here and take a all right, so I've already shared something this morning on Twitter, and I'll talk about it as I have opportunity right now. I just want to see if we have a minute and a half before the opening. I'm going to arrange. So what that means is the first 30 minutes, I'm looking for how price delivers. So I don't have a hard line bias where I'm wanting to take anything as a short, but I'm looking for another run through this low so that we at least know what I'm referring to. As a reminder, I have an appointment today that I have to escape for. So at 10:30, promptly, if not a minute or two before, I'll be closing the session. Watch this. If everybody got it right here. I'm wanting to see if we can draw back down into 41.15, 41.15 and a half. I don't like the lows that we have here. I apologize, I have a little bit of a tickle in my throat this morning, so I'm probably going to drive you nuts with that. Wish I could avoid doing it, but I can't. So we're watching the delivery from here. And focus is down here. Do not trade on this. You're observing. Opening range can be squirrely, meaning that it can do a whole lot of gyrations. We've already had a nice move early on, so the mindset I'm holding here is if we get down there below that 41.16 level, and right now we're looking like we're respecting a little bit too much on that order block here, so it might need to go up a little bit higher if we're going to go lower. So watch that order block here. So we'll take these lines off. They've already accomplished the method earlier. All right, so right in here, watch that. I saw a guy tweet to me yesterday. I didn't see it till late last night. Come in. He says, I'm confused watching this live streams. You're saying sell side, then you're talking about buy side. Right, that's tape reading. It's not trading. You gotta get a feel for what you're looking for as a setup. No setup here. Where's reading the tape, getting a feel for what it wants to do. Now, as long as we stay above 103.75, 103.70, $1 index, that would keep me looking for lower prices for stock index futures and Forex. If you go back below 103.75, 103.70 for dollar index, then that would allow for upside for foreign currencies and risk on would be back in style. What makes it difficult still, we're reacting off of a volume imbalance in here. I apologize, I was looking at my dollar. So this right here is what we're keying off of right now. It's a little too thick on that. If you take a look and you still have time to do so, there's nothing really to be too worrisome for at the moment. But if you go to your daily chart on ES, if you look at that in relationship to
Hey, appreciate the sub.
The range that we've been in since February 2nd. So February 2nd to now, we're just chopping wood. There's marking time. It's not really moving a whole lot, which means that your trading has to be
Oh shoot, that's where we're at currently. Marking time, but the draw is buy side. We've now had a swing low here.
absolutely surgical intraday. Getting in, if you get a win, get it, be done. We haven't really entered a point at which where we have a sustained run. Longer term, on the daily chart, I would favor going higher. On the lower time frames, it's mixed, and the dollar index would have to really crush that 103.70 level to the downside before I would get decisively bullish on ES. Meaning, in layman's terms, and make it easy so we understand what's going on, I believe we are in a choppy condition. It's going to be range bound probably until we lose that dollar index level I just mentioned, or if we start powering higher up. What makes it more interesting to the downside for ES and foreign currencies is if you look at the dollar index, you can pull that up on TradingView with DXY and toggle the selection for TVC. That's the CFD on that index. If you take your attention to January 5th, 2023, that candle's low, 103.98. That level is what we've already tapped into. Or no, we haven't. I'm sorry. That's what we're looking for on the upside. Yeah, we've hit it. Sorry. So today's intraday high comes in at 104.06, and I'd want to see that daily candle on January 5th if we can get through the midpoint of that, which is mean threshold. So everything becomes much more animated and much more dynamic in price delivery. So speed, big moves, big candles would occur if we can get up through on dollar through mean threshold, and that would be heavy down close candles on stock index futures. As long as we are below that mean threshold, it's going to bang around and chop for ES and for Forex. So that's kind of what we're expecting in here. So watch that blue shaded area here on the chart for ES. That's our next premium array.
This video is not live. It's a recording.
So far, just tapping that old. This is a 5-minute. I failed to mention that. I apologize. In the example I showed this morning on the execution, this little teal colored rectangle is a 5-minute fair value gap. I want to see it spring up into that fair value gap here. So notice how we moved off that order block here as we were hitting it. Traded through. This didn't offer too much. I was really looking for it to come back down and touch it. If it had done that, I would have mentioned that being the case, likely to draw to consequent encroachment and see if we can drop into this level here, the fair value gap right there. Do that. I'm going to try to start the practice of extending my rectangles when I'm identifying a fair value gap, because sometimes when you have it laying over top, it's hard to see my wicks in the shadows of the candles. So if I extend it past that, we can see where they're really formed based on the candle low here and the candle high. But this teal colored is a 5-minute fair value gap. And new day opening gap is up here. It's just a range, 1 tick difference between the 5 p.m. close yesterday and then the 6 p.m. opening. So the separation between that 1 hour's difference. That's a level that you want to have annotated in your charts all the time. You can see this. It's just beautiful to see something like that deliver right out of the book of ICT. All right, so we have essentially hit that. Let's see what the high on that candle comes in at 41.29.5, and the delivery on this candle comes in at 41.29.5. So that's perfect. Now, what you want to be paying attention to is we do have a new imbalance here, and this is an old one. So while if it, say for instance, let's make the argument that we're going to run for the buy side that's resting right in here. And if we slip from where we are on dollar right now, we're trading at 103.92 on dollar. So if it was to slide down, there's a small little imbalance on dollar. If you look at your 15-minute time frame, it may not be influential this morning, but I just caught my eye looking at it. It's the 7:45 a.m. today's fair value gap, that little 15-minute time frame. If it were to retrace lower, that, in my opinion, would be the last line in the same. I mentioned 103.70. It needs to stay above that for it to be bullish, which would be risk off and weakness for ES and foreign currencies. But now looking at the 15-minute time frame, it could trade down into that fair value gap and still go higher. But it would have to stay above that fair value gap on the 7:45 candle. So 07:45, that's the time on dollar index. You can pull that up on TradingView with DXY as the symbol, and TVC is the actual instrument you're going to call up, and have it set to a 15-minute time frame. So 7:45 time, you'll see that fair value gap there, hanging around that 103.68 level for dollar. It may not be influential this morning, but I just caught my eye looking at it. It's
where's this imbalance he's talking about though? It's like right around here. I gotcha. What? 5 minute. Hey, appreciate the sub, Paul. It's gotta be that one. Yeah, it's that one.
The 7:45 a.m. today's fair value gap, that little 15-minute time frame. If it were to retrace lower, that, in my opinion, would be the last line in the same. I mentioned 103.70. It needs to stay above that for it to be bullish, which would be risk off and weakness for ES and foreign currencies. But now looking at the 15-minute time frame, it could trade down into that fair value gap and still go higher. But it would have to stay above that fair value gap on the 7:45 candle. So 07:45, that's the time on dollar index. You can pull that up on TradingView with DXY as the symbol, and TVC is the actual instrument you're going to call up, and have it set to a 15-minute time frame. So 7:45 time, you'll see that fair value gap there, hanging around that 103.68 level for dollar. So we're coming down here, touch this fair value gap here.
Oh, this is 2024. That's why it's all the way in 2022. So it's that fair value gap.
Because we have essentially, with this low, we've worked below the bodies of these candles here. This here, remember the wick, that's a gap. So we're trying to measure the willingness to want to move. Spill my water here. Water. We want to see if it makes a more meaningful run below for the sell side here. Dollar index is still holding firm. Now we're back below this fair value gap here. So let me zoom in a little bit more. In this instance, this many times would be an opportunity where I would look for a break below that, come back up and use the low or the consequent encouragement of an old fair value gap. The frame is set up that would send me into a discount array being like an old low here, or this low over here, or if there was a fair value gap and something to the left, that would be a scenario like that I would be looking for. Because I'm favoring the likelihood that we'll probe that low, even though we've already went down below. Why am I saying that that's even considered for me? We've already went through this candle's close to low. So that's what the consequent encouragements here, extend that through. We've already went down to it and through it. So all of this choppiness in here, it may be just excuse me, a precursor to an eventual run back down below here. Even if it is to reject and go higher later on, or if it continues to go lower, I still like the idea of looking at this today. So even if we don't do it while I'm here with you today live, barring any kind of breakdown on the dollar index based on the levels I gave you moments ago, I would look for that as a potential afternoon setup. The buy side in here, remember these are relative equal highs. You can see these are closer, but in my opinion, if they're going to bump that high, they'll run through here and tag that. So getting back to what I was saying as a gentleman that I'm assuming it was a gentleman. I apologize if it isn't. There's no telling how you guys identify anymore today. But the fair value gap here, watch this and see if it wants to come back down, touch it, and then springboard from that into the buy side resting above here and here.
It's cause it's old data. So since it's old data in TradingView, I can't like pull them up side by side. So I have to go to bar replay, and then I have to have them both. Cause if I had them simultaneously, like that's what I normally do if it's live. I can't use that data. I can't rewind them both. At the same time.
And if you can run to 36.75 or let's call it 41.37, that would be a 5-handle run. Consequent encouragement now has been reached in this fair value gap. And the benefit of being able to sit and tape read like this is you want to identify the times when the market's most likely going to be choppy, which is what I've already outlined this morning based on everything I've described based on the daily chart, where we are in that range between February 2nd's candle and today. We're just marking time going sideways. So you have to be very specific and nimble on these lower time frame charts. Otherwise, you can get burned. The runs can turn around on you quickly. They can be short-lived, meaning they might go, but as soon as they go wherever they're going to go to, whether it be above an old high or to in balance, once it goes there, it's right back to the middle of the range. Then you're probably asking, well, what do you mean by the middle of the range? Middle of what range? Well, we had a lot of movement between the 830 and here for a 1 minute chart. And we keep gravitating back to about midpoint here. So if you look at the bottom of that old 5 minute fair value gap, which is a teal colored rectangle, use that kind of like as a baseline midpoint. And it just keeps gyrating around that, consolidates here, moves away, comes back to a here, comes back to a here. We moved above it now. So does it stay above the bottom of that 5 minute fair value gap? If it stays above it, as long as it stays above that, we are looking for the market to expand up and attack the buy side, or buy stops resting above here. It does not translate to a signal or a trade. It just means that you're reading price action, which in time, over time, you'll be able to see setups that form. There's no setups here. I've not said here's a setup that this, you're just measuring. I'll tell you if I see something. It'll be very plainly explained to you. This is, I want to see it run from here to here. Right now, this is what it should do. It shouldn't do that. So yes, it would feel a little disjointed if you just started watching these and you're expecting to hear, this is a buy, this is a sell. You're rushing, and I saw a few other people commenting, I see what you're saying and it's happening, but I'm frustrated. I don't know how to see it like that. Well, why would you expect that? You just started sitting down with me. I mean, I just began last week. It's only been about a week. Unrealistic expectations. So already we have 16 minutes of opening range, and nothing really excites me in here. Like, it doesn't really get me interested in anything. Remaining 41.28 or below it keeps us in contention for that sell side liquidity pool at 41.16. It should run at 41.3650. I would expect that now. They left this high here, which falls short of these relative equal highs. So while I have this one annotated, you also on your chart, you want to have that noted here. And you want to watch and study. This is the whole point of watching price action like this. When you're not having a trade on it, you don't care if the outcome is going to be favorable or not. You're watching the candles and you're getting used to have this one annotated. You also on your chart, you want to have that noted here. And you want to watch and study. This is the whole point. Now. They left this high here, which falls short of these relative equal highs. So while I have this one annotated, you also on your chart, you want to have that noted here. And you want to watch and study. This is the whole point of watching price action like this. When you're not having a trade on it, you don't care if the outcome is going to be favorable or not. You're watching the candles and you're getting used to reading that, seeing how they form, what the relationship with the previous candles are, how they're reacting off of an old imbalance, an order block, what's the speed and urgency that it wants to get into this buy side. In my opinion, it's spending too much time. I'll add that level here just so you can see it. Okay, so what I'm looking at is I'm seeing these two highs here and how we repelled away from that. We did not take that low out with this pass here. We did go through consequent encouragement of that wick. So let's play devil's advocate for a moment. What would be a reason or catalyst for an opportunity if there is an entity out there that's dubbed smart money? What would be the benefit of the market going up to this level here, or maybe this high here? It's something you could study is, does it go above these highs, pause, or sharply reject it, and then work down towards these lows here that are now considered relatively equal? So because I think that high here is suspect, meaning that they're probably going to want to probe the liquidity above that. If it were to run above that, the narrative in my mindset would be, okay, if it's going there, I want to see, does it break lower and then seek the liquidity that's classified as sell side down here. Came back and touched that 5 minute fair value gap again here. At this moment is one of those times where I'm like, okay, I got 2-3 minutes it needs to deliver. If it doesn't do it, if I don't have a trade on, I'm saying, because it's done this, I start counting down, it has to do it in the next 2 to 3 minutes. And since these are 1 minute candles, over the scope of the next 2 or 3 candles, it would have to deliver 41.35.75 or higher. Keeping in mind that we are in a choppy condition. We're not looking for trending and trending models that evolved this morning. We're just studying how the market's seeking liquidity, and it's aimless right now. It absolutely has nothing that stands out as a high probability, low risk trade. So if you are pushing the button, you are gambling. See how it's being real fickle about getting up there? It's getting there closer and closer and closer, but it's being real lethargic in the way it wants to get there. Now I want to see it pop. I want to see it just reprint 4136.50, 4136.75. Still below the 35.75 level. I know some of you are like, where's the US 500 chart, Michael? It's confusing for me to keep looking at that chart. I tried. I'm trying to do my best to help all of you. I can't. And if you're looking at US 500, you're looking at my live ES chart live. So you can compare and contrast what you use and relate to them comparatively. They're not going to mark to the same price identified perfectly, but the candle formations are pretty close. So you can track everything I'm doing. Don't be upset with me because I'm trying to do more than I'm reasonably expected.
Wow, look at that. That's a 5-minute imbalance.
So that blue rectangle, which is this fair value gap here, I would prefer to see it hold price, and it's already went outside of it. We're back down to that 5-minute. So now think about this in your journals, in your notes while you're watching this, because we've identified the likelihood of it being choppy, and also you're learning how frustrating it can be if you're looking for an objective, which is why I told you to sit on your hands, because we're in choppy conditions. The market's going to be very fickle. Fickle meaning that it's going to be a little bit of movement that you want to see, then a lot more retracement than you want to endure. Then it moves in your favor again, thinking it's going to deliver what you want it to do, and then it pulls back again, and then it starts to run real close to it, and then what does it do? It fails and wilts. So these are the conditions that I blew accounts with when I was identified the likelihood of it being choppy, and also you're learning how frustrating it can be if you're looking for an objective, which is why I told you to sit on your hands, because we're in so that blue rectangle, which is this fair value gap here, I would prefer to see it hold price, and it's already went outside of it. We're back down to that 5-minute. So now think about this in your journals, in your notes while you're watching this, because we've identified the likelihood of it being choppy. And also, you're learning how frustrating it can be if you're looking for an objective, which is why I told you to sit on your hands, because we're in choppy conditions. The market's going to be very fickle. Fickle meaning that it's going to be a little bit of movement that you want to see, then a lot more retracement than you want to endure. Then it moves in your favor again, thinking it's going to deliver what you want it to do, and then it pulls back again, and then it starts to run real close to it, and then what does it do? It fails and wilts. So these are the conditions that I blew accounts with. When I was trading, before I knew how to trade, I would put real money in these conditions and hold on to these moves and wrestle it, and say, no, I put my trade on. I'm going to get my position filled. It's going to go here. You're not going to scare me out of it, and it would just grind me up. So you have to know by experience, sitting in these market conditions with someone that can identify what they are beforehand and how they're going to trade. Are they going to be aimless, meaning they're just going to chop around and present potential opportunities to the neophyte? They would see something in here and say, oh, this is one of those things ICT talks about, or this other methodology of trading. Dollar looks like it's trying to make a higher high. That was that. Now, if we do press on dollar, let me go over here, look at my chart, I'm sorry. Look at your 15-minute time frame dollar index. We have a high at 104.06. If we clear that and show a lot of animation to the upside on dollar, that's going to push us down into that sell side. We're below this, the fair value gap. Now this becomes a point of which I would look. Please don't take this as a trade, but I would look for this now because we took out this short-term low here. So we have a high, higher high, failed to go to a level I wanted to see it go to. We have a shift in market structure here that's bearish. How do we frame it? We have the fair value gap low here and of animation to the upside on dollar. That's going to push us down into that sell side. We're below this, the fair value gap. Now this becomes a point of which I would look. Please don't take this as a trade, but I would look for this now because we took out this short-term low here. So we have the high, higher high, failed to go to a level I wanted to see it go to. We have a shift in market structure here that's bearish. How do we frame it? We have the fair value gap low here and consequent encouragement. If we are able, and it may not do it, but if we come back up here and touch that fair value gap, or if we don't run off all the way to it, getting down to a rate 1 shot, which it looks like it's going to do now. You guys are dogpiling on it. ICT's destroyed his cards. No, I'm in nothing. But I would like to see it deliver that sell side now. And if it was able to come back up here and touch the bottom of that fair value gap, that would have been better. I would have said that's a short for sell side, and that's where we're at right now. And we did so without dollar making that higher high. So that is a bit concerning in my mind. I got to see how. Yeah, we didn't get the higher high on dollar. Nasdaq, you can look for 12. What is that? 12,532. Let me see. I don't want to give you a wrong number here. 12,540. And then we have the low of the morning at 12,534 and a quarter. Yeah, dollar would have to really spread swings here and go higher for me to feel confident. Otherwise, this run lower on S&P for that sell side we've identified, that might be just them accumulating longs on that sell side and then run for the buy side at 41.3650. And the reason why I'm even considering that as a potential is because we've done no higher high on dollar index as we ran that low out on ES. So while it did go to a full liquidity we were looking for, that in itself might be a setup because it's choppy, it's aimless today. It would have to stay below the constant encouragement of that teal colored fair value gap, 41.28 constant encouragement. Yeah, dollar's not able to sustain this run here, at least for right now it hasn't. So by identifying these types of market profiles, and when I say profile, that's not market profile in the sense that you use that horizontal volume indicator, and you're looking for point of control, and I have no faith in any of that stuff. And I'm not trying to make fun or say anything disparaging about it. That's my opinion, and that's how I view it. Watch the old fair value gap here. This is the time when, if we sell off from that fair value gap on ES, then we should see lift on dollar, and dollar should make a higher high. You want to see it roll right on through the midpoint of this wick. If it's going to go lower, it's going to show you with animation, just rip right through that and show no respect of the midpoint of that gap, or the wick, which is a gap. Dollar's trying. Yeah, here we're going to get a higher high on dollar. We should see this thing. Let's go to 15-minute time frame. All right, so if we lose this low here and start to get animated in larger ranges and start to speed up, and we have a higher dollar, advancement, if we start seeing the 15-minute time frame on dollar index really start to move to the upside and tear through that 104.10, that would set my mind on potentially returning back to that old new week opening gap down here. But we'd have to. Well, we're in striking distance of the dollar making a higher high today, so let's see what we get. Incidentally, I told you y'all yesterday with the British pound, I told you to mark out your fair value gap, and we traded down into it, and then once we got below it, it traded back as a resistance, and that was a nice sell-off for the London session this morning, and broke lower, and still ripping lower. We're below 119.92, 91.90. Euro, similar fashion. I know you've been wanting some ICT goodness in the Forex market, but I've been away from it. You need to go back, ICT. Come on. So you can see how we went down, took the sell side out, and was hanging inside that lower portion of that range. So when you see things like this, it is very rewarding when you know what to expect, and if it's going to be choppy, it saves you all of that mental capital about looking for big runs right away when there's nothing there yet. Where most retail traders, they're going to be all over this thing. They're going to be trying to do something constantly. And wise men tread carefully when it's like this. I'm willing to let go of the first move of the day when it's like this. I don't care, because in my back pocket, I know that if I'm surprised, okay, say something comes out, some event that was unforeseen to me or anyone else that would be speculating, and it causes the market to really move a lot. That's no problem. I know I have the afternoon session that I can participate in, and I'm not worrying about or fearing missing a move. And I'm not forcing the understanding of what the market's going to do right now. That's what I was telling you I was concerned about, because we didn't see that higher high on dollar yet. And we went down to the sell side here, all the way back up to that old 5 minute. That was plugged in here. We plugged the wrong one in. That one, yeah. That one. helper's not that much help this morning. I apologize. I buy him a car for his birthday, and he's slacking already. All right, so we've taken the sell side here. As I mentioned moments ago, I said if they're going to keep it in a range like this, where it's aimless, they could take it down here to the sell side, accumulate longs, and they could be using this area up here as an offset. So in other words, like smart money could be buying the sell stops, waiting for price to go up to the buy side here, and they would offset that, and that would be the morning move for them. Still haven't had a higher high on dollar index. 41.28, if it crosses that on ES, then we're going to look for 41.36.50, 41.36 evens. If it can touch that fair value gap just below it, right in here, the way you test this is if it trades to the top of the fair value gap or the middle point and rejects and goes higher, then it's probably indicating that we're going to see buy side taken out. And buy side is here. Another reason why we have these conditions like this is because the morning move prior to 8:30 and the drive in to that lower low, that was the real move of the morning. That was real easy. That was all back here. We broke through the old new week opening gap, create a fair value gap, and order block, trades up into it, sell off again, and down into sell side liquidity. All right, so we broke through our fair value gap there, and dollar looks like it may expand up into it. Looks like I doubt very seriously if it's going to retrace lower now on dollar. So let's see if we can get a drop off this fair value gap on ES. This feels like a whole lot of uncertainty back and forth. That's exactly what you're observing. Do you want to trade in this environment? That's what you take away from it. And first, like looking at what we see here, look at the range between 8:30, right here. I'll move my mouse around. If you, for those of you that are able to know the answer to this, because I don't know, I was asked by someone, and this is also something I wanted to do as well. I don't know how to highlight my mouse cursor while I'm using OBS, and it may not offer that feature, but if it does, I would love for you to be able to send me a tweet, let me know. I'll see it that way. Don't send me emails because I have, you don't know, that's 76,000 emails. I can't keep up with it. That's why I don't want to share my email address with that. That's not a real efficient way of communicating with me. But look at the range between 8:30 and where we are now. Okay, real sloppy, real choppy. It's real indecisive. Exactly what we were calling for, and we still have not had that dollar index like a higher high. So that to me takes us back to that sell side taken, which we got here. Whose retail mindset would be they sold on the breakout. Okay, trend followers. Okay, if it goes below that old low, I'll be a short seller as a retail trader. That's what their mindset usually typically is. Well, if they're caught short right now, and for them to be in the market short, the counterparty to that would be someone buying their sell stop. Okay, they're selling it to the market to get short. Smart money could be accumulating that as a long. Where would they want to take that ride to? Above the morning high here, and above these relative equal highs here. And what's resting above that? Buy side. So if they bought the sell stops, and there's willing participants that want to buy at a higher price than where we're at right now, what is that? That's the market efficiency paradigm, where smart money accumulates. Their sell stop. Okay, they're selling it to the market to get short. Smart money could be accumulating that as a long. Where would they want to take that ride to? Above the morning high here, and above these relative equal highs here. And what's resting above that? Buy side. So if they bought the sell stops, and there's willing participants that want to buy at a higher price than where we're at right now, what is that? That's the market efficiency paradigm, where smart money accumulates sells, shorts, they come in the marketplace, they're counterparty to. And when the market reprices to buy stops, they will sell to those buy stops. And that's offset distribution. So I would want to see a series of large range up close candles in here, if that is in case what is unfolding here. No trade and no regrets. That's the benefit of having done this exercise for months. You learn patience. You learn to appreciate the fact that you didn't rush in when the market really isn't that clean. Clean meaning the moves are easy to see. You learn to appreciate the fact that you didn't rush in when the market really isn't that clean. clean, meaning the moves are easy to see, the telegraphing. It's obvious what the market really wants to do. You want to focus on trading in those environments, but you can't understand what those are until you sit in environments like this, where it's difficult to read. And don't listen to these 20-year-olds running around saying, oh, this is so easy, I'm doing this. Have them sit here and explain every individual candle if they think it's easy. It's not easy. I'm telling you from 30 years experience, this market right now is extremely difficult. And if you had an educator, whether you paid for them or you're giving your time to them, you would want them to be able to identify problem times in the marketplace where trading is going to be more difficult, more prone for you to fail. And if you can identify those times, wouldn't it be beneficial to you to know not to be participating in those times? And if you're too young to appreciate that, that's a testimony to your infancy as a trader, because that's one of the best skill sets to have, is know when not to do something. That's interesting. Dollar is not supporting that move at all in ES. So that means we're probably going to see a sharp move higher on dollar if we can break to lower lows on ES. ES might be leading it. So you can look at this and say, okay, well, the market keyed off of that 41.34 and a quarter level, which is an old new opening gap low. Failed to go to the buy side. We went to that teal colored old 5-minute fair value gap here, and consequent encroachment. It's respected that. And we're down below here. We failed to touch the fair value gap here. If it would have touched that, I would have mentioned, okay, watch that go down to make a lower low. Dollar index is still not moving to a higher high. Difficult read, folks. Nasdaq's broke its low of the day, but we have not seen a lower low that's formed already from the 830 low in ES. Well, I shouldn't say it like that. We've had this run here. But I would like to see it go through that. And that would be an agreement with the ES and NASDAQ making lower lows then, if it's to do that. But Dow has not supported that recent drop with NASDAQ. So we have a bit of an SMT divergence there. Meaning that if you look at the Dow, you can pull that up on TradingView with symbol YMH2023. And that low on the Dow is higher, like it is here on ES. But NASDAQ, it went lower. And that's the SMT divergence. While dollar index has failed to make a higher high. Meaning we can run back for buy side at that 41.28.
This is low-key a good,
very, very challenging.
Good lecture, good lesson.
For some of you that ask the question a lot, when I share my observations on Twitter, they tend to be the right ones. I'm only commenting on the times when the market's really in my favor to do so, versus if I was trying to call everything, because you're seeing it now when I'm in a live session and I'm telling you we're in a chop. Everything I'm taking and making an observation for you to watch and study. If I did that every time I did a tweet, it wouldn't feel like you feel, because you've only watched me do the high probability conditions with my experience, as I don't delete anything on Twitter and the things I tweet. And I had somebody say, well, it's because you have so many followers now, and when you say something, everybody's dogpiling on it and moving. That's why I was facetiously saying, oh, you're dogpiling on it now. I'm not going to move the market because I said something. That's not going to happen. The market's going to move because it's going to move. And if that was the case, then why isn't the market moving when I said it live here, when I've identified it as a difficult market and we're in chop? Versus when I'm on tweets, I'm tweeting specific things. Watch this, it's going to go here. When it delivers like that, it's because I've only selected to talk about it publicly on Twitter when it favors my side of the trade. When I know I'm probably the highest degree of probability is on my favor, then and only then will I'll commit. That's experience. Here in tape reading, market moving when I said it live here, when I've identified it as a difficult market and we're in chop. Versus when I'm on tweets, I'm tweeting specific things. Watch this, it's going to go here. When it delivers like that, it's because I've only selected to talk about it publicly on Twitter when it favors my side of the trade. When I know I'm probably the highest degree of probability is on my favor, then and only then will I'll commit. That's experience. Here in tape reading, I'm trying to give you a minute by minute, one candle at a time view, and also reminding you that these are conditions that are this, it's chop. The moves are not clean. They're not very specific and precise where you can go in and say, here's a trade, here's a setup, here's a stop, and here's the multiplier for potential profit. So we have that lower low now on ES. We have it in Dow. Everything's moved lower, and now we should see dollar confirm that with a higher high. Hasn't done it yet. And you're probably asking yourself, well, why do you keep doing this? Why do you keep mentioning dollar? Because that is how you ferret out false breaks. Like we've made a lower low here. This still could be, luring traders in as a run lower just to send it back up to that buy side. Have we had follow through on the ES when it moved lower like that? Even though we've had NASDAQ, Dow, and ES now agree with lower lows. There's no SMT divergence between these two lows here. If you look at the relationship between NASDAQ, which is NQ H2023 on TradingView, and the Dow, which is YMH2023, and then ES, which is ES H2023. So that means even though we went lower here, SMT is not the be-all end-all. It's just it's like a qualifier. It confirmed something. It confirmed that lower low, but we're still referring to the dollar index. The dollar index did not make a higher high. I want to see that, but because it hasn't done that, that makes this potentially a false breakout. And why I keep bringing up that buy side is because they could be now making a ripping run up into that 41.36 level. And if I were making the market, I would rip it up there in short fashion. I wouldn't give anybody opportunity to identify it and just roll over top of anyone's short. I would smash through this old fair value gap like it wasn't there. And I would run it right on up in through the old 5-minute fair value gap. Yeah, see dollars coming off its recent short-term high. It's not trying to make a higher high. That is not market symmetry. Market symmetry is where you have everything in agreement. You want to have everything moving in tandem with you. If it's a risk-off scenario, that means that foreign currencies and equities will be moving lower and dollar going higher. If dollar's going lower, it's risk on. You want to see Forex moving higher and equities moving higher while dollar makes lower lows. And that's the symmetry you're looking for. You're constantly measuring market breadth like that. That's the reason why I have all these monitors, because I'm looking at other assets as intermarket relationships and intermarket analysis, where I'm not relying on one individual asset to determine whether or not risk on or risk off is in play. Meaning risk off, dollar's going higher. It's easy to find short sells for index futures and Forex and foreign currencies in those conditions. And you want to learn to think that way when you're trading. If you don't do that now, and you've had problems with understanding bias, understanding high probability conditions and framework, it's because you're not doing what I'm teaching you here. And you hear me referring to it every time I do a live stream because it's important. If it wasn't important, I wouldn't bring it up. But it answers a lot of the questions you see repeatedly asked of me. How do I know? How do I trust? When do I not trust something? When do I think it might be a fake run? It's based on balancing out the delivery of multiple instruments, not just one. Even though I'm especially fond of S&P, and I'm teaching you to trade one market and study one market, which is this one here, you're going to refer to other ones to support or negate the ideas that you're looking at in price. You want to see it really smash through that little teal fair value gap. You want to see it go through consequent encouragement, which is the 41.28 level, rip right through it, and then preferably not even come back and touch the high end as a support. If it did that, that would be my indication and a signature saying that smart money wants that 41.36. Now let me play devil's advocate for a moment. Let's assume that we had a bias that was bullish this morning. Everything being equal, saying that dollar, say, it was predisposed to go lower, and it was delivering lower prices. And we saw this run below the sell side liquidity pool that was identified here. We went through it. As it did that, I would have went long, and I would be adding if it went back down into this fair value gap. And then I would not add any more. I would wait for it to just rip through to 41.36. But because we don't have that condition, we have to observe everything in small incremental pieces. Okay, so we're delivering through 41.28. You want to see this candle come all the way through the top end of that fair value gap. That's preferential. Dollar's weakening here. That's going to provide like gas on a fire for this rally on ES. And where would it run to? Well, we're in the fair value gap here, but it's not something that's all that concerning because we've been here before. This one here, this old fair value gap, is not all that terribly concerning either. It should cut through that like a knife through butter, a hot knife through butter, and go right for this area here where there's real orders. What kind of orders? Buy side. Why would it want to go there? Twofold. Number one, to kill the individuals that are short that use as a stop loss, and to utilize their stop loss as a means to offset distribute the longs that were accumulated down here with the sell side. And it can animate as far as up into here, and if it spreads its wings, we got that old 41.40.25 level, which is consequent encroachment of the previous new week opening gap. And that's how we layer and make strategies around open float. Open float is buy side here, buy side here, buy side here. The apt pupil will notice that that 10-10 level macro coincides with that sell side liquidity pool being engaged. Okay, now here's what I usually facetiously ask in my examples. If you were short, would you feel safe with your stop at 41.36? Watch the volume imbalance in here. It's keying off of that right now, potential support. You think think they're nervous now at 41.36 stops on their shorts. Market's getting ready to take a walk right up there, Strata Chocolata. Dollar's really come off of its intraday high here. Looking at that Dow chart, it just reminds me how much I'm so thankful I never traded. It's so ugly of a market. It's just so spotty and just I don't care for it. But key points, it confirms or negates key turns in the marketplace. Like I use it for S&T, like I mentioned earlier. You can still see turns in the marketplace when you're looking for S&T studies. Like you'll understand that I teach the index S&T divergence, which is typical Dow theory. Lower low in Dow should be lower low in ES and lower low in NASDAQ. That's understandable. That's understand that that's normal Dow theory. But when I look at like the dollar index, even though we may have lower lows, like we've met these lower lows here in ES, you see those also in NASDAQ. You see them also in the Dow. But you can still get these rips higher like this going the other direction. And the way you find them is by looking at them with the dollar index. And the dollar index did not make a higher high as you would expect to see that when they made their lower lows respectively. So that in itself is still SMT. So if you're trying to teach my stuff, make sure you teach it right. All right, so we have this candle here. Why am I picking up this candle here? It's the candle with the highest up close right here. And it's the up close candle prior to the drop lower below this low here. So I'm watching my eyes right on here. I'm going to take this rectangle off. I'm going to take this one and put it right on here. Now I'm studying how price respects or totally disrespects this entire range here. It can go all the way down to the low of that. It's better that it doesn't. It would be better if it goes just to this fair value gap, because this is a potential bullish breaker. So you refine that with this range that shows a fair value gap. You want to see it accumulate a long position in here if it was going to go up to the buy side. Excuse me. And spell in case you heard. Okay, that's probably not the best contrast, is it? Let me see if I can get something better. Yeah, a little bit better. So in this case, like if we're assuming that the buy side is going to be targeted and we've dropped back down here, I'm looking at what was done. Where's the damage done? The wicks. So your eye goes to what? Down here. What did they do down here? They ran sell side. Then they ripped it higher, took it above the short-term high here, went above, failed to make our run into this high and into this buy side. So that is lingering. That's a potential still there. Retail will see this drop off as, okay, it's going to keep going lower now. But I'm identifying this candle here as not just a simple resistance turn support because it broke through it. I'm looking at that entire candle's range and then extending it over to the right. And inside that range, I'm looking for any inefficiencies, fair value gap, volume imbalance, something to that effect. Because we have that entire range of that candle to be considered as a bullish breaker, we have to allow for all these wicks, the shadows below the candles. They can stab all the way down to the low of that. But the bulk of the candles are really telling you the story. And what is it showing you so far? It could fail here. Don't let me pump you up into thinking it's a buy. I'm just telling you, look at the candles, how the candles themselves, the bodies are staying inside that fair value gap. The wicks can go outside that all the way down to the low end of that that bullish breaker. But we would want to see the bodies stay inside this range and start to expand higher. I would still favor the upside because think about what we've seen so far since 8:30. This low has been taken here. This low has been taken here. We've only had one buy side run here. So this one didn't take out that high, and this one didn't take out that high. So in my mind, there's a lot more interest that's been not tapped into yet on the buy side. So if we're going to be chopping and range bound, it makes perfect sense to me to see it want to eventually gravitate to that 41.34 1/4 and higher, or 41.36 1/2. time. I only have 1 minute and 30 seconds and then I have to escape. And I apologize, but it's one of those real world things, folks. So I'll say this in the last moments of our live stream here. I would still focus on that buy side as a primary area to monitor price today. If it fails to go to it today, before lunchtime, I would treat that as an afternoon objective, looking for a move between 1:30 and 4 o'clock. Apart from that, I would not be interested in anything right here because we've already probed the low end multiple times. I'd want to see, before I would want to go lower, I'd want to see it at least clean up that area at 41.35.50. That's my personal preference. And hopefully you guys got something out of this. I know it wasn't a whole lot of excitement, but there's rules to this thing and things I'm looking for. There's a logic that repeats. And over time, with me daily, weekly, and months, you'll see that there is certainly something there that's going to communicate differently than your classical retail logic. And I think that's going to be it. So if there's anything that takes place, obviously, you'll have to permit me the benefit of hindsight because I will not be in front of the charts the rest of the day. So I'll try to do my best to give you somewhat of a review later in the afternoon. And I'll review what I did this morning as well on Twitter. So I'll talk to you then. Be safe. Denoting is the
I low-key, I mess with those. Oh, I thought I took a little bit more notes. Final hour macro. Keep on noticing more things. So you have a high resistance signature at the lows. Then we come up to the high of that new week opening gap. Come back, order block, 2 down close candles. Head to buy side. Come back down, new week opening gap. Oh, it's gorgeous. Volume imbalance on the 15-minute chart. Glitch in the matrix. That's low-key like a good, perfect expression. Huh. Yeah, the final hour macro is looking kind of nice. I don't know why I don't do this more often. I look, you kind of enjoy like typing out. I ain't gonna lie. and there's a session commentary, opening session commentary the next day. He's kind of going crazy here. Oh, I was gonna write some notes. Like, this is all the notes that I had. Yo, what's good, Tony? All right, let's get straight to it.
And if the chart is showing up clear. Just wait, no. All right, so you should be seeing a 1-minute chart of the E-mini S&P March delivery contract for 2023. And right here, this candle right here, okay, that candle, the closing price, we're going to annotate that. And then we're going to annotate the very next candle's opening price, which is here. What that's denoting is the distinction between where we closed for the 1 hour break and when we opened back up at 6 o'clock. So it's very little change. In fact, it's only one tick. So while it might not look that important, it goes completely past most people's eyes. But this is a new day gap opening, abbreviated by NDOG. New week opening gap is where we have the difference between where we closed on the previous week's Friday and the new Sunday's opening. New day opening gap is the difference between where we close at 5 p.m. New York local time and where we open at 6 p.m. New York local time. There may be a visual gap or difference between those two price points, something like this, where this is an actual liquidity void. We don't have that here. We see just the closing price, and then the next opening is here. So it's little to unchanged, but it's by one tick difference. Going over here, you can see, look at the bodies are respecting it here. Look at the candle high here. Look at the low on that candle. A lot of sensitivity around there. Look at the close of this candle. Look at the open of this candle. Look at the high of this candle. Look at the high of that candle. Look at the high of that candle. The open and close on that candle. Lots of things occurring right there. So if you scrub forward, and I'm just going to just keep that level in the center of the chart so that we can see when we get to. We're only going to go to about 4 o'clock, and then we'll close it. So here we are at new day opening gap. Okay, right in here. And the only thing I really highlighted here was the 7 o'clock time, where, like, if you trade in Forex, you can trade Forex around 7 o'clock to 9 o'clock in the morning, New York local time. If I suspect, this is where you're supposed to be taking notes, if I suspect that the market's going to be problematic for me, meaning that it's either going to be very hard to read, and I'm expecting that because of some news driver that would come the next day or later in the afternoon, like FOMC, I will adopt the 7 o'clock to 8:30 time window if I want to trade pre-market. So before 8:30 news driver comes.
I accidentally pressed space on the wrong tab.
If I'm very hard to read, problematic in here. And the only thing I really highlighted here was the 7 o'clock time, where, like, if you trade in Forex, you can trade Forex around 7 o'clock to 9 o'clock in the morning, New York local time. If I suspect, this is where you're supposed to be taking notes, if I suspect that the market's going to be problematic for me, meaning that it's either going to be very hard to read, and I'm expecting that because of some news driver that would come the next day or later. In the afternoon, like FOMC, I will adopt the 7 o'clock to 8:30 time window if I want to trade pre-market. So before 8:30 news driver comes, if I see something that I want to participate in, and I think that the news driver at 8:30, what do I mean by news driver? Any kind of report data. some kind of market medium impact or high impact news event that usually gets released around 8:30 New York local time. If I like the market structure that's in play at 7 o'clock going into 8:30, I have no fear of getting in a trade and using the 8:30 hour to roll right into my targets, which is what I showed this morning on Twitter. I went through the preamble of going through why I felt that the dollar index was likely to go higher, why I felt that the foreign currencies were likely to go lower and ES would go lower. I said that Forex and the equities like ES would seek sell side, meaning my bias was bearish. Preamble of going through why I felt the dollar index was likely to go higher, why I felt that the foreign currencies were likely to go lower and ES would go lower. I said that Forex and the equities like ES would seek sell side, meaning my bias was bearish. I prompted you to take a look at your chart for new day opening gap. And for those individuals that are following on Twitter, all you have to do is go back to the time where I tweeted this morning asking if you've done what I've been teaching you to do. You would see the effects of price action here with the new day opening gap. Folks had already had it on their chart and they had been sharing it, and they replied also with what they were showing. So this level here, that's the consequent encroachment of a previous new week opening gap. So right away, if you have just started following me, it's going to feel like, how can I keep up with this? And where do I start? Where do I begin? The easiest answer is this: just show up every day. Okay, just show up every day, and everything will start to make sense over time. Don't demand that it's going to happen for you right away. Don't expect to be able to take trades right away and understand why you're doing it. I'm teaching you how to read price action on a different level. You're going to be looking at it algorithmically. If you don't think that the price is responding to that small little separation between where we close on where we close on 5 p.m. and we open up at 6 p.m., you're in denial. The market ran aggressively right to that. Look at the bodies. Did we wick above it? Yes. Did the body stop at the low of it? Yes. Did the body open at the high of it? Yes. Was there any candle in here that went beyond the new day opening gap? Just the wick, no body. The body tells the story. The wicks do the damage. Market breaks lower, and this is consequent encouragement of the previous week new week opening gap. NWOG is where we use the opening price on Sunday based on the difference between that and the previous week's Friday. They are static price levels. They're not hiding from you. They can't be manipulated after they've been given to you. Everyone sees the same price. It's not Forex where we don't have the same highs and lows. Everybody sees the exact same price. That's the advantage of trading futures. You can't be as manipulated as you would be if you were trading in Forex. For some of you that are kicking and screaming saying, I only want you to talk about Forex, ICT. I've come to learn about you as Forex, and now that I want to do it, you started talking about this. This is a better market. This is where I started. So when I took a step away from Forex, I went right back to my roots, which is this. That's why I told everybody before, if Forex ever became an issue, I know where I live. I can go right back to the commodity markets and futures, index futures, and bonds. Okay, so the things I'm teaching you when it comes to something like this is the same thing that you can apply to Forex. You can do the same thing with the price action and all the things, but I'm just teaching you very specific things that are directly related to this asset, to this particular market. It's advantageous for you to know these things because no one else knows them. No one else teaches it. How to use it, why it's implemented, what do we use it for, where's the advantage coming by knowing it. And once you have all those facets to this specific vehicle, index futures, it gives you there's no better way of describing it. It's an insider's edge because you're looking at the market way beyond the normal scope of the average investor, the average trader, the average day trader. They don't have these tools. You have them now, and everybody that's going to come to this channel and learn from me on Twitter, you now have seen just in a week how influential these levels are because the algorithm itself, okay, it's repricing back to these levels. It's offering what? Fair value. What is fair value? Fair value is the opportunity for market participants to trade at a level where the algorithm is deeming it not favored enough for enough of a length of time. In other words, it did not trade between a specific price range. You now have seen just in a week how influential these levels are because the algorithm itself, okay, it's repricing back to these levels. It's offering what? Fair value. What is fair value? Fair value is the opportunity for market participants to trade at a level where the algorithm is deeming it not favored enough for enough of a length of time. In other words, it did not trade between a specific price range enough for participants to have the opportunity to trade. Does that mean that the algorithm is being nice to you as a retail trader? Is it being nice to me because we speculate? No, it's not for you. It's for a different class of trader that you're not going to meet. They're not on social media trying to sell courses. They're not doing teaching circuits. They didn't work in a pit. They don't work at Joe Schmo's bank down the end of the street where they can get a mortgage. They don't work at Goldman Sachs. They don't work at UBS. It's a completely different group. Their tools, their reference points are absolutely outside the scope of normal analysis concepts. Yes, it's technical science. Yes, it's highly precise. Do you honestly think they're going to trade and risk billions of dollars on Mickey Mouse analysis concepts? Absolutely not. They don't have trend lines that's diagonal. They don't look at moving average crossovers. There's nothing harmonic. There's nothing Elliott wave. There's no supply and demand. It's very specific, open, high, low, and close. That's it. And time. Time. When did this run occur? Going into what? The 7 o'clock hour. This whole run right here, right to that price point, set the stage for me to trust that I could find a setup before the 9:30 opening. And I had already anticipated that the 9:30 opening and throughout the session today would be lethargic, choppy, range bound. Can you trade in that? Absolutely, you can. I don't prefer to trade in those environments. Can I do it? Yes. Do I want to teach my students that are new to my analysis concepts and or speculation at all to trade in these environments? No. I teach you how to identify them and sit on your hands. It's important to know that because some of you still don't want to listen and you're complaining that you missed your trade based on what I was talking about today. By 2 seconds, you missed your trade, but good session otherwise. I can't like that comment on Twitter because what you're saying is you missed the opportunity to take a trade, which is exactly what I told you not to do. If you're trying to trade and follow along while I'm doing tape reading, you are going to get frustrated because you're going to be thinking I'm saying buy and sell when the only thing I'm teaching you is how to read and interpret what price is doing. In a couple months, you will be asked to push the button on your demo account. You got to let that time and necessity for that part of this development come its way in the natural order of things. But right now, you don't know anything. You have no idea what I'm talking about. You have no idea where I'm going with the lectures. No idea whatsoever. You have to be conditioned to see the things that's going to be repeating over and over again. But I need you to understand that the risks are elevated right now. It's difficult right now. And if you're trying to be proficient as a trader and push yourself in these environments right now, the only thing you're asking is to make it harder than it needs to be. That's what you're doing. So I want you to just keep that in mind when we're going forward with this mentorship this year. When I'm doing the live sessions, I'm giving you my time so that way you can understand the difference between a high probability condition and a low probability condition. Both can be traded, but one has a much better character. Characteristic that it's easy to get in. You can trust where it's going to go. It's immediate gratification. has a much better characteristic that it's easy to get in. You can trust where it's going to go. It's immediate gratification, and it quickly gets your targets, and you can wrap it up and go do whatever you want to do the rest of the day. That's exactly what a trader would want to have. But because you're learning all this other retail stuff, you think that, the lifestyle is you got to be chained in front of the charts all day. You don't. You don't want to have that. You want to get your money, bam, bam, thank you, man. Out the door you go, and join back with the living. You go out and spend time with your family. So because I saw this morning and it started to break down, I was watching the low of the previous week's new week opening gap. Again, I'm going to bring this down real quick. On your charts, you want to have 41.46 even, 41.34 and a quarter, which is this level here. And the difference between those two levels, exactly 50%, is this level right here, 41.40 and a quarter. So when we ran up to new day opening gap here, which again is, for your notes, the closing price at 5 p.m. and then the new opening price at 6 p.m. That hour gap that futures have every single day in the evening time in New York local time. That difference.
All right, so this indicator is accurate. That's good. That's good to know.
Whatever that range difference is, it could be several handles or it could be one tick, just like this. You want to have that annotated on your chart throughout the day. It's a reference point that the algorithm will refer back to. And I'll teach you more about that later on as we go. But it's very easy for me to drown you with all these things, and it's going to feel extremely complicated. And some of you probably already feel like this is just too much. Give me a moving average crossover. That's fine. If that's how you want to look at it, don't come back. But if you really want to know how these markets book, what makes them go up and down, where they stop, turn on a dime, and why they do it, you came to the right place, because you're not going to learn this anywhere else. But that new day opening gap, it ran to that quickly. Would you agree that that was a real quick run up into that? It's occurring at that 7 o'clock hour, New York local time. Your time on your trading view charts while you're with me learning. I don't care what platform you use. You can be using something else. Trade of 8, Ninja Trader, TradeStation, whatever. It doesn't matter. While you're learning, okay, while you're learning with me, you should be implementing TradingView. Do everything you see me doing with TradingView. And yes, it might require you an additional step for transferring what you're doing here in TradingView with your trading platform. I leave that up to you. But it's essential that you do everything you see me and the rest of this group do with this one medium. That way you're never confused. Every candle identification that I present, you'll be able to track it immediately and see what it is that's going on in my commentary and on my analysis. So 7 o'clock in the morning to 8:30. If there's going to be a difficult time in trading, if I think that we're going to consolidate or we're in low probability conditions, that is the green light. Okay, if you want a bat symbol, okay, the bat sign that goes up in the sky at nighttime. If you want the inside track, the little nudge from good old ICT, that means that I'm probably going to be taking something before 8:30. So you were prompted this morning to look for sell side in futures and in Forex. You were prompted to look for higher prices in dollar. I gave you the bias. I gave you the premise of what I was looking for. After I gave that, I engaged in did my own executions. I looked for the market to move away from the new day opening gap, which it did. I waited for it to trade down to the low of the previous week's new week opening gap. If you don't know what I'm saying, just write down the questions you're having, and I promise you, if you go over to Twitter and you ask it, that our community will gladly share the answers with you to bring you up to speed. We're not a bunch of goobers in opening gap, which it did. I waited for it to trade down to the low of the previous week's new week opening gap. If you don't know what I'm saying, just write down the questions you're having, and I promise you, if you go over to Twitter and you ask it, that our community will gladly share the answers with you to bring you up to speed. We're not a bunch of goobers that sit around and are selfish. We want everybody to do well, and we feed off each other's energy. I feed off your energy. So if you have questions, just go over to my Twitter feed, just tweet to me, and people will see it, and they'll respond to you accordingly. If they're an asshole, I'll block them. So if you look, give me 1 second. If you look at the move away from the new week opening gaps low, we had displacement to the downside. As the market moved away from this level, do I need to be up here to get short? No. Did I need to sell short here? No. How about this one here? I could have got institutional order for entry there. Yep, I could have. Didn't do it. How about here? I could have traded back into that. Yep, didn't do it. I waited. I wanted to see it trade back to this key level, which is the previous week's new week opening gap. Then I waited for what? Displacement. I want to see it move sharply away from it. Then, because it did that, what happens? We have a fair value gap right here. So that fair value gap and the last up close candle at the new week opening gap. Which order blocks do you use, ICT? You're learning. There's multiple things about this. It's not just the last up close candle before the drop. That's no, that's not it. It's where you're at when that candle forms. And this new week opening gap, none of you are aware of it until I start teaching it. You're asking for the very specific video, okay? There will be a specific tutorial produced for it, but I want to show you it a few times because every time I put something out new, invariably someone's going to say, this is nonsense. This is cherry picked or whatever. I'm letting you handle this. You're putting your hands all over this, watching it live. It literally just gyrates right back to these levels all the time, but you weren't aware of it. So I'm giving you the chance to have a laboratory experiment on your own, play with the toys, okay, and discover how systematic and routine these things exist over the course of a day and over the course of a trading week. But when we're looking for order blocks, that change in state of delivery, which is what an order block is, it's not the candle. It has absolutely nothing to do with the candle. It has nothing to do with that candle. It's the change in the state of delivery. The market changes the state of delivery right here. Once it starts delivering sell side and you have a fair value gap, your eye goes right back to that opening price. It's going to trade up into the fair value gap. That's where you want to try to take your entry. You allow for the price to trade up to that level because if it does, then you do another entry there as well. If you hold out the trade to the order block and don't put anything on inside the fair value gap, sometimes the order block will not be traded to. The fair value gap will be the only respected level, and then the market will run away without you. And that can be very frustrating because if you demand absolute to the tick precision for all of your executions, you will miss moves. The market sometimes simply will not move exactly where you want it to go, or you'll be so picky about your entry, your limit order won't fill, and it runs away. And then you have to use a lower, closer proximity entry to a price point that's lower than the key ideal entry points like this one here. So the market moves again, small little movement into this candle's high. I like that. Added more. Go back and look at the Twitter example, okay? Because I shared this. I recorded it. It's there. You can see my execution, the whole business. And then we had this fair value gap that formed. What kind of fair value gap is this? SIBI, S-I-B-I. Sell side imbalance, buy side inefficiency. I noted real time. I removed it here for clarity. I wanted to see this remain open. And the market moved lower and attacked the sell side in here. All of this setting up for what? A move going into 8:30. The market consolidates going into the 8:30 hour, and I mentioned that we would see it drop aggressively, sharply, and into the 8:30 news hour. So the news event that came out, I don't even know what the data was. I couldn't tell you to save my life. If you offered me $1 billion cash to tell you what the data said for that report, I couldn't tell you. I don't ever give a shit. I don't care. I just expect the volatility that comes in the marketplace at that time. Once I know I'm looking for a run, then I'm expecting that 8:30 hour. If I know that the day that I'm about to trade is going to be a range-bound consolidation day or just choppy, I'm going to be doing my work between 7 o'clock and 8:30. And once the 8:30 news driver that kicks in and runs to the liquidity I'm looking for and fills my order like you watching the video I shared on Twitter, I'm done. I'm not going to worry about arm wrestling the market the rest of the day. I could care less what it does because my analysis was calling for what? A difficult trading market. So if I'm anticipating a difficult time, why not go in and get my money before everybody else goes into the party? I want to show up, eat the food when it's fresh, leave it, and everybody else comes there and gets the stale bread. And they're wondering why it doesn't taste good. They're working so hard for it. I'm getting in, getting out. That's what you want to do. If you don't want to trade like that, if you want to learn how to participate in the marketplace like that, you can do other things. Go trade somewhere else, learn somebody else's method. There's nothing wrong with that. There's other people that teach methods to make money. But the things that I do, I have to plug my laptop in here. I'm trying to teach you how to be more efficient with your time, more efficient with your risk. Because if you're going to assume risk, you might as well just do it when it's the best time to see markets moving, right? Do you want to just go in there because the trading hours are now active and everybody else showed up? Or do you want to be in there when it's really good? Get it and go. There's my executions. You can't do that with a market replay. So everything there, the logic and everything, you can watch me do that in the recording on Twitter. So then we have after 8:30, the market starts to bang around. Lots of chop and consolidation. And I called every one of these little turns in here and gave you my personal interpretation of every single candle. As it reached down into the lows, I explained to you that everything in here is just seeking new liquidity. There's no trade setups, none. Every time there was an imbalance, I said, now study this one, watch this one, and re-emphasizing that this is not a trade. This is not a setup. This is nothing. I would like to see this happen if I was watching price right now, but watch and see what it does. Do not take the trade. Why? Because I told you at the beginning of the session, it's going to be range bound because I took you to the daily chart and I told you we are inside of a large range. There's nothing definitive about where we're going next. So everything needs to be small little surgical strikes intraday. Hearing that, if you're not wanting to hear that, you're going to have selective hearing. And you're going to want to go in there and see something I'm talking about, and you're going to chase it because you want to make money. You want to pass your funded accounts. You want to get funded, or you want to fix your drawdown, and you're trying to use me to fix your drawdown. I'm not a genie in a bottle, okay? And I'm going to wear this part out a lot, and it's going to piss some of you off. But you're not going to learn if you do that. It's important that you have nothing at risk while you're watching the tape reading. If you do that, this is what I promise is going to happen for you. You're going to see your setup, the one that you understand easy. You will see it, you will know it's forming, and when I comment on it, it will confirm that you see it. And that confirmation over time will train your eye to see it forming. And then when I'm not doing these anymore at the end of the year, probably even before we get to that point, you'll be able to see it live in your charts without ICT making any reference to it. And that's exactly why I'm doing this. I'm not out here trying to be Mr. Right. I'm not trying to be the biggest YouTube streamer or the Mr. Popular. I'm trying to teach you the best way and the way I know works. If you come to me and you're expecting your way of doing it, having it your way mentorship, you're not going to get the results you're looking for. I promise you that's not going to happen. You might be able to chase a move that I might call out, and you think that's learning how to trade. The only thing you did was copycat. I'm not teaching you to copycat me or anyone else. I want you to be independent. So when we're looking at these lows down here, I will counsel you to look at the dollar index, okay? And I'll pull it up in a second. But for now, we were watching these lows, and I was watching the relationship between these lows, between the NASDAQ's lows and the Dow Jones futures contract lows. And there was eventually a divergence between those three averages. And then they all eventually went lower. So all of them agreed on that lower low here, but the dollar index did not. These were all real-time analysis points that I was calling out. I said, okay, now even though we have a lower low formed here on all three major averages, the NQ, the YM, and the ES, they all agreed on that lower low. There was still SMT divergence there because we're looking at the relationship to the dollar index. The dollar index is going to give you risk on, risk off. If the dollar is going to go up, that means it's risk off. That means Forex, foreign currencies, and index futures are going to have more freedom to drop and have a hard time rallying higher. These were all real-time watching these lows, and I was watching the relationship between these lows, between the NASDAQ's lows and the Dow Jones futures contract lows. And there was eventually a divergence between those three averages. And then they all eventually went lower. So all of them agreed on that lower low here, but the dollar index did not. These were all real-time analysis points that I was calling out. I said, okay, now even though we have a lower low formed here on all three major averages, the NQ, the YM, and the ES, they all agreed on that lower low. There was still SMT divergence there because we're looking at the relationship to the dollar index. The dollar index is going to give you risk on, risk off. If the dollar is going to go up, that means it's risk off. That means Forex, foreign currencies, and index futures are going to have more freedom to drop and have a hard time rallying higher. If the dollar index is moving lower, that's risk on. That means that Forex, foreign currencies, and index futures are going to have a very easy freedom to rally higher. And it's going to be very hard for your sell short positions to be profitable. It just won't pan out well for you. It's important to know that because majority of the traders that I have watched and observed and how they trade and what logic they use, they don't ever talk about this. They don't ever mention it. They might use Dow theory, maybe. I haven't seen any, in recent years on YouTube or streaming it. But the relationship between confirmed higher highs, not higher high, higher low market structure. I'm talking about very specific key lows that are forming. We're watching them this morning live as they dug in and made that lower low. I was walking you through it all. Go back and watch the live stream. Go on my YouTube channel, click on the live tab, and watch it. I can't edit it. It's all there. And the things I'm telling you and prompting you to look at, even though my chart stayed on this, you should be having another window where you're toggling to another chart when I'm prompting you to do it. Because you have to have intermarket relationships where they have connection. And then we have intermarket analysis sprung from like a dollar index. Why are we even referring to dollar? Because risk on, risk off. If there's going to be a change in sentiment, usually the dollar index will start showing it to you. If you see the lows forming, we were already worrying about these lows forming down here early. We thought that they were suspect. The dollar index failed to make a higher high. And this is where you need to write your notes. The dollar failed to make a higher high as we made this lower low at 10:12 a.m. So that lower low on the ES and the lower low in NASDAQ and the lower low on Dow futures was not met with a higher high in dollar. That is an SMT divergence. I call that index SMT divergence. Dollar index SMT divergence, rather. A symmetrical market, and this is for your notes as well, a symmetrical market is where if we have lower low, like this, we're not talking about trend. We're talking about very specific relative highs and lows. We have a low and then a lower low. If that lower low is seen in NASDAQ and lower low in the Dow and a higher high in the dollar index, that's a symmetrical market. That's in a perfect world, that's exactly what you want to see. If at any time you see one of those crack in the correlation that I just gave you, it's telling you there's a sentiment shift unfolding. And I walked you through it live this morning. So you have to be able to measure things real time. If you're going to be a day trader and you want to have precision and you want to be trading with an institutional mindset, these are the tools and concepts that they're employing to do it. There's no indicators here. All we're doing is referring to another asset another instrument, and it's price delivery. The reason why this occurs, for some of you that are thinking, well, why does this even work? Because there is a shift in all of these algorithms. The dollar index runs on an algorithm. The ES runs on an algorithm. The Dow runs on an algorithm. The NASDAQ runs on an algorithm. They're all running on an individual, same, but their own individual algorithm. When they're manipulated, that crack is like the signal for, all right, it's time. Now, it largely goes unnoticed by most of the trading community, because if they all noticed it and they felt it was advantageous to be paying
So
attention to
the
it, it would be plastered in every book. It would be in every course.
folks.
Everybody would talk about it on. They're going to do it now because I'm doing it. But when you do these things and you see them, studying them, and you start trading with them, and you've been using them for 3 decades, now it largely goes unnoticed by most of the trading community. Because if they all noticed it and they felt it was advantageous to be paying attention to it, it would be plastered in every book. It would be in every course. Everybody would talk about it on. They're going to do it now because I'm doing it. But when you do these things and you see them, studying them, and you start trading with them, and you've been using them for 3 decades, and know that everybody else doesn't touch on it, it's like a secret weapon. And here's the wonderful thing: it's never going to stop working. So stop worrying about it. Okay. The reason why it's never going to stop working is because the market has to signify it's time for that smart money group to get to work. That's why it's happening. You don't have to believe me. It's never going to stop working is because the market has to signify it's time for that smart money group to get to work. That's why it's happening. You don't have to believe me. I don't care. Save your opinions because you're not convincing me. I'm out here walking out here for real in front of you. I'm telling you how it's happening, real time, on a minute by minute basis. And I'm telling you where I'm getting the information from. So that way you can walk forward with it. Not, oh, it was cherry picked, it only worked that one time. No, you're going to see this stuff work all year long. Every year. I mean, every week, every day that I sit down with you, you're going to see these concepts unfolding in the charts. And you're going to compare and contrast how much time you've wasted looking at other things, insisting that that was the right way of doing it. This was the best way of understanding price. This is the best indicator. This is the best teacher to learn from. All those things, they're going to fall to the wayside. You're going to understand the truth about the marketplace, and I'm showing it to you. Until we got to this point here, where we had that dollar index divergence, I said, okay, now I would expect it to run on the buy stops above these highs here, and then I reach all the way back over to here. And I said, if we got through that, it would go back up to the consequent encroachment of the previous week's new week opening gap. Don't believe me? Go back and watch the live stream. It's all there. While we were down here, I said, I want to see it rip through this fair value gap. I want to see it rip through this high. And then once we got to this high, I said, now watch. This is not me going through the process of looking at classic support and resistance. This is completely diametrically opposed to the logic that is employing. I'm looking at that very candle here, this one right here. I'm gonna put my cursor over top of the candle, okay? Because I don't know how to highlight this. When you see me do my pre-recorded videos, I have the advantage of doing that with Camtasia, which is the screen capturing application I use. And you can get that from techsmith.com, techsmith.com, techsmith.com. And the application is Camtasia. Wonderful resource. You can record your screen with it. But I don't have a way that I know of to highlight my cursor when I'm doing these live streams using OBS. So I apologize. It may be hard for you to track my cursor. But it's this candle right here, this up close candle.
Yo, chat, should I do that?
It's the highest up close bullish candle before the drop down. And why that's important is it's a bullish breaker. The bullish breaker
I
is
appreciate
the
the sub.
low here up to the high and then the lower low. So classic support resistance would say when we trade through this candle's high right here. Let me put a line on it so that way you can see the distinctions here. And I can put this to bed once and for all. All right, see this line right here? That line, if it's broken like it is on this candle right there, the common consensus is if this is broken to the upside, when price comes back down to it right here on that candle, it should act as what? Resistance, broken, turn, support. Well, no. No. What I'm doing is I'm looking inside that up close candle here. Let me move this way out of the way for a second. That green candle right here, the last uppermost green candle, because I'm looking at its closing price, not this one. I'm looking at this one. It has the highest up close. It's inside of the high that's formed between this candle's low and this candle's high. I'm sorry, this candle's low and this candle's low. So a bullish breaker is a swing high that's between two lows, but the most recent low has to go lower because it's taking out sell stops. Then the market rallies higher, trades through it, and then I'm going to look for this signature in price. I'm first looking for the beefiest up close bodied candle. If there is a candle that's large like this one, if you're not careful, you can just say, well, that's the one I'm looking for. No, you got to look for where the highest closing price is in an up close candle. That's this one. That's my bullish breaker. Then you take that entire range from its low up to the high, encapsulate that with your rectangle, and drag that forward. Now, at the time, I was talking about how by itself it means nothing. It just gives you the range as far as how much of a retracement back down. I'm saying that, and I said this live, that it's not that you're breaking above that old high and using it as support now. I'm saying that you need to look at that low and expect price to reach down as far as that. That's still okay. But I took your attention into this little area here, which was the fair value gap, defined by this candle's high and that candle's low. That fair value gap, I said you would see the bodies stay inside that, and that's exactly what we see here. The wicks went beyond it. That's fine. What is it inside of? This fair value gap is inside of what? This breaker. So that entire range extended out in the future. Yes, we went lower. Where did the bodies stop? Right at the bottom of the fair value gap. The wicks can go through that. Remember the analogy I was teaching? When you're cutting the grass in your lawn, you got to be careful not to leave those little mohawks where you didn't line up your mower correctly, and you have to go back and cut them. That's what this is, leaving no mohawks. It's going to overshoot it just a little bit. That's fine. That's not lack of precision. The body stayed inside of that breaker. That's proof of logic. That's proof of concept. That's proof that the market is absolutely being controlled. You're going to tell me that every retail trader and every person that speculated today in the S&P came together and commonly agreed that we won't let the body close outside of the scope of a breaker that some goober on YouTube called ICT created, right? It takes more faith to believe that than to simply accepting the fact that the markets are algorithmic. But okay, whatever. So the market rallies from there and trades up into the pool of liquidity over here, which is what I drew your attention to. I said I had to break at 10:30 because I had to go test drive a Hellcat jailbreak edition, and I'm probably going to take delivery of it. But the buy side above here, we ended up going to that, and as it did that, I tweeted and said, there you go, 31.36.50 was booked, so the buy side was taken. Once we delivered that, we started consolidating. So I'm going to take this level off because I don't want you seeing it as something that's important now because it's not. We go right back to looking at what level. What is this level here? That's the low of the old or previous new week opening gap. So it's hanging around that. It rallies, trades up to what level? What is this? This consequent encroachment of the previous week's new week opening gap. The low of the week, I'm sorry, the low of the new week opening gap of the previous week. This is not this past Sunday's opening price and last Friday. It's the previous week's Sunday opening price and its previous Friday closing price. And the range between the midpoint is this level here, which is consequent encroachment. The market trades randomly right up to that level, stops, retraces, and trades back down to what? The new week opening gap, low. Then the market rallies up, trades right up to what? The previous week's new week opening gap. Where's the body stopping? Inside the boundary that's created by that range. Does it wick through it? Yes. Is that permissible? Yes. Is it showing a lack of precision by doing so? No. It's doing what I'm teaching you. It's doing what it's been coded to do. The market trades lower, back through the consequent encroachment, dives down below new week opening gap. What's resting below here? Sell side. Trades back down into 41.28. Go back and look at the discussion this morning in the live session for 41.28. The market rallies back up. It's gyrating around the previous week's new week opening gap low. Rallies again up to consequent encroachment. Working around the level of what? New day opening gap. Remember the difference between
It's kind of tripping me out. Well, technically, this is a shift to market structure here, but we come back down. We take sell side once more.
Between 5 p.m.'s closing price and 6 p.m.'s opening price, that one tick difference. You may not see anything in here that's of importance, but I see a lot. Look at the gathering around that level, and then it drops down to consequent encouragement between this level and that level. Then it rallies, fair value gap dips down into that, and then there's expansion to the upside. Runs into 41.53.5. Yeah, consolidates. We have relative equal highs now. The market drops back down. Works what level? Previous week's new week opening gap high. Attacks the buy side. 3:30, 3 o'clock, 3:45 right there. Between 3:15 and 3:45, last hour macro, it will run on liquidity that has not been engaged. Meaning, here's 3:15, New York local time, 3:45. That's your last hour trading, the macro. The algorithm will do a spooling. Okay, spooling. Think of it like a I got questioned by a few folks about this. When I say spooling, imagine you're you're holding a fishing pole, okay, and you cast the fishing rod out into the water. When the fishing line is leaving the spool, it's just like it's running, it's dragging out that line. That's what it's going to do. It's going to run out the line like you're standing right here. You're going to cast the fishing pole, and the line keeps going out, and you're aiming forward to drop your lure into this area right above here, because right above here is what buy side liquidity. So you could be a buyer trading down here at some random level, a volume imbalance, order block, buying that at the 15 minute after 3 o'clock and expecting price to start delivering higher. And once it creates this scenario, you are entering into a buy program. A buy program is not a market maker buy model. Okay, I see a couple of students interchangeably using that. That's not what's going on. A buy program is when when an algorithm starts going into buy side delivery, meaning it's going to keep booking price higher and higher. It does not matter. Listen, folks, I don't care how long you've been trading, who you know, what firm you worked with, used to make the markets at so-and-so's, crude oil option market. You're not a market maker, you're a dealer. When you look at the market from the perspective of the algorithm, was what we're seeing here, and I'm bringing it to you every day. When the market starts delivering price higher, it matters not how much buying pressure there is or how much selling pressure it is. It's going to go there, regardless of whether you want it to or not. You could be bearish all you want. Everybody could be screaming about it on the marketplace, sentiment, message boards, forums, Reddit, everybody. It won't matter, because if the market's going to go there, it's going there. And it can do so with low volume, which blows out the whole argument about buying and selling pressure. The market rallies from here and enters a buy program. Buy program is when the market just starts booking higher prices until we get to a pool of liquidity. In this case, it would be buy side here, or a premium inefficiency, which would be an example like this right here, this small little fair value gap. So the difference between this candle's low and this candle's high is a SIBI, sell side imbalance, buy side inefficiency. That's the classification of this particular fair value gap, meaning it only offered sell side, so to be repriced here and enters a buy program. Buy program is when the market just starts booking higher prices until we get to a pool of liquidity. In this case, it would be buy side here, or a premium inefficiency, which would be an example like this right here, this small little fair value gap. So the difference between this candle's low and this candle's high is a SIBI, sell side imbalance, buy side inefficiency. That's the classification of this particular fair value gap, meaning it only offered sell side, so to be repriced correctly and have an efficient fair value offered to the marketplace between this candle's low and this candle's high, it will want to reprice up to it here like it does with up close candles. The market will deliver it on up basis. So it's now offered efficiently through the scope of fair value. It is not rebalanced because correctly fair value gap. So the difference between this candle's low and this candle's high is a SIBI, sell side imbalance, buy side inefficiency. That's the classification of this particular fair value gap, meaning it only offered sell side, so to be repriced correctly and have an efficient fair value offered to the marketplace between this candle's low and this candle's high. It will want to reprice up to it here like it does with up close candles. The market will deliver it on up basis. So it's now offered efficiently through the scope of fair value. It is not rebalanced because it did that. That's not rebalancing. It's repricing. When it leaves this range, then it is balanced. Then it's likely to support price where it doesn't need to go back down there. So that's the only distinction I'm going to make here. Now go back to that low. Once it enters the buy program, you know that it's likely to trade up into here. Why? Because I already explained it this morning. We've already worked lower. I showed you where the smart money shift to bullish, why they're going to be reaching for all this buy side. Everything was explained in that live stream. Go back and listen to it. It would be wasteful for me to do it all again here. Once it starts rallying, every down close candle or series of down close candles, if there's ever a series of down close candles, you use that entire block of down close candles as one, because it's delivery that you're looking at, not just simply one candle. One candle does not make a narrative. One candle doesn't make a order block. It's this change in the state of delivery that is the order block. What do I mean by that? Let's dig into this. 3 down close candles. That opening price right there. That candle's opening price. You're going to look at this value right here, okay? Look up here in the upper left-hand corner where I'm pointing. That's the open. That price is 4145.75. As soon as that price is traded to and one tick above it, that becomes an order block. So young men and young women, please stop making videos pretending you're teaching order blocks because you have no idea what the hell you're talking about. This change in the state of delivery right there, once this occurs on that candle, this opening price becomes fair value. That means that the market, when it trades through it here, it's going to want to do what? Offer smart money, the traders that some of you don't believe exist. And when it comes back down and touches that, they're buying it. When it trades on this candle here and trades and goes down to it again, they're buying it. Their algorithm, which is high frequency, and it's hammering, constantly hammering the market at these price points. They're buying it here, they're buying it here, they're buying it here, and they're buying it here. Every single time we leave a down close candle, they're watching their positions move into profit. Every time that we see a new change in the state of delivery, it's offering them another opportunity to build their position and build it larger. Remember, the focus is over here. This is the draw on liquidity where the market's going to be pulled to. Why? Why should it go up there? Because there's buy side. Another opportunity to build their position and build it larger. Remember, the focus is over here. This is the draw on liquidity where the market's going to be pulled to. Why? Why should it go up there? Because there's buy side up there. Buy stops. Willing buyers to buy at a higher price when it's down here. Think about that. You're not taught to think like that in these books. Everybody writes these books talking about that's resistance. No, that's victims. That's new meat. That's flesh to be devoured. The market is the beast. It will consume the flesh that is dangling off the carcass right above these highs. That's the life essence of these markets. It's going to where the orders are. It has no respect of your pattern. It has no respect of a down close candle that you're foolishly calling an order block when you don't know what you're talking about. It's going to where the actual orders are and inefficiencies. So the market's going to seek liquidity and fair value constantly. It's always this ebb and flow between the two. It's constantly trying to facilitate the most efficient model of delivery for price. That's the life essence of these markets. It's going to where the orders are. It has no respect of your pattern. It has no respect of a down close candle that you're foolishly calling an order block when you don't know what you're talking about. It's going to where the actual orders are and inefficiencies. So the market's going to seek liquidity and fair value constantly. It's always this ebb and flow between the two. It's constantly trying to facilitate. facilitate the most efficient model of delivery for price. That's the function of these price engines. It's doing that. It has no awareness how many contracts are being bought or sold. It has absolutely none. It doesn't even know how many contracts are resting above that. It just knows that once it does this and it stops here and pulls away, every trader is going to do the same thing. It's called priming. Priming is doing something with the expectation that the audience, viewer, or participant will begin to expect a specific outcome. Once that's done, once that hook is sunk in, it's over. The market goes down. When this pass here occurs, traders are going to look at that and say, oh, it's going to take out that low. They want to be short. Selling, selling, selling. Smart money's buying, buying, buying. Changing the state of delivery. Buy, 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 buy. Boom. Displacement. We're taking out a short-term high right here. Now, think. I just walked you through as close as I freaking can without getting in my own personal trouble here. This becomes the 2022 model. Think. Low, lower low. Sell side's taken. We're inside that time window between 15 minutes after 3 to 45 minutes after 3. So that closing hour, final hour of trading, you're going to see a macro run to the liquidity that has not been engaged. That's this over here within the context of a bullish market, which I gave you this morning. Change in state of delivery. Buy, 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 buy. Displacement. Shift in market structure bullish. This is where I've been telling you to buy. This is where I buy. This is where I buy. That's where smart money engages. They're in early. How do you know to get in early? Because I know. I'm teaching you how to get in where it's obvious to see it. Isn't that obvious now? That's exactly what I taught you in the 2022 model. Shift in market structure. After liquidity is taken, bias is bullish. We have liquidity. Aim for it. Buy in this fair value gap. Okay. Don't trail the stop loss up real tight. I teach you that in the model. You got to get first profit before you ever roll your stop to anything considered break even or close to that. So are you stopped out here? No. You might be a little unsettled because you're new. That's normal. Market rallies, comes back into another fair value gap here, trades into it, rallies. 2 down closed candles. We trade through it here. That becomes an order block. It's a change in the state of delivery. It's delivering now, buy side. The next candle opens here. What is that? It's a volume imbalance. It opens here, expected to trade back down. Just to close that gap to that opening price? No. Trade into this candle, that opening price. Trades into it, smart money will buy there. What happens after that? Rallies. It does not rally because smart money bought. It does not rally because smart money has more buying pressure. It rallies because it's rallying. It's designed and it's coded to do so. I don't give a shit who believes me. Rallies up, and we've priced rather handsomely above the relative equal highs here. Okay, so we see again another final trading day, final hour trading macro between 3:15, 3:45. What's actually occurring there? I know some of you are asking, what makes that macro? What's the deal with that? It's a function that will make the most sense for some of you when you think that the market's bullish and we had a big bull day and it runs up, makes a high of the day, and then usually this time of day the market will pull off the highs and close near the high, but not at the high.
Wait, I just realized when I was doing my annotations, I was doing MOC. Okay.
But if you're in a time when the market's trying to press out of a consolidation, which is what I outlined this morning on the daily chart, we're in this range bound. Consolidation. So the market's going to start probing outside those boundaries. I tipped you off on the side it's going to reach for this morning because it had already tried multiple times to go lower, and it's caught traders doing what? Selling short. Watch the live stream. It's all in my dialogue. Your focus was to look up all day, especially in the last part of the day. So here we are. We're up here. And by knowing what you're trading in terms of direction, and then you focus on specific times of the day where I'm teaching these macros exist, the 15-minute mark to 45 minutes after 3 o'clock New York local time, that macro is market on close It means it's going to cause a price run as we get in towards the end of the day. If you do not have a clear setup and it's not obvious, you do nothing. You don't do anything, and you just wait for 20 minutes to 15 minutes before 4 o'clock, and then you'll get some kind of a 5 to 8, maybe sometimes 10 handle run. That's how I trade the last final hour trading. It's so systematic, it's so generic, it's so boring, but for a trader that's looking for continuity, something that repeats over and over and over again, it's hard to beat it. Like, it's really difficult to find something that would be easier. Even though it sounds too scientific, it sounds like there's a whole lot of conjecture here. If you've been with me for a number of months, you hear me saying the same things, and you see your chart printing exactly what I taught you it's going to do, because it's coded to do that. You're not going to convince anyone in this group that this isn't algorithmic, that it's absolutely controlled, because they've been witnessing, they've handled it, they've seen it. And I know it's jarring to some people that maybe work in the financial realm here in trading, and maybe you're at a brokerage firm, maybe you're at a quote-unquote bank, maybe you're at a trading institution, okay, something to that effect, and you only know what they trained you to perceive price as. So you're indoctrinated. I'm on the other side. I've been where you're at. I'm on the other side. I'm telling you how these markets are booking, and I'm proving it daily with every single 1 minute candle. If it wasn't algorithmic and I didn't know what the hell I was talking about, it wouldn't work, would it? If it ain't that, then I figured out the code of buying and selling pressure, right? It's ridiculous. It's not that. It's not that at all. And when people just simply relax and disarm themselves and just warm up to the idea that this is a benefit. If the market is rigged, which it is, there's no reason to fear that. But you should fear over trading, over leveraging, pushing a mythical edge that you think exists with retail stuff. Because when you make money, it has nothing to do with you doing something right with a pattern. You just happen to be on side at that time and use proper money management. The money management is what made most people profitable, not the actual trading. Because if you sit down with most retail traders, even the ones that do really well, and well means they make a lot of money, not just making their ends meet, they make a lot of money. If they're honest, you're at a quote-unquote bank, maybe you're at a trading institution. Even though it sounds too scientific, it sounds run. That's how I trade the last final hour trading part of the day. So here we are, we're up here. And by knowing what you're trading in terms of direction, and then you focus on specific times of the day where I'm teaching these macros exist, the 15-minute mark to outside those boundaries, I tipped you off on the side it's going to reach for this morning because it had already tried multiple times to go lower, and it's caught traders doing what? Selling short. Watch the live stream. It's all in my dialogue. Your focus was to look up all day, especially in the last part of the day. So here we are, we're up here. And by knowing what you're trading in terms of direction, and then you focus on specific times of the day where I'm teaching these macros exist. The 15-minute mark to 45 minutes after 3 o'clock New York local time, that macro is market on close. It means it's going to cause a price run as we get in towards the end of the day. If you do not have a clear setup and it's not obvious, you do nothing. You don't do anything, and you just wait for 20 minutes to 15 minutes before 4 o'clock, and then you'll get some kind of a 5 to 8, maybe sometimes 10 handle run. That's how I trade the last final hour trading. So do anything, and you just wait for 20 minutes to 15 minutes before 4 o'clock, and then you'll get some kind of a 5 to 8, maybe sometimes 10 handle run. That's how I trade the last final hour trading. It's so systematic, it's so generic, it's so boring, but for a trader that's looking for continuity, something that repeats over and over and over again, it's hard to beat it. Like, it's really difficult to find something that would be easier. Even though it sounds too scientific, it sounds like there's a whole lot of conjecture here. If you've been with me for a number of months, you hear me saying the same things, and you see your chart printing exactly what I taught you it's going to do, because it's coded to do that. You're not going to convince anyone in this group that this isn't algorithmic, that it's absolutely controlled, because they've been witnessing, they've handled it, they've seen it. And I know it's jarring to some people that maybe work in the financial realm here in trading, and maybe you're at a brokerage firm, maybe you're at a quote-unquote bank, maybe you're at a trading institution, okay, something to that effect, and you only know what they trained you to perceive price as. So you're indoctrinated. I'm on the other side. I've been where you're at. I'm on the other side. I'm telling you how these markets are booking. I'm proving it daily with every single 1 minute candle. If it wasn't algorithmic and I didn't know what I was talking about, it wouldn't work, would it? If it ain't that, then I figured out the code of buying and selling pressure, right? It's ridiculous. It's not that. It's not that at all. And when people just simply relax and disarm themselves and just warm up to the idea that this is a benefit. If the market is rigged, which it is, there's no reason to fear that. But you should fear over trading, over leveraging, pushing a mythical edge that you think exists with retail stuff. Because Because when you make money, it has nothing to do with you doing something right with a pattern. You just happen to be on side at that time and use proper money management. The money management is what made most people profitable, not the actual trading. Because if you sit down with most retail traders, even the ones that do really well, and well means they make a lot of money, not just making their ends meet, they make a lot of money. They're honest, they'll tell you that their strike rate's really low. And it sounds shocking to the average person, to a lay audience member. They're like, there's no way you're making all that money and your strike rate is that low. Surely your strike rate has to be extremely high. No, the money management does all the heavy lifting. They know how to cut losers. They know how to lose. They know how to take the losses and not go nuts about it. And they let their runs run. So they can afford to trade with a low strike rate. I'm not happy with a low strike rate. And I don't want my students to satisfy themselves with a low strike rate. I want you to know when to do certain things, when to avoid trading, when to anticipate when it's going to be hard. Because if you know when it's going to be hard, you won't be inclined to do what? Overtrade, over leverage, push it when you take a loss, try to get it back real quick. You wait. And it gives you peace of mind. It gives you absolute control over the trader, where most of you don't. Have that. You're reckless. I was reckless as a 20-year-old. I did all these things foolishly too. But once you know what it is you're looking for, how you're going to engage it, what procedures and processes do you go through while doing it, and also knowing when to pull the plug. When do you turn the charts off and walk away? That's what this mentorship is. It's not buy here, sell here, stop here, target here, partial here. No. No. I've already taught that. That's already on my YouTube channel. This is the part that none of you want to go through, but this is the part that's required for you to do it well. You can get lucky doing my stuff. You happen to be on side at that moment, but not understanding why you're on side. On side meaning that you're on the right direction of the marketplace. And if you look for certain things I teach, invariably you might get lucky once in a while. But you want to know that you know that you know. And that's what I'm trying to teach you. I'm teaching you how to perceive price in its most opportune time and avoiding it when it's not in those conditions. You can study it, but don't touch it. It's going to hurt you. It's like that hot pan. You walked in the kitchen. You don't know how long that hot pan's been sitting there. Has it been cooled off for a long time? You don't know. So what do? You walk over and you get your hand real close to it because you're an adult. You don't want to get burned. You're going to feel, is there any weight or heat waves coming off that? Because you don't want to touch and get burned. But as a child, what did you do when you came in there? Oh, look at this. Grab, burnt. And that's what all of you are doing when you're rushing to get these funded accounts, when you're rushing to trade with live accounts, when you're even rushing into a demo. And you're fortifying toxic thinking and fear when you don't need to be fearful of trading. You don't need to be fearful of it. You need to respect the risks. But don't be fearful of being wrong. Those instances where you're wrong, that's where you're going to learn the most. But you're trying to avoid those instances. Which is doing what? Deferring any real learning.
Wow, this is some sauce. I sounded a little bit sus when I said that.
Wow. didn't think about it like I did you. You have to grow through some adversity and fear. Well, I feel, is there any weight or heat waves coming off that? Because you don't want to touch and get burned. But as a child, what did you do when you came in there? Oh, look at this. Grab, burnt. And that's what all of you are doing when you're rushing to get these funded accounts, when you're rushing to trade with live accounts, when you're even rushing into a demo. And you're fortifying toxic thinking and fear when you don't need to be fearful of trading. You don't need to be fearful of it. You need to respect the risks. But don't be fearful of being wrong. Those instances where you're wrong, that's where you're going to learn the most. But you're trying to avoid those instances, which is doing what? Deferring any real learning. Wow, didn't think about it like that, did you? You have to grow through some adversity, some pain. And that uncertainty that you're trying to avoid, you got to press into that. It's fun once you learn. You're like, wow, I'm not afraid of that anymore. I know what I'm looking for. If it doesn't work here, it's okay. I know it's going to repeat in the future multiple times, more times than I've done it wrong here. That's the proper mindset. But it's hard to fortify that mindset in the beginning when you don't know what the hell you're doing, what you're looking for, why you're doing it. You're just trying to copy something you thought you saw somebody like myself or someone else on social media. This is what we do here. We're trading on fair value gaps. This is what we do here. We trade on order blocks. And you don't really understand what you're doing. So hopefully you will all take advantage of me spending time with you this year and learning how to do this properly. So that way, when we go into 2024, you will be an independently minded trader. You'll know exactly what your model is. You won't be swayed by social media influencers, me included. You won't feel the necessity to come back to my channel. You won't have to support me with ad revenue. You won't have to come back here and ask me any questions because you'll know what it is you're doing. And that's exactly my goal for all of you. So hopefully you learned something from this one. I will be back with you all again tomorrow at the morning session. I'll be live streaming again. And so I'll talk to you then. Be safe.
Oh, I gotta charge my headphones. I haven't charged my headphones in a minute.
Just give me a 5x5 that you should be seeing the risk
I'll
disclaimer
say
and
this
my
guy with
reaction.
his
Good.
throat. I kind of feel bad for him.
I apologize. Stupid thing wouldn't connect. ES chart.
Whoa. All right. I don't know. My mouse just doesn't feel right. Why does it do that pointer? Oh, I messed it up. I messed it up. I messed it up. What's your PC setup? I actually have 4 monitors, but I only use 3. which is like kind of crazy. I thought I was gonna use four, but I can't get the fourth one hooked up. So I have three monitors. I have like one, two, three, and that's what I use. I have my stream, so I can see my stream on my right one, and I have this middle one for like the charts, and then usually I have a journal up on the left one. So I think it's a little bit excessive, but oh, are you kidding, bro? I had the standard deviation wrong. Oh no, it is wrong. It is right. It is right. It is right. Actually, I haven't been trading on a live account at all. I haven't. I haven't even been trading on a live account. The reason for that being is because, I mean, I just know that I'm not ready, and I'm just giving it time. I'm just giving it time, you know. You're live how many hours a day? I try to do like 12 or like 11 and a half, but it probably won't be that every single day. That's what I try to aim for, honestly. Oh, this is nice on the 2 minute. Within the 12:15 macro. Got you. I'll definitely be live like overnight. I'll definitely be live in the morning for market open. Oh. Oh, and that previous gap right there. Okay. I think that's good. Some clean price action. Well, not in this morning. I need to do my notes. What should you do? I would look into Inner Circle Trader ICT. I mean, a lot of people don't like him, but I think he's the best mentor out there for sure. If you actually listen. And also, I would say just number one, don't worry about the money. Don't focus on the money if you actually want to do this. Everything you see is fake, or most of the stuff that you see is fake. And try not to have too big of expectations for yourself. 100%. That's the thing that I came in and I had big expectations I was gonna make money, when that's false. I would say so. I think he's it's his concepts that he's kind of made a way for. And there's definitely validity behind them. Yeah, I'm focused on the 2023 mentorship. Right now, I'm just what I've been doing is I'm just going straight up and down through the mentorship. I've kind of went through it once before, but I mean, I took notes and all that, but on there's so much I just wasn't able to grasp on. And honestly, after this pass, I definitely might need to do like another pass through or just revisit some of those good lessons in there. But yeah, I think the second pass through, I'm more focused and dialed in, and I'm like have more of a trying to listen, you know. What are you doing right now? I'm focused. I'm taking notes. Well, I'm writing down my notes. So first, I take my notes, then I go back, and then I like put them into Notion. But honestly, bro, I did a for like core content when I went over that. I like put the notes in an actual journal. So like I wrote them down, and then I wrote them down again into a journal, and then like did drawings with. And I feel like that is something that I should do for the 2023 mentorship. But I'm not gonna do that now. Maybe if I do like another Passover. But we'll see. I mean, honestly, it might be a little bit unnecessary, but I think it's not always a bad thing to overdo your notes. But I did not do that. That is like the. I think that like that is. Oh, that's. All right. That's these notes done, and these are some good notes. It's a good lesson. Hey, I'm chilling. I'm chilling. Good to see you here. Yeah, best of luck to you too. PM. Ooh, I kind of want to do a little PM session tape read. I'm not gonna lie. I was planning on doing for sure market open AM session. I'll be live for that. Now, I don't know. I don't know. I guess we'll see. We'll see. I'll play it by ear. 2023 mentorship's definitely got some sauce. It also depends what you trade. If you trade forex, I mean, although like it does apply, although forex does apply, because it's all price action, you're gonna get the most out of the 2023 mentorship if you trade indices. So if you don't trade indices, you're likely gonna be like, oh, what's this? That's not very good. Yeah, this is all of his old. This is all of the ICT's old tweets. It's in my Discord. It's in for your resources. It's called Quagmire. It's such a good resource. Someone put it in my Discord. I'm grateful. All right, what I kind of want to do is I kind of just want to. Thursday is PPI actually. And notice this consolidation happened after CPI. I mean, CPI wasn't really anything crazy though. NQ didn't really have that big of a. I don't like deleting annotations, bro. I think it's just like sad. London had minute. Ooh, okay. This was not there. There was a nice London high day here. We manipulate in London above new day opening gap above true day here, and we're failing to take buy side liquidity. We're repricing lower. PPI opens up, and then we distribute down to the current new week opening gap. Then within that, we take sell side. Then at 9:30, take sell side again. Displacement at 10. Coming to here, we might leave equal highs. Yeah, we left equal highs, and then we just end up falling out of bed to sell side.
We are looking at. Oh, yeah, we're not. All right, so we should be seeing the ES chart. All right, so I'll walk you through on Twitter because I felt we would see the movement ahead of the opening.
Oh, I do want to look at the previous. Oh, I forgot to go over that. Oh no. Oh my annotations got deleted too. That's cool. Oh, that's pretty close. I saw -3 lines up right with sell side. How do I study? Pretty much go to my own chart and then I do my annotations, my own annotations, and then I write down what I see. Well, I use what he explains, and then I write my own interpretations. Because I feel like you gotta bring your own personality to it, you know. Like yeah, it's cool to have his interpretations, but his interpretations don't have to be all that you do, you know. Like his way of trading isn't even the superior way. I do think it is, but it might not be for my personality.
At 9:30. We're still inside this large consolidation. We have this week's new week opening gap and the consequent encroachment of that level. Previous new week opening gap is up here. Traded through rejection block here. Failure. Broke down below short-term low. We have new day opening gap.
I didn't even look if we had SMT when we displaced. Oh yeah, completely.
Which is here.
Oh, volume imbalance at the new
New
week
day.
opening gap. That becomes a nice draw on liquidity. (2022) model. And a deep discount. You got a breaker with that fair value gap.
New day opening gap. Thank you for making that trend this morning, by the way. NDOG and NWOG was trending on Twitter, which I thought was kind of cool. I almost missed it because I usually don't look at those types of things. But the new day opening gap is the closing price at 5 p.m. and the opening price at 6 p.m. New York local time. So there may be a gap. There may be no separation between bodies or wicks. Either way, you want to have the difference between those two price points and extend that out through the time of the trading day, because the algorithm will reprice back to it multiple times. As you can see, it does here, works around the level here, touches it here, the high end, then moves away from it. So then we drew down into the new week opening gap from the previous week, and consequent encouragement through it. I gave you 41.13 as a draw on liquidity, which would be below that right there. That's what I was using, that low. So now what I'm looking for, because we came all the way down to new week opening gap, consequent encouragement, which is the midpoint between the open and close, respectively, for Friday's close and Sunday's opening price. I'm preparing a lecture, so that way you guys know what it is that you're dealing with these specific areas in price action, because they're algorithmic, okay? And I think just a few days working with them since last week when I first introduced it to the trading community, and know my charter members don't even know anything about it. They learned it just like you did, okay? So a charter member is someone that's been with me for a long time through my private group that I no longer host for new members. There is no future upsell, so please stop listening to people drone on about how I'm making you get all worked up for a future sale. I'm not. In here, watch this area here. So 41.17 and a quarter, it's reasonable to expect if it's going to bounce a little bit in here. That's a reasonable price level too. See, I want to retrace back up into. Not that it needs to, but it would be permissible in my eyes. All right, this dropped down to a 5. And whenever there's it's yesterday's new day opening gap, went right up into a fair value gap between this candle's low and that candle's high. Beautiful delivery there. I'll take that off. So since we've made our way all the way down to new week opening gap, the argument that I like to wrestle with when it does something like this is, my internal dialogue is, are we looking to go below it? Because we've already explored price above it and the previous new week opening gap. And we have repriced significantly lower from that being last week's new week opening gap. That's this level here to here, and the dotted line here is the consequent encouragement or midpoint. And then this week's new week opening gap and its respective midpoint or consequent encouragement. So what I'm looking at is, do we have the interest to see it delve below 4099 and a half? We've already went up into this fair value gap here. Reprice into consequent encouragement. Sell side's below here, so I would want to see it animate large range candles on the downside, trade into like 4098 and see what we get once it trades there. Everybody thinks that it's an easy jump on, get short because of what we've already seen pre-market before 9:30. And it's all on the heels of the news embargo lifting at 8:30. I was probably need to be aware of on Twitter. Now, if you look at where we are right now, price-wise, it's 4100. And regular trading hours, this is the gap between yesterday's trading up here and down here. So what I'm watching now is what we do once we go, now we're below the new week opening gap. Typically what will happen is it'll accumulate here, run back up and start to work inside this gap. So I'm looking for that type of event here. Not that I'm seeing it here. I'm looking for that type of signature. Like I was explaining yesterday, I was outlining the lows, how they were suspect, and I was looking at SMT divergence, and I taught you real time the dollar index failing to make a higher high, while ES was making that lower low, NASDAQ was making the lower low, and Dow was making the lower low. And I called that turning point. I gave you a very specific, we were not lost in price action yesterday. Goobers. We were specifically aiming at that breaker. I was teaching you how to use it, how to frame it, how the candles would respect it. The wicks are allowed to trade outside of it. That's fine. So now think about what we've seen here. The session's opened up. This is all electronic trading so far from the 9:30 opening. Short sellers have sold. And where's their stop loss at? Right here. Right above here. So generally, the chase price, when it's a big move like this down, it's quick to punish those individuals that do that. And you see traders that are real quick to trade in the first couple minutes of trading. I am not a fan of that. I don't like that because this is the usual procedure that takes place. Retail sees it. They say, oh, wow, it's really down so far. Let's go short. So when they go short, the traders that do use a stop are going to do what? They're going to put it right at the highest high it's printing on their chart, which is right here. So what you want to do is, on your chart with TradingView or otherwise, you want to use the high that's formed on the opening range that's formed thus far up to the closing price, and you want to extend that to the right. And you want to use something that's more friendly on the eye because this is a little too much. Okay, so what I'm looking at when I do that, when I drop back into electronic trading, I have that range on my chart for you to see it. So that means all of that could be potentially challenged intraday, digging up into that. I'm not suggesting we're going to go all the way back up there, but at least for the morning session, trading the opening range, which is the first 30 minutes of trading after 9:30, so 9:30 to 10. And there's the buy stop getting tripped on retail after taking out our new week opening gap low down here. So does that sound like we're lost in price action? We're lost in love, okay? We know what we're looking for. So anyway, all through here, we want to see, does price want to go above that? Does it want to explore all of that opening range gap? Because that's what we're referring to this as. When we see a gap at 9:30, the opening range gap is the difference between yesterday's trading close to 9:30's opening price. So opening range gap, for your notes, that's what we're referring to here. That is not new day opening gap. That's not new week opening gap. So now we have this candle here. You want to be watching this. If we have a willingness to want to go above it, that's a breaker. Tongue twister. Because we have this low here, and then a lower low that we went through on our new week opening gaps low. We went down below it, and now we traded back above where I told you the retail buy stops would be. Did you see a depth of market chart shown here? Did I reference any of that? No. We're looking at what the chart's going to tell you. The simple open, high, low, and close. There's no necessity for anything extra. Anything I'm drawing on my chart is just to draw your attention to specific areas in price. That's the only thing I'm annotating for the purpose of that only. I don't have this stuff on my chart, but to articulate what it is I'm referring to, I have to draw these things out so that way it gives you conceptually a visual on where price should return, how it needs to consider other previous ranges, something to that effect. But because we have moved so far from yesterday's close, now we're opening where we are now, the opening range gap, when it's this big, it makes the very first half an hour, 45 minutes, very tricky. So I treat it much like when we have a big range day, like say we have an afternoon session run that just explodes. Yesterday's close, now we're opening where we are now. The opening range gap, when it's this big, it makes the very first half an hour, 45 minutes, very tricky. So I treat it much like when we have a big range day, like say we have an afternoon session run that just explodes, and whether it's going up or down, that matters not. But if there's a big range, a very large range day yesterday, the morning session can be tricky. It can be choppy. It can go back and forth. Take out buy side, take out sell side, take out buy side, take out sell side. And then later on, when's that? It could be right before lunch in New York time, around 11 o'clock or thereabouts. Then it'll start a run that generally goes under the radar of most retail traders. They don't see it when it starts. And then the afternoon will be a better trading opportunity. So what I like to do is I sacrifice this morning session and I lean heavily on the 1:30 to 4 o'clock time period in the day, because if it's going to trade back up inside of this shaded area here that I have in gray, that's a lot of range. I'm not making the case it's going to go all the way back up there, at least not right away. But it's something that the market will likely want to consider revisiting, unless, now this is the only way it would be negated, if we just crashed. I'm not saying we're crashing, but I'm saying if it were to just completely fall out of bed and just find no traction at all and just want to go lower, then this type of range that's shaded in gray would just not even be considered. It would just be a breakaway gap. So we want to look at this fair value gap here. That's the next premium level. That's a little too much, Michael. A order block with a fair value gap. So we want to see, does it have the willingness to want to go above this short-term high? If it does, watch and see how we react inside this fair value gap. If we were to trade up through it and act as support, that would take us back up into the previous week's new week opening gap low. We would aim for something like that. You should not be pressing the button this morning. Some of you already went nuts and got drunk on Twitter this morning based on what I shared. Touching the new week opening gap high. So I'm going to take this shaded area off. You understand on your charts, this is what you should have as a visual reference to the difference between where we were yesterday at close and opening today. Okay, so I'm going to take that off so that it doesn't distract me. Too many things to be looking at. Disorient me. So already, right away, you can see the first 20 minutes or so, it's doing what? Aimless, listless trading. The only thing it's done so far is the two things I told you it would do. Go down, sweep the new week opening gap low, revert back to what? The buy stops above the intraday high, because traders are doing what? They're seeing that it's gapped down. So right away, they're fearful. They're going to miss something, right? I'm afraid. I've got to get in here and do something. And they plunge headlong into the marketplace trying to be short. So they use their due diligence. They want to protect their position, right? They read all the books. They're short, and they put their stop loss in a protective capacity in the form of a buy stop above this high. It gravitated right to that, like I mentioned. We went back down to consequent encroachment, new week opening gap, the new week opening gap's high. And now we're showing the bodies respecting that breaker again. That signature is what you want to see, and we've already seen it. Try to make it 10. I want to see it go through this high here. I'm not interested in the 41.13 level anymore. It's already done its job now, so I'll take that off the chart. That was your draw liquidity for pre-market. So think of that pink area up here as like a magnet, okay? And price, every new tick in price that moves up and down, imagine those being paper clips, okay? And the magnet is sitting right here in the shape of pre-market. So think of that pink area up here as like a magnet, okay? And price, every new tick in price that moves up and down, imagine those being paper clips, okay? And the magnet is sitting right here in the shaded area. So if you throw a bunch of paper clips at a desk where a magnet's sitting, where's the paper clip's going to go? They're going to cluster around the magnet or within its magnetic field. And that's the analogy I like to use when I'm teaching my sons or new students. Much like everything else I've used, I have 1,000 analogies, I know. It's the teacher in me, I can't help myself. But it makes a lot of sense that, if you were watching every new tick fall into the marketplace, okay, every time there's a new tick in price, where price is going is your number one goal right now as a new student. Or if you're a trader that's struggling break even or never made profit because you don't know where price is likely to go and you can't figure it out, you can't ascertain a consistent approach to reading price, which lends well to analysis and trade setups and entry and targets and stops. Before you get into all those details, which is where you think you should be at right now, you need to understand what makes price go where it should go next. It's one thing to talk about it after the fact and look smart, that's fine. You need it and you're learning. Hindsight's essential for the very first steps in understanding anything. But you have to have one primary skill set in the beginning that sets the stage for your continued growth, and that is the understanding and learning of where price should go. Notice I'm saying should. It is not a definite it's going to actually happen all the time, because if I was 100% accurate, I wouldn't trade with a stop loss. I would do full margin, no stops, and just go for broke, right? But because that's impossible, which is where you think you should be at right now, you need to understand what makes price go where it should go next. It's one thing to talk about it after the fact and look smart, that's fine. You need it and you're learning. Hindsight's essential for the very first steps in understanding anything. But you have to have one primary skill set in the beginning that sets the stage for your continued growth, and that is the understanding and learning of where price should go. Notice I'm saying should. It is not a definite it's going to actually happen all the time, because if I was 100% accurate, I wouldn't trade with a stop loss. I would do full margin, no stops, and just go for broke, right? But because that's impossible, it's not realistic to expect that. And there's always this looming potential for a manual intervention where things can just simply go upside down, a black swan event, something that you don't foresee coming out of left field, and then boom, the market just does something that you and everybody else wasn't expecting, and that can harm you. So while we have to respect that measure of underlying risk that's always there in any measure of speculation, whether it be forex, stocks, crypto, or futures here, it should not be paralyzing. There are times when the market just isn't going to be the end of the world, and you can take opportunities and engage them. All right, now look at what we've seen so far. Okay, this is what I'm referring to as being mentored for real, not just reading a book or watching somebody on YouTube, whether it be me or someone else. Understanding why the market will be difficult. When will it be easier? When should you trade before the 9:30 session? When should you wait for the 9:30 session? That's being mentored. I'm teaching you that. I'm literally walking you through it live every day, whether it be Twitter before I started doing live streams last Tuesday, and now I'm doing it both. So I'm giving you a complete immersion in what it's like to be properly mentored. We have buy side resting above here. So if it's going to run through that, what would be reasonable for reach above this area here? Let me draw a line on so you can see it visually, because you're used to seeing that anyway. Lost in price action. Get the hell out of here. All right, so we have buy side. So for folks that have trailed their stop loss, that's short. Give me one second. I gotta make this line obsessive. I'm sorry. So we have buy side here. So what's occurring and why that's even being referred to is the market has dropped pre-market, which we were looking for. We called all that on Twitter. The movement here is a consolidation, and once it started breaking lower, everyone that was fortunate enough to be short, they have rushed their stop loss right above these relative equal highs, because they see this as what? Retail sees that as resistance. So they're going to jam their protective buy stop on their short positions, hoping that it goes to Hades today. And because their stop loss is sitting here, and I explained to you where the retail will be placing their stop here, for those that just watch the opening value and see that it's on CNBC saying it's really down today, blah, blah, blah. So retail's going to do what? They're going to chase and dogpile in on doing what? Short. They want to chase it going lower. So because I'm teaching you, because we had a big event before 9:30, before the opening session at 9:30 and the ringing of the opening bell in the stock market, that sets the stage for what you're seeing here. Choppy, listless price action. It denies them immediate continuation on the downside, and it runs against those individuals that have already been profitable and still hold a position in the marketplace. So open float is the liquidity resting above here.
It has to go
and the imbalance in here, that's not liquidity. That is going to be engineered liquidity later on. So this is inefficiency. So
Hold on, sorry.
and it's really down today, blah, blah, blah. So retail's going to do what? They're going to chase and dogpile in on doing what? Short. They want to chase it going lower. So because I'm teaching you, because we had a big event before 9:30, before the opening session at 9:30 and the ringing of the opening bell in the stock market, that sets the stage for what you're seeing here. Choppy, listless price action. It denies them immediate continuation on the downside, and it runs against those individuals that have already been profitable and still hold a position in the marketplace. So open float is the liquidity resting above here, and the imbalance in here, that's not liquidity, that is going to be engineered liquidity later on. So this is inefficiency. So you have two things here. Lending for is the liquidity resting above here, and the imbalance in here, that's not liquidity, that is going to be engineered liquidity later on. So this is inefficiency. So you have two things here. Lending for why it should, if it's not going to go lower, and if it doesn't stay in a small range like we see here, where is the money? The money is trailed above the recent highs, which we've seen it run here, with that run here, here, and here. What I'm watching is it was interesting to see it not get above these right here with this little spike up. And we're just hanging around inside that breaker still. So when I'm teaching you like this, I'm telling you where the market's going to be problematic, when it's going to be choppy, when it's going to be range bound. And none of the books I've ever purchased, none of the courses I ever looked at, purchased, was shared with me. All of those things that are available out there, they never really adequately talked about how to avoid these problem areas. They just made excuses for, well, sometimes it's just random price action. It's not random. You can predict when these things are going to occur, which is what you want to learn how to do, because you will learn that these are the very conditions that you blow your account in. You'll get frustrated. You think everything's a turning point. Oh, I was wrong there. Now it's turning the other direction. Oh, I got wrong there too. Reverse is going the other direction. And before you know it, you got 70 trades on for the day. You've blown your account. The commissions end up taking you to a point where you have literally nothing to even start with the next day. And you feel demoralized. Simply because you don't know how to identify where the market's going to be very, very uncooperative. Touching the new week opening gap high again. For those of you that don't follow me on Twitter, the satisfaction of everyone that was following me on Twitter this morning, we don't need any further movement today. We've already seen it pre-market through the tweets and identification of the 4113 sell side liquidity pull out tweet this morning. So it's important that you have both. Twitter is my real-time connection to you. Whether you like to be driven nuts all night long while you're sleeping or not, I'm going to tweet. Okay, I'm going to tweet when I have something to say. So usually it's going to be beneficial for you to have that on, or alerts on, before 7 a.m. New York local time. Now, I don't have the fellas that I like to listen to and the young lady I like listening to that live streams. And no, I'm not talking about Patrick Whelan, and no, I'm not talking about Trades by Matt. But there's a few other live streamers I like watching, and I like reading their chat window. When they have their live streams, they have everybody in the chat room part of it, and they're all screaming what they think's going to happen. And I like to look at those things when I see price action doing what I'm teaching you. If I see a heavy hand in the retail perspective using those live streamers' chat rooms, not necessarily anything that the live streamer themselves are saying, but the ones that have a pretty good sizable following. Retail traders, noobs, they tend to be chatty, real chatty. And what they do is they toss their sentiment out into the abyss of the internet. And that's a wonderful asset for someone that knows how to use it, because I'm looking at that and I'm pairing that perspective of someone that's street money, that they have no idea what smart money is. They're looking at something indicator based. And when they're collectively cheering on, oh, it's going to go here, it's going to go there, it's going to go up, we're going to the moon. Whenever I see those emotionally charged statements, and it's almost like they know, it's almost like they absolutely know it's going to go there. When I see that, and I'm looking at a fair value gap or a PD array or a draw on liquidity that would be opposed to that, it's almost like a lead pipe sense trade. It's almost a guarantee that I'm going to be right. And it's not to be viewed as arrogant. Please don't read into what I just said as arrogance. It's just the way things are. It really is just like that. When someone that's new gets involved in this market, or any market, it's a mirror. And if they talk out loud, they're going to share their inside view of what they want to see. They think they're manifesting it. Like, I'm going to manifest my wants and desires, and the universe is going to bend to my will and give it to them. It doesn't work like that. But we can use those things, those sentiment readings, those gauges of sentiment through the lens of a neophyte trader by having these lives. I love the fact that live streamers live stream. I love it. I have 5 of them that I'd use as a wonderful sentiment gauge. Their chat window is the best overbought, oversold indicator you ever have. And I don't need to have it plotted on my chart. I just got to scroll through, toggle through my windows on my browsers and see, okay, where are they at right now? Because if I see something that I think is pretty much a good idea, I'm going to go there and see what are they thinking. And if it's 100% diametrically opposed to what I'm thinking, it's done. I'm in there. I'm in full margin. I'm in it as far as I can push it. I'm going to do it. And that might sound mean, it might sound arrogant. It's not meant to be that way, but that's essentially what you're doing when you're using overbought, oversold indicators. You're trying to weigh the sentiment of people that follow indicators, right? So I don't have any moral dilemma with that. You can hate me for it if you want, but it's not against the YouTubers themselves. It's the wonderful medium they provide by allowing folks to share their sentiment. So we went back down inside of this fair value gap, touched the consequent encroachment of the new week opening gap. Still listless, still range bound. Nothing stands out as obvious. Nothing's a clear trade. Nothing here that gets me excited about wanting to do anything. We're not lost in price action. We're just waiting for an obvious tip of the hand by the marketplace. And right now, it's just chopping people up. Everything that looks like a trade, they're going to second guess every time it retraces back to the middle. Middle of what? ICT. The low is formed here and the high here. It's just gravitating back and forth, back and forth. And it's working the upper boundary of the new week opening gap. So if it were to take out the low of the new week opening gap, which is here and below this low with acceleration on the downside, then we might need to go into the 40.89s. But I would have rather seen it take out the buy side before it would do something like that. There's going to be lots of small little fluctuations and movements in these live streams that I'm not interested in. But if you see them as a setup, if you see them that it resonates with you based on the things I've taught, or that you understand about your own exploration and reading the tape real time, don't let me or anyone else discourage you in that pursuit, because I allowed that to happen in my own trading when I was a 20-year-old. I had it figured out earlier than I realized, but I kept tinkering with it. I kept adding things and taking things away and changing things and putting more emphasis on silly things that had nothing to do with what price was doing. So I think right now, if you were to look at what we've seen essentially 33 minutes of trading since 9:30's opening. Sitting with someone that can tell you when it's going to be like this, doesn't it feel empowering? Doesn't it feel empowering to know that you can predict when it's going to be harder than it needs to be for you to push the button? If you're going into the marketplace and you're looking for opportunity and you want these opportunities to present themselves where they run away real quick from your entry and quickly jump to your targets, that's what every trader wants. But unfortunately, most of the time, because you're looking at books or you're chasing the excitement or fear of missing out, FOMO, you see the movement in price action that you weren't a participant in. And you think to yourself, I got to get something of that. I may not have been in the entirety of the move, but I got to get in there and say, yeah, I had some of that, because I can feel like I'm part of the clique on social media when they all say they had it, but they didn't call it beforehand. Okay? That fear of missing out is conquered. It's defeated when you understand when there's times when you shouldn't be doing anything and you're not going to ever second guess it. That's empowerment. That's maturity as a developing student. That's one of the hardest things to overcome as a new trader in development, is keeping up with everybody else on social media. That's not necessary. In fact, it's a problem. Keeping up with the Joneses is an expression we have in the US. And you certainly don't want to be trying to do that as a trader. You shouldn't be trying to keep up with me. You shouldn't be trying to keep up with someone else. And you shouldn't be trying to compare and contrast your results with someone else's, because you don't know where you're going. And you may be looking at someone that has already peaked in their learning and their aptitude. Their skill set may have arrived at the highest point, and you see them in relationship to your present understanding about what it is you see in price. And you may look at that as, I'm not as good as them. And you defeat yourself mentally when you're really designed to be far better than them eventually. So you should never look at someone and grade your prowess or understanding in relationship to them. I didn't do that. I never wanted to be a part of that type of thinking. I've always adopted the mindset that there's nobody that's going to be able to do this better than me. And I just got to give myself the time inside the cocoon where nobody knows me, and then I'll come out and show the world. Do you like my colors? Do you like my wings? I'm being funny, that's all. It's not funny, I see. So here we are meandering around. We went back up and touched that breaker. I want to see it erode all the way through this and get back on the upside of it. Not because I want to be right, not because I want to take a trade, I want to see it move away from the consequent encroachment of the new week opening gap. I would love to hear the internal dialogue of those individuals that have tried pushing the button and it got stopped out or scared and went the other direction all through these first 36 minutes of trading. And here you are, calm, cool, and collected, not worrying about nothing, just chilling, observing, reaping the benefits of new experience, understanding why you should do something, why you shouldn't do something. There's no impulsive tendencies because you have anything risked. There's no monetary attachment to this. You're reading price and you're actually growing better as a trader right now, but you just don't have a measurement to compare it to. A month from now, you're going to see how much you've improved. 3 months from now, you're going to feel like a totally different person. Right now, this feels like, oh, this guy's not talking about a trade, man. Get on with it. Let me go watch so-and-so, Pip Slayer. Let me go watch Market Maven, the Market Murderer. the market marauders,
Pip Slayer.
all these YouTubers out there. I don't even know if there's somebody that has those names. Just know that I'm just pulling names out of the air. I'm not trying to name anybody or name drop, but they want to chase somebody to mimic and take trades on. I want you to know when to do something, when not to do something. But when you know when you want to do it, it's more likely to see it deliver in price, and it's immediate gratification. Not, man, I hope it goes here. Let me go into the chat rooms on this guy's live stream. Hey, does anybody think it's going to go here? Do you think it's a good long? If you're asking what anybody else is thinking about your trade, it's not your trade. That's why I don't like to comment on other people's trades, because I'm not going to manage it for you. And don't make your trades known publicly. Don't do that, because you're inviting feedback that you really don't want. All it's going to do is confuse you, second guess your analysis. You don't believe me? Ask my students that it can be profitable. And then when I talk about what I like, it scares them out of their trade. And when they get out or collapse it or do something entirely different, their trade would pan down, and they're cussing me. We're both right, but they get shaken out of their trade because of their respect for me. And that's why I'm telling you repeatedly in these live streams and in tweets and Twitter spaces when I'm doing those rants and such. Don't let me influence an idea that you have co-signed. Whether it's fruitful and comes to fruition, or if it fails on you, you're going to learn from that. You're going to learn from your failures. So don't let it happen. And you want to be watching price when it's like this. This is how you identify what it's like when you don't want to be in the trade. This is what you get chopped up in. Nobody writes books about this. Nobody makes video courses or chapters in their mentorships that cover this, because they have no idea what the hell they're doing. That's just the way to nail it down in the most simplest terms. They don't know what they're doing. And you see them on their live streams, and they're trading 16, 20, and 40 contracts in a simulator, trying to correct their drawdown to save face. And they're doing it in environments that are not conducive for high probability trading. There's a better way of doing it. I like how we came down to the low end of that fair value gap. I'm sorry, why did I say fair value gap? Bullish breaker here with this low, touch the bottom end of that shaded area. So let's see if we can get a lift up out of that and reprice into this buy side. The outcome, when you're learning to read the tape like this, you are not trying to impose your will. You're observing. Okay, this is what you're supposed to be taking away from this event every time you sit down with me. You don't realize it, but by watching price like this, subconsciously, you're seeing things that will be identified at a later time in future subsequent live streams, where you see me talk about something that repeats, and you're like, I see something here, and then I'm going to mention it, and it's going to make you smile, because you're going to, I saw that before you said it. That's growth. That's progress. But if you're here for the first couple times, and we are all here rather, for the first few times, because I only started on live streaming last Tuesday, but you're going to feel more empowered by doing this without the outcome needing to be favorable for you. I was talking to a well-known trader that has a pretty good following this morning early on, and I mentioned how trading in front of people, and there's the buy side liquidity, by the way. I apologize, I didn't mention as it was going on. We want to see it try to get through and maybe trade up into this area here, which is this imbalance. This to me is a little too shallow. I mean, it's effective enough to run the buy side, but I would expect to see a little bit more pronounced run higher. I'm not trying to call the higher run all day long. I'm just saying I want to see it trade up into this fair value gap. And I'll talk about why that is even useful, and why would we concern ourselves with it once it gets there. Well, there you go, we're there. Consequent encouragement, look for that, which is midpoint in here. The Bob Ross of trading. Mr. Mellow, never surprised. I'm telling you, when it gets boring, you're on the right track. If you're excited and you're all hopped up on goofballs because you're watching price and you can't wait to push the trigger, you're not ready to trade. When you're bored and you're not really interested in the outcome, that's how your trades need to be. They need to be viewed that way, where I don't care if it goes where I want it to go. I'm just following the logic. If you follow the logic repetitively, and you're not swayed by emotions, you're not swayed by greed or fear, you're going to be an exceptional trader. You're going to be so formidable. You're going to be able to find things that the average trader isn't going to be able to. And it's going to feel amazing when you look around and you see what everybody else is doing. They may be profitable, but you're going to be doing things that are light years ahead of everyone else. And it's an enriching experience as a trader. You just feel dialed in. And there's no way really to articulate it except for you have to experience that. And some of you have already experienced it by looking at the things that I've been teaching the last few days. You're seeing it in your own chart, in that epiphany, that moment of, aha, wow, where the veils pull back just a little bit and you take a peek on the other side and you think, these things are not random. These markets are not random. And you can predict them. You can see them. You can anticipate them. So anyway, I was talking to a trader that's pretty well known, and I have respect for it. And they were sharing their concerns about feedback that they receive and such. And one of the things I mentioned to them, and I've mentioned it very publicly to you all as well, the tape reading like this in front of you without a safety net, I don't have any problems with this, because I've already warned extensively not to take it as trade signals, because it's not. Nobody can, I mean, the feds could be sitting here listening. Nothing in here said, buy here, sell here, put your stock here, try to make this much money. We're watching candlesticks paint. That's it. That's all we're doing. That's how I did my mentorship. It's all price action. You're learning how to read price action. It's not trade signals. There's no risk of losing anything. There's no hope to make any profits. It's just learning how to read the chart itself. I leave the viewer, the students themselves, to decide whether or not they have found something on their own by using this information directly or indirectly. And when they choose to go into a live account setting, they've done so without me doing that or inspiring it. Not to the degree where, here, go with this broker or use this, this particular broker to trade with. I don't do that. So it's always paper trading demo, and it relieves me of any financial responsibility. Zero. I have none. Because if you go into a trade and you lose money, you've done it to yourself. It matters not what you've heard me teach in the past. I didn't tell you to get in that trade. And I have a lot of respect for people that trade publicly. Look at the bodies respecting the low of the fair value gap. Now we're back down into this bullish breaker. If we lose it now, if we trade below it, because we have gone up into an area that had my interest this morning, this to me, this running up here into this area here, is much more meaningful. And it is, in some ways, allowing for, if it were to break below this breaker and act as resistance, then we could explore lower lows. But notice when I was giving you the commentary earlier, I would have favored this here, running a buy side and going into this area here, because what would be the mechanics behind that and why it is noteworthy for me? And don't worry, I'll come back to the conversation I was having a moment ago. The buy stops here. If the market trades there and goes up in this area here, we're at a short-term premium. So if we were to lose this bullish breaker, which is shaded here, and trade down below it and act as resistance, that becomes a potential catalyst for lower prices on the day. But notice that it had to trade to a premium. And I'm not saying it's going to go down here, but to me, it would be worthwhile to see this very thing happening here versus just opening at 9:30 and just cascading lower. You follow what I'm saying? Meaning that everyone else just wanted to go short rate from Jump Street right at 9:30. And at 9:30, they gave them that little cookie, made them feel like they were on the right side of the marketplace, and allowing them to put what? Buy stops here. Also, anyone that didn't trailer stop loss here while being short early on, now they have their stop here and here. So there's two pools of liquidity with an imbalance shaded in this area here. So if it were to go lower, okay, it would be better for you to wait if you were trying to go short or looking for a reason to be short. It would be better for you to wait for buy side to be taken out, like it's been done here, and trade up in this inefficiency, and then judge what price is done after that. Has it sold off since it hit that? Yes. Did the breaker respect it? Or I'm sorry, did the price respect that breaker? It has. We're back inside that fair value gap that's shaded in pink. So we would not want to see it show support in this. It's the PD array, which is the breaker itself, this candle here. It's not simply this old high, draw a line out, resistance, broken trend, support. We're looking at how does it react when it gets there. And you're constantly weighing that. Does price respect these PD arrays? And since it's respecting it, you don't want to hold on to the idea, okay, now, if you were thinking about going short, my method teaches you have to see that breaker be broken and then come back up to it and act as what? Then resistance. You can't just simply say, oh, we have a fair value gap. Let's go short here and expect it to go around these relative equal lows. There's a logic that's being taught to you. You have to see certain things to qualify whether or not something should be there. And we have such a large gap from yesterday's close to where we opened this morning. This entire fair value gap, we were at now consequent encouragement of that. It should expand up into the high end of it. And if we run through it, come back down and touch that support, it may act as a catalyst or springboard to take us up into closing in the small little remaining balance of this fair value gap and then up into here, which would be what? The previous week's new week opening gap low. And it would be digging up into the difference between Friday's closing price and where we opened at 9:30. So the other trader I was telling you about, that he calls the market. He's out there, he's showing people what he's doing with his money and how he's risking it and such. And I have a lot of respect for that. Anybody else that's live streaming too, that pushes the button every time we pierce through that fair value gap. So now you want to watch. Does it feel like we're lost in price? I'm just curious. Lost. So we had that tiny little remaining portion there. And yes, we already talked about how one tick is enough. That I'd like to see it run through that pretty quickly, not just tap it. But then we turn back to the old previous week's new opening gap low. And I'm unfortunately having a lot of things on my chart, but I saw somebody posting on Twitter that said, I have too many damn lines on my chart now. You have to do your workspace management a little bit better. One chart, and unfortunately because I'm presenting to you and I'm kind of coaching you through price action, I have to show you where my new week opening gaps are that I feel are pertinent to price right now. But you should not be trying to operate and do all your other analysis and lipsticks like the fair value gap I have here and all the breaker. It's too much. Your eye will not see the things you need to see if you're putting it all in. You can't have a kitchen sink approach just because I have it in my repertoire, in my arsenal. Now you're adopting it as a weapon for you. It doesn't mean throw it on a chart. Have a chart that you refer to with just new day opening gaps, new week opening gaps. That's a separate chart that just shows those only. No other annotations. None. So that way it allows you to toggle through when price is moving around. It allows you to take your attention away from, well, what we have here. I have the bullish breaker, this buy side liquidity relative equal highs, and the city here in the form of this fair value gap and its consequent encouragement. So that's a whole lot of lipstick with this new week opening gap too. So while you're looking at price, it's like looking at cars going by on a street. It's hard to focus. There's always something you need to draw your attention somewhere else. So if you're going to be referring to a conceptual idea that I taught you, and maybe something else outside of what I teach that you like to still use, I don't know what that would be, but whatever it is, you want to have a chart or a template in your platform that you call on just for that purpose. So your chart remains naked, but only provides you that visual of point of reference that you're looking for, like new week opening gaps and new day opening gaps. So you don't want to have too many things in your chart. But unfortunately, to prevent myself from losing track of where I am and doing something and not talk about the right chart, which is what I've done one time already in a previous live stream, I'm learning how to do this. I don't claim to be a good streamer or a good YouTuber, so I'm trying to do my best to get better at it so that way I'm more helpful to you. But because I'm still in my early stages of learning how to do this efficiently as a streamer, unfortunately my chart's gonna have a little bit more lipstick and more things on it than you should. So don't look at this chart thinking, oh, I should have my chart like that. No. And once I have an idea where I see the breaker is, again, I don't have that on my chart. Like it's not there on mine. It's here for you to learn from it. So I can see that low, that high, that lower low. Mine goes right to that. And the candle here, I look at the range, I know the prices, and I write those prices down on a little yellow notepad next to my screens. And I'm referring more to that piece of paper that has my levels on it than I am on a chart with annotations. I'm a numbers guy, not this visual, artistic flair. It's only for your benefit because most of you need it conceptually shown to you on a chart. So let's take a look at what we've covered so far this morning, and then I'll come back and close my discussion about the other trader I was telling you about. So we opened up at 9:30 with a large gap lower. We saw price trade from that opening gap here, small little rally up, drop down into new week opening gap low, setting the stage for buy side to be placed above the short-term high. And then we also see these relative equal highs. So wherever there's a market area that is too smooth, okay, that means lows are relatively the same or highs are relatively the same. That looks like a ceiling, okay? Whenever that's like that, that smooth edge is likely to be made jagged. That means it's going to tear through that, upset that smoothness. We've seen that here. The market came down into our bullish breaker. I mentioned that if it were to go lower, it would need to go through the breaker, come back up and act as resistance. Did it do that? No. It respected the breaker. So now price goes higher. What actually happens after that? This down close candle that trades into the bullish breaker does what? Becomes a bullish order block. That candle's high, 41.14 and a quarter, becomes the low of this candle here, 41.14 and a quarter. So what we're seeing is a bullish breaker supports price, it repels it. Yes. Does this down close candle support price here? Yes. We dig up and through, which is why I said I want to see it trade to the upper end of this pink shaded area. That in itself, from here to the top of that fair value gap there, that's a 5-handle run, just with the logic I showed you there. That's a trade idea. That's a setup that could have been utilized for you as a engagement. Go back into your own charts and log that as an example of watching where it delivers there. I mean, I walked you through it real time when it was there. But this trade down here, when we turn back to the breaker, see, this is what you're familiar with. This is how I teach it on my YouTube channel. Here's the breaker. It needs to leave it and then come back down into it. That's your classic ICT bullish breaker entry. That's a setup. That's a setup. Targeting is consequent encroachment in the high end of the fair value gap. Where's their 5 handles and all that? That's for you to determine and look for that going forward. If it doesn't make any sense to you, for those that are trying to figure out what we're doing here, what's the purpose of all this, you're going to find your own setup. You're going to see it repeat. You're going to see me talk about things that confirm your observations. I may not say in verbatim what you're seeing or expecting in price action, but I'll give you a 30-year experience perspective on something that you have been expecting more insight on, or a confirmation by me. If I see it, I talk about it real time, and you see it, and then all of a sudden now that epiphany happens. You've been confirmed. The thing you're looking for has been now qualified. It's valid. So therefore now you get the confidence to go forward and look for it continuously forming. That becomes your model. I didn't push you into that. I didn't write a chapter in a book or make a particular video series that made you only trade that model. You discovered it organically being here over time, reading real-time price action. That's the best way to learn. It doesn't feel like that if you're new. It feels like we're wasting time, right? You're not wasting any time. You're learning how to engage, decipher, read price action. What is it likely to do next? Where should it go? If you can't see that, you can't see the benefit of, I'm walking you through every individual candle here. It's on a 1-minute chart. What happens if this is a 15-minute chart? It's a whole lot more handles, isn't it? So I give you the 1-minute perspective to prove that even the folks that say, oh, your live stream's got a 30-second delay or 20-second delay, implying that I'm doing something surreptitiously. I'm talking nonstop. There's no other way for me to say something else in another separate live stream. There's no way for me to keep you from receiving what I broadcast on this live stream. If I said it and my mic is on, you're hearing everything I'm saying. There's no alternative view. If I say I think it's going to go here, it's either going there or it doesn't go there. It needs to respect this level and start going here. If it doesn't do that, then there's no algorithm. It's plain, right? Simple. So anyway, we talked about how that trailed stop loss idea on shorts here and here would be the target after it traded down into here. When it was trading right here, I said we want to watch and see. Now, because we hit our objective, the levels I've taught you, which is the new opening gap, the algorithm reprices down there, just like I talked about yesterday when we were not lost in price action. I told you we swept the lows. Now we're going to take it up to the buy side. There was no change in the gears. There was no another different view. We were going higher. I gave you that again right here on a 1-minute basis. Told you it was going to go here, and I'd like to see it sleep here, and then go up into this fair value gap. Did your chart print that? I mean, we're still here live right now. Did your chart do that? I'm quite certain that your chart, no matter what broker you use, shows that same thing unfolding on your charts live. You see it. You've handled it now. There's several 5-handle and now forming potentially a 10-handle run that you've sat here with me. I've given you all the things that you would look for but you're talking too much. Go back and show me what's going on right now. The order block was supported here. Price ran to the top end of the fair value gap. Then we traded back down to what? The low end of this city. So this candle's high, 41.16 even. We trade down to that and one tick lower, which is 41.15.75, one tick lower. Remember when I talked about the wicks? That's what the damage is done. The bodies of the candles are going to be telling you the narrative of the story. We trade back down, dig into what? The low end of the fair value gap, which is this candle specifically right here. Okay, this down close candle. These two consecutive down close candles, while this was a bullish order block here, when there's two of them consecutively, if we trade away from it, you have to refer to that as the order block as well. It's all one consecutive change in the state of delivery. Meaning what? That opening price is going to be highly sensitive. If we are bullish, the market trades down to it here. That's where the damage is done. The bodies of the candles are going to be telling you the narrative, the story. We trade back down, dig into what? The low end of the fair value gap, which is this candle specifically right here. Okay, this down close candle. These two consecutive down close candles, while this was a bullish order block here, when there's two of them consecutively, if we trade away from it, you have to refer to that as the order block as well. It's all one consecutive change in the state of delivery. Meaning what? That opening price is going to be highly sensitive. If we are bullish, the market trades down to it here, and it's coupled with what? The low of the fair value gap I drew your attention to well before it even formed, or not formed, but before it was drawn up into. So this is in itself what? What is this? It's three things. This low trading to this is a low on a fair value gap, while order flow is bullish. It's also an order block, a bullish order block, and it's a mitigation block. What is that? Well, it's the opposite of a breaker. A breaker is where you have a low, high, lower low. And when price comes back down into it, it's typically going to support prices and higher. A mitigation block is where you have a low, high, a higher low, and when it trades back down into that, it'll support price as well, if your narrative is correct. If you're assuming price is bullish, and every other previous thing we've shown here, all these signatures are qualifying what? Bullish order flow. So from here to this high here, that run, 5 handles from a discount to external range liquidity, which would be buy side liquidity right here. Think of this high being the same thing I outlined over here. Someone went short here. I don't care to know how many contracts they are holding. I don't care who it is. If the market dropped, someone chased it. So they're going to place a stop loss above that in the form of what? Buy stops. So you can look at this as an ideal entry as a short-term trader intraday, scalping. You could be a buyer here, and your limit order would be ready to attack candles high. As soon as it went through it here, you have taken profit. Much in the same way, you could be a buyer down here. As soon as this candle hits it, it's scary because you haven't done it before. It's scary because you don't know how to read this stuff live, but you're seeing it can be done. No scared fearing of doing it wrong. You hear me stuttering because I think I'm going to be wrong? No. This is old hat to me, and it will be old hat to you too. And these are hard conditions. I can't wait until this market loosens up a little more. You're going to have a whole lot of fun with me this year. You're really going to miss me in November. Christmas time, you're like, all I want for Christmas is ICT to come back in 2024. Live streaming, please. I don't know. I might stuff your stockings next year too. Depends. Might not be every day like this, but we might do one a week. So here's that next draw on liquidity we're looking for. The small little micro separation between this candle's low and that candle's high. Give me a hell yeah. Watching these candles paint, explaining what they should be doing next. Tweet to me on Twitter, hell yeah, and that will be an encouragement to me today. 5, I'm going to close this one for today. In its direct and specific entries and targets and stops and management and the whole business. And even when I had them right and they were favorable outcomes, invariably someone would complain that they didn't do as well as my results showed, because they don't take every trade because they want to see something qualified to trade. So let me paint the picture for you. Some of you, most of you really want me to do a entry, a stop, a target, manage a stop, and walk you through it. Okay, I understand that. And some of you are thinking, if you would just do that for me, ICT, I could get my funded account. Well, okay, what happens if I did that and I choose not to do it anymore? You're going to hate me because of that, because now you have a funded account that you can't trade, you don't trade. So I'll be a jerk then. So I'm always going to be used as an scapegoat for people that don't have the right mindset. So if I were to do trades in front of you, if I was to get into the trade right in front of you, put a stop loss, manage the position, the whole business, yes, it would be a sugar coma, love fest every day. And then my viewership would probably quadruple in a week because everybody would be coming here doing what I'm doing. But even in those instances, because I've done this before, there are people that are not going to do every single trade that I do. Because if I take it, run into our level here, it's probably random, don't worry about that. Remember, I said I want to see it go through that and do what? Show expansion, speed, and run quickly to 41.34 and quarter. Let's see it do that before 10:45. That'd be nice. But the viewership or audience members that would be watching me, they're going to be scared sometimes, especially if I have a losing trade, which is invariably going to happen. I got one wrong last week on Twitter, and you watched me walk through it and pick it up, and it was fine. No more drawdown. But the problem with someone that's just blindly following a trader's calls or trades themselves and mimicking, they don't have the same experience to know and trust that if I have a losing trade, it doesn't bother me. It's not even a paper cut. It's just, oh, okay, well, I'll get the next one. You as a new student or a new trader, you're not thinking that. You're like, what the hell just happened? They took money out of my account. That's not supposed to happen. We're supposed to be only making money around here. And the unrealistic expectations come winding up in your brain, and you think, okay, I'm scared now. And when the next trade that I or someone else presents, you're not going to take that one because you're scared because you got hurt on the last one. And then that trade becomes a winner. And now you're behind the person you're trying to copy. The results are not the same. And other people are going to say, woohoo, look at us, we're going, we're killing it, let's go. Everybody's making money. It's a party. But that one person or those that are just like that are not on that trade. So they become sour and they take their opinion publicly and they start bitching. Oh, my results are not the same thing as you. You should do this for us. You should do this for me. You shouldn't be taking any losses. Why do you hold on to the trade when you could have potentially turned around on you? You let your stock get fully stopped out and we followed you. See, I offer no opportunity for that. None. If you make money, you earn that money on your own. If you lose money, you own that. You cannot say that was a result of me at all. Nobody ever has a documentation of me telling them, here's where you buy, here's where you sell, here's your stop, take your profits here. None of that. Nope. I'm talking about candles that mean nothing. But the apt pupil will observe these things. And over time, how much time? It's going to be unique to each one of you. I'll have that volume balance right in here. Let me draw down one. The folks that are paying attention and are looking for things that repeat, that they'll learn to trust on their own, they're already formulating a game plan for what they want to do. And when they make the results, whether they be good or bad, I'm reminding you here that those results are yours. They're not mine. While I greatly appreciate folks that do well, get funded accounts, get withdrawals from their funded accounts or their live accounts and such, and they credit me as an influence on their learning, that's wonderful. But I am not the catalyst for that trade. You took that risk on yourself. You presented yourself openly to the market where you had no more control once you entered the trade. So the credit is yours entirely. It's all yours. And the shame and defeat and the regret is solely on you when it doesn't work. That's the number one reason why I don't do it publicly. I don't do it that way because traders that would watch me, if you're new, which is predominantly what everybody would be if they were trying to copy me, they don't have the experience to know why I'm taking the trade. And if I lose, I have the same confidence that I had after that losing trade that I do on my next trade because I know what my stuff will do for me. I have the experience of going through drawdown and coming out of it. You may not. And so you're going to do what? You're going to be reluctant to take that next trade. Or you're going to wait for it to move enough in your favor to be viewed as what? Confirmation. I got a confirmation. It's moved 20 handles already. I'm trusting it now. Let's go long. Let's go ICT. Woohoo! And I'm getting out. Well, what did you do that for? I just got in. And there's people tweeting to me like that when I'm just calling moves. I will never open myself up to that because as soon as I make my trade public and I know that people can copy it, the outcome now is meaningful on an emotional level. Whereas right now, as a trader, I put a trade on. I have no emotional or psychological commitment to the trade. It pans out or it doesn't. It hurts nobody but me. It only favors me. When I talk about price action openly, and I call the tape in front of you live, you all benefit from the same experience, which is no monetary reward, no monetary loss. You're watching price paint, following a logic that I'm teaching you to look for. And everybody that does a trade based on this, you own that, both good or bad. And I told you, don't do it because you're not going to learn properly. You're going to have less of a learning experience as if you didn't do it with a trade on. I don't care if it goes up to 41.34 and a quarter right now. If I had a trade on, I still wouldn't care if it was going to go up to 41.34 and a quarter right now. I would be partialed out twice already. I'm constantly removing the necessity for the emotional attachment to a trade. And some of you that are so new have no understanding by why I don't do what you want me to do, because it would make me an emotional trader then. I don't want to see any of you get hurt, ever. So I teach in a demo. But you're asking me in your infancy as a trader, and through a myopic perspective of what it is like to be a trader, you want me to go out and just show you my entries and my exits and manage all that stuff. And a lot of these people that really want it, they lace it with
Yo.
Get Now Internet and live the chill life. $30 a
It's already been 5 hours. That's crazy. Okay. So it did cut out. All right, let's annotate this puppy, and then on to the next one. He's not. What's the next? What day was this? February 21st. So he doesn't have another lesson until February 21st. That's kind of a longer live. So tomorrow's Friday. So. Boop, boop, boop. Wait, is that Whew. This song is so good. I haven't heard it in a minute. It's by J. Cole. Appreciate it. Appreciate it. Wow. There's an opening range gap. Do you know what it's called? It's probably this by TFO. Um, yeah, it's got to be this one. All right, this indicator's nice. Wow. I wish it could do. I need to. I'm gonna change that one for sure. I wish you could do quadrants. Here, I'm just gonna do like the last 10. Nah, you can't really do that. Was that 15? Was that on NQ? Yeah, it was. Or was it on ES? That 15-minute volume. Oh, I mean, I guess it's here. Volume imbalances. They're kind of. They're pretty significant. Oh my gosh. Oh my gosh. This is perfect. Beautiful. Wow. This is powerful, bro. All right, we just get consolidation. There's got to be some form of SMT. Do you think I'm overcomplicated? I don't think so. I do not think so. I mean, like, anything of value is probably not going to be simple, you know? Like, why do you think people go to college for 4 years? Because it's complicated. I want it to be complicated, honestly, because it's not easy. So not everyone will have it. If it was, if it wasn't complicated, everyone would be good at it. I appreciate the sub. 2022 model. Yeah, on ES we have a 2022 model. Buy side, shifted market structure, fair value gap. Within a new day opening gap. Within new week opening gap, constant encroachment. We're failing to break above it. We're within that 75% of the opening range gap. Then we distribute. Fair value gap right there. Overline with this mitigation. And then boom, we sell off to a new week opening gap. Let's get Tupac. Did we traded these levels? Because we have zero trading at all. We have to. There's no way. Oh no, we haven't. That's just, I'm gonna keep these on the chart. I kind of just want to see. I see. It's probably SMT at those highs. Alright. That was another day in the books. Oh, wait. Alright, so there was like no tweets this day. How many hours you backtest? Depends on the day. Oh, yeah, sorry, but I want to kind of look at this. testing that delivery right there. Old low becomes resistance with that fair value gap. I mean, we kind of had a large range day, so that could explain this consolidation. Plus, it's Friday. What type of news do we have? No news on a Friday after we delivered a big range. What was the week like? Monday, Tuesday high of week. Friday capped the weekly range. Did we hit that daily order block? I feel like we had a daily order block. No, we didn't. We did on ES though. And we took this low here. It's the current price action right now. Kind of had some decent fluctuations already. Alright, so this day really wasn't anything. Did we take this buy side here? We leave smooth edges. Quite underwhelming, honestly. I'm gonna listen to this Twitter space.
You guys give me an audio check. Let me know on Twitter if you can hear me. Awesome. Thank you so much.
What's this one? Oh yeah, then I'm gonna do notes.
Good morning, folks. Good morning. It is a good morning. So welcome back to another Shotgun Saturday with ICT. Today's presentation for February 18th, 2023 is dealing with the topic of the measure of the tape. Now, obviously, when we've been watching the live streams and with my commentary over each individual 1-minute candle's effectiveness of knowing having that on your chart and the influence over price that it holds and how it can gravitate back towards those levels. And I want to touch a little bit about that today and go through as much as I have on my notes. I have slated about 60 minutes. That doesn't mean I'll go for a full 60 minutes. It just means that I have about 60 minutes. So once we're done that, regardless, I must be off by 10 o'clock. So a little bit more time structured. It doesn't mean I'll go for a full 60 minutes. It just means that I have about 60 minutes. So once we're done that,
Bro, this whole
regardless,
2.5
I must be
hours.
off by 10 o'clock. So a little bit more time structured on today. So for your notes, you want to go back and look at the review. And incidentally, I have not been very good about keeping the live streams and the lectures for 2023 mentorship for YouTube collated, in other words, bringing them together in one playlist. So I have done that this morning. And at first glance, it looks like everything is in relatively close order. I think there's a few of them that are out of order, but they're not essential for that to be like that. Most of them have the dates for the presentations anyway. Some of them don't. And you're welcome to send me a tweet. Let me know which one needs to go where. I just did it real quick because I noticed this morning when someone asked about a particular lecture that I've done, I prompted them to go to the 2023 mentorship playlist on my YouTube channel. And now I discovered that I haven't been keeping up with that. So a lot of things going on, and hopefully you'll be able to go to that playlist now and get all the things you maybe have missed. But the review on February 12th of 2023, it's basically giving you my expectation going into the new week, which is always uncertain. Okay, so in your notes, you want to write this down. There's 3 uncertainties that you have to embrace. You have to knowingly, willingly embrace 3 specific uncertainties in the market and in speculation. Number 1, black swan events. A black swan event is something that nobody can expect. No one can time it. It just comes out of nowhere. There's a time or season when it's probably likely, and we've been on a sustained timeline for that. We've been seeing all kinds of different black swan events over the last 3 years or so, and that's basically COVID-related, war-related, all kinds of economic upheaval, and we have one that's looming now with the central bank digital currencies. So that's going to absolutely impact the markets and currency trading. So that's an uncertainty. Okay, that black swan event, that thing that pops out of nowhere that can cause the market to go crashing down or raging higher, depending upon what the driver is or what the event is. The second is we do not, no one knows, I don't know, and you're never going to learn where the new week Sunday price opens. And you never know, for number 3, where the gap opening price at 6 p.m. will be. So the new day opening gap and the new week opening gap and black swans, they are 3 uncertainties that you have to embrace. And the wonderful thing is, with the exception of the first one, the other 2, we don't need to know what they are. But once we have them, it gives us insight, which means sitting on your hands, allowing the tape to give you the storyline. Let the price tell you it. Don't try to guess it. Don't try to forecast where these opening prices are going to be. Now I'm going to teach how we can anticipate sometimes, not all the time, sometimes, where the gap would move in our favor at either the new week opening gap or the new day opening gap. So those lessons are forthcoming as we go deeper into March content. If we look at the review on the 12th of 2023, the 2 scenarios I would have preferred to see, neither of which gave me an outline to work with when we started trading on Sunday. We had a higher gap opening, not by much, and it traded back down into the range that was formed in the last hour or so of trading on Friday, previous Friday, not yesterday. But I mentioned that if we were gap higher, that would send my mindset to looking for the trade higher into imbalances and maybe press into a higher time frame order flow. But I preferred gun to my head, which is always what I do, because I know some of you will invariably listen to what I'm saying and say, he's calling both sides. No, I will go both sides when I have no idea where it's going to go next. But then I co-sign by saying that if I had a gun to my head, this is what I say. So I'm always giving you my opinion, but my opinion is always laced and provided with a disclaimer stating that we're only talking about what I believe may happen, not that I have hard evidence to prove that the bias is going to be this or that. So that way you can see that because of that uncertainty, this is the reason why I don't speculate as much on Sundays anymore. And I don't do a lot of the over the weekend holding of trades anymore because there's too much gap risk. What is gap risk? What we were talking about so far in this presentation. You don't know where we're going to open on Sunday. I don't know. No one knows. It could be an enormous gap difference between Friday's closing price, higher or lower. You have absolutely no way of knowing what that's going to be. And you don't know if it's going to gap severely away from Friday's closing price and then still scream in the direction of the gap opening price. You don't know that. I don't know that. So we have to always see what those opening prices are going to do. Once they give it, sit on your hands and wait. What are we looking for? Continuation or failure and reject and return back into the range that was created by the gap opening price and the previous session closing price. Having these uncertainties in price, many times that uncertainty and fear and anxiety about not knowing what's going to happen at those times leaks into other times where the market is a little bit more predictable. Now I say that loosely because I don't want to convey the idea that you're going to know. You're going to know where price is going to go. No. You're going to have a measured, statistically weighed out, things have been more times like this than not type of scenario, which is why I say the first lesson I teach you as a student is to understand where the market's likely to go into next. What's the potential draw on liquidity? Is it above market price now or is it below market price? Notice that I don't ever say, and my lessons never state that it's absolutely, unequivocally, without a doubt, promised that it's going to go to that level above or below. It's just more likely to do that. Now, more likely is equivalent to you, more likely than not, arriving to your job safely and soundly in the manner you woke up and left your bed when you go to work. The same odds are that in the marketplace, but you don't see it that way because you're placing what? You're placing the emphasis of a monetary reward or loss on the transition between you entering your car and getting to work. No, you don't do that, but you do the same thing with trading though, as you should. You should have a measure of respect, but you don't think about the monetary loss of potentially driving over a nail and getting a flat tire, do you? Or curbing a tire, busting it, getting into an accident because you were looking at ICT tweets and scrolling through a video to hear a certain part that you didn't get to and something happens that causes you to crash. Those things, those uncertainties, are always going to be in the marketplace. But what I'm teaching you to do with the tape reading is allowing you to see the things that are going to be more pertinent to you as a trader. What makes you tick as a trader? We all are studying price delivery. We're all understanding that these concepts have an influence over what price is going to do. But you don't know which one you're going to use for your setup. Some of you are at stages where you can see them perfectly in hindsight when I show them to you, and it makes perfect sense. And you can't see it real time. That's normal. Some of you can't even understand the logic with me showing it to you in hindsight because you're absolutely brand new. And that's normal too. Some of you are now discovering how comfortable it's becoming for you to see real-time 1-minute candles painting and the logic behind where price is going to gravitate towards, that draw or inefficiency that's going to pull price higher or lower. It's not so random anymore. And that is now normal for you. You're all at different stages of your development. And the measure of the tape is going to provide you a different measurement based on the time you've been spending with me and the concepts I teach. But understanding there's 3 primary uncertainties that you cannot absolutely know, and you will never know. And I promise you, I have no secret weapon, no algorithm twist, nothing in Enigma tells me where the opening price is going to be. Nothing. I have absolutely no. I have to submit myself to the will of the marketplace. And once it does whatever it's going to do at these times, then I measure what it is I'm looking for. What is it I'm looking for? I've shown you this week. We traded down to certain levels after a gap lower. I want to see it run buy side. It does. I want to see it run sell side. It does. And those narratives during those live streams that I'm telling you, because we're not lost in price. We're not lost in price. We're not lost in the candlestick jungle. We're waiting for a clear path to a destination that we have already set out for, looking in a direction. This is where we're likely to go, but we have to wait. We have to wait for the market to tell us, okay, now it's done its damage in tricking other traders into thinking it's going to go the opposite direction to that. That's manipulation. That's the thing that we like to wait for after these gaps, after the session open at 9:30, at the 8:30 news embargo when it lifts. We're waiting for those little tricks, those little unfortunate events that the lesser informed speculators are not aware of. And they fall victim because they're using concepts they've learned in books based on breakout strategies. And then, or looking for confirmation after a move has began and they chase price. So in my live sessions, I'm many times drawing on the ideas that you as a retail trader or someone that is not in our community that trades purely on retail logic, how they're going to perceive price at that moment. And the times I'm saying that, I want you to write down your notes. When I say those things, when I'm referring to a retail trader's mindset or a concept that they may see right now, or they're shorting here, or they're bullish here, or if I'm referencing where their stops would be at that moment, and I failed to mention this prior to this now, but I mentioned it in passing in lectures. But when I'm doing a live session and I'm calling real-time candlesticks and where the price is going to go and what it should and shouldn't do, when I mention or reference retail logic or retail stops, at that moment, at that very moment, I want you to think about that wrestling match, that arm wrestling match, that war between the real market maker versus the people that trade on patterns for pattern's sake. The emphasis of believing that price is going to go up. The hopes and fears, the outcomes of billions of dollars. Where's it more likely to follow the logic of some kind of harmonic animal pattern, some kind of Fibonacci ratio, Gartley retracement type thing, a butterfly, crab, shark, all those things? Billions of dollars are going to be weighed in the balances on those gimmicks? Or is it based on real order flow and where existing orders are above or below the marketplace? Clearly, it's the latter. Large institutions, large banks are not trading on harmonic animal themed named patterns. They're not doing that, folks. They're never teaching you what they're really doing. You hear people say, learn how to trade like the banks. They're not teaching you how banks trade. I'm teaching you how banks trade. The logic is proven. It's to the tick precision. It's predictable. It's not something that's ambiguous. We're looking for very specific things to repeat at a specific time of day. And that when that logic shows itself at the same time that some retail logic theory concept pattern, and I'm just going to say pattern because predominantly, and this is my experience when I was learning as a new trader back in 1992, in the first 5 or 6 years of it, most of what I was looking for was a pattern with an indicator to tell me something, when nobody was telling me to look at the things I'm teaching you, which is time and price. I was more concerned about if my Fibonacci was set to the right settings. Was I really in an oversold condition? Because not every one of my indicators would agree that we're oversold yet. I would use this person's book because it just came out. I figured, okay, this is the person that knows something new now because he produced a new book. And it was the same stuff. It was the same things all the time. So when we look at price, we're looking for specific times of the day to produce a specific expectation that we hold over the price. We only are interested if price can go to this level above where we are right now. That's buy side. That means we're bullish. We are not trading yet. We're anticipating the market to give us some kind of tipping of its hand. We're waiting for some kind of algorithmic display in price action that would qualify for now. This is the time when we want to engage. Right now, our attention at that point is interested in seeing it do certain things at a specific time. But once those things occur, what is that? A shift in market structure, a run on stops. That's it. 2 things. That's it. That's it. It's either going to run stops, then we're going to wait for a rejection of that. What happens after that? A breaker. But no. If it runs stops, we're looking for a breaker. But what happens if it hasn't gone down below what would be a breaker yet? We're considering any imbalance prior to that. Oh, well, that seems pretty easy. Yes, what I've been saying all along. But you're trying to bring in commitment traders and ICT stingers and catapults and whiplash patterns and everything else I've ever taught. You're trying to bring everything to it. Think about it. When you get invited to a party, you know your favorite outfits, right? You know what those favorite outfits are, especially the ladies listening. You know that's the one you look like the bomb in. Now, when you get invited to the party, you're scrambling initially. Do I really want to wear this? Do I want to wear this? Do you bring all 5 or 6 of your favorite outfits that you look the bomb in? Of course not. Of course not. You settle in on one. And that's exactly what you're doing as a trader. You're going to settle in on that one pattern, concept, PD array, multiplier, that thing that you're going to use as a trader. That's where you're going to be the bomb in. Now, you look good in all the other outfits, but you have a special affinity for this particular one. And that's the one you want to represent yourself in. Well, as a trader, it's no different. I'm giving you the invitation every day in a live session to come to the party. But you're going to pick out what particular PD array resonates with you. It matters not what anybody else thinks about what you should trade or use as a catalyst for getting into a trade. It matters not what my opinion of my favorite ones are. Many of you ask a lot of times, hey, look, you teach a lot of things, but what's your favorite setup? Because it's going to be easier for me to just cut through all the chaff and go right to what ICT's favorite is. They're all my favorite. They're all my favorite based on whatever the market's doing. I'm plug and play. I've authored these things, so I can pick and choose whatever one I want to use. I can use all of them if I want to, which is what you see me doing when I'm doing pyramid entries. I'm literally using every single one of them that's available at that time during that market move. But not every single PD array is going to exist in every single price run, which is the benefit of understanding them holistically, not just individually, because I could literally write a book 300-400 pages long and not even scratch the surface on one PD array at a time. That's how deep this can be. But it need not be that complicated. It just simply needs to be, which one do you like the most? Which one makes the most sense to you right now? And bloom where you're planted. Don't think that that's the best you can be or where you're ever going to be as a trader. It just means that gives you the first initial foundation to start your growth from, which is really critical as a developing student, because it's too easy to market move. But not every single PD array is going to exist in every single price run, which is the benefit of understanding them holistically, not just individually, because I could literally write a book 300-400 pages long and not even scratch the surface on one PD array at a time. That's how deep this can be. But it need not be that complicated. It just simply needs to be, which one do you like the most? Which one makes the most sense to you right now? And bloom where you're planted. Don't think that that's the best you can be or where you're ever going to be as a trader. It just means that gives you the first initial foundation to start. Your growth from, which is really critical as a developing student, because it's too easy to springboard and bounce around to different teachers, concepts, approaches, all kinds of things, and you'll never learn. You'll never learn that way. You'll be introduced to new things, like a drug. Here, try this one. Here, now try this one. Here, try this one. And you're never really clear-headed and focused on the thing that you're supposed to be looking for right now, which is one specific model that you can start with and build an understanding from and grow as a trader. And I've said it many times, but just for the folks that are wondering, my first pattern that made consistency with me was when I was using an oversold condition on an hourly chart when I thought that the daily and the weekly were going to go up to an old high. That was it. A previous week high or the high in the last 3 days. That was my target. I was using something as simple as a bullish divergence and a slow stochastic, and that's what I was using. But because the market, now this is I want you to understand this, because the market that I was looking at was already predisposed to go higher anyway, and I couldn't articulate it becoming bullish or bearish outside the scope of whatever the slope of a 50-day moving average was being plotted on my daily chart. So I looked at where we are today at the time of my analysis and looked back 9 days. If the slope of that 50-day moving average was higher today than it was 9 days ago, that was my bias. It's stupid. That was dumb, right? Dumb. But the logic was, as long as it's doing that, then I'll buy, especially if the 60-minute or hourly chart was oversold and it diverged bullishly in stochastic. That means it made a lower low in stochastic. I'm sorry, lower low in price hourly. The hourly candles went lower, but the stochastic failed to make a lower low. Then I used that the next day. I would wait for a higher opening because I was downloading end of day data. So I had to wait for the session to open because the commodity markets had session times. And we would see the opening price at the bond market. We would see the opening price in the grain market. We would see the opening price in the S&P, in the currency futures. And I would look for a higher price gap opening. And then if it traded down into the gap halfway, I would buy that. That was my whole model. That was it. And honestly, if you use institutional order flow and higher time frame and you know where it's likely to go, that still works today. What did you just say? What did you just say, ICT? Did you just sin? You just sinned. This is sacrilegious. Look at this. This guy's talking about indicators. No, I'm telling you how it came up. Now, let me tell you how and why it worked. The market was already going higher. I didn't have the experience. I didn't have the wherewithal to know what makes the market continuously bullish. So the deciding factor, which is what every retail trader does with their indicators, their gimmicks, their toys, all these things are just a driver for you. Like when I say gun in my head, that's the gun to the head for a retail trader, because otherwise they have no idea what they're doing. They have to have an instigation, a catalyst, a cause, an abrupt decision-making event. That's what has to happen. And because most traders have really no idea what the hell the market's doing, they rely on something like a pattern, an approach some kind of technique that they learned that they have conveniently subscribed a faith-based logic to when it has nothing to do with what the market's going to do, but it gives them their decision-making moment. This is what I'm going to do and why. But the only difference between that and what I'm teaching all of you as a student is I'm teaching you what really makes the market go up or go down. Not looking at these gimmicks, these toys, these things as the reason for you deciding what to do. Was the fact that the 50-day moving average, when I was trading in the 90s, today's value in the 50-day moving average plotted on a daily chart, if that value was higher than it was 9 days ago, in my mind, that means it's going to keep going up. Well, what do you think happened when I got into a price run that went to a fair value gap that was just below the high I was looking to go to as a target? It would retrace. And it would scare me. And I would jam my stop loss up too tight and I would get stopped out. Or it never got to those levels I wanted to see it go to. It went to a fair value gap that was just below those highs. And I added. And then I fought it as it dropped down. The whole time, that moving average on the daily chart was telling me it's bullish. No, it was bullshit. Okay, that's the equivalent of the bull that it had in it. Because I was looking at something that had absolutely no bearing on where price was going to go next. All it was doing was saying what was obvious anyway if I just looked at the open, high, low, and close. The market's been going up. You don't need a moving average to tell you that. And I don't need, and you don't need an overbought and oversold indicator to tell you if it's overbought. So those things are useful for traders that need to have a catalyst, something to get them into a trade, because they have no understanding about what price is doing. They have an understanding in faith-based logic that these patterns should do this. Now think about what you're saying. This is exactly what I was doing. I was saying that my 9-day moving average difference between on a 50-day moving average, the difference between today's value and 9 days ago is going to tell me if I should trust price going up or down, instead of simply taking that shit off the chart and looking at the price. It was going up. Moving averages only crunch and smooth out what's already happened. Of course it's going to be going up, and you don't need a trend line. But see, what that does is it gives you a focal point to take all of your attention and say, okay, I'm going to look at this thing, this trend line, this moving average, this harmonic pattern, this whatever you want to call it, whatever you want to bring to the discussion of retail logic and trading. That thing, that's your point of interest. That's your decision-making mechanism. If it does this, I'll do that. If it doesn't do this, I'm doing nothing. And the only thing I've been doing is taking your attention off that bullshit and putting it on price itself, because it's going to tell you everything you want to know. You want to know when it's going to reverse? It'll tell you that. You want to know when it's getting ready to explode and move in one direction? It'll tell you that too. You want to know when it's going to be consolidating and hard to trade and can be in choppy conditions? I've proven that it tells you that too. So pray tell, why the fuck would you want to look at anything else? Open, high, low, and close tells you everything. It tells you everything. And you don't need to look outside of it to derive a bias, a narrative, or a trade idea. When we're looking at the new week opening gaps, one of the things I've already mentioned it before, but you need to make sure you have this in your notes. The new week opening gap on trending days or trending weeks where we're going to have a one direction railroad ride away from where we opened up. That new week opening gap is going to be little to no importance. Maybe used one time intra-week and then it just never comes back to it again. I taught you that if we keep going back to it and gravitating to it, that confirms we're going to be in a sustained consolidation. It means the market's not likely to do what? Have these big tear-off runs. I've explained that to you this week beforehand. Before it did what your chart shows right now, I told you that we will be in a consolidation. I took you to the daily chart and I told you, look where we're at, we're in this range. But there was also some qualifying things that helped support that narrative of why I was confident in telling you that. Because we had 2 volume imbalances on the daily chart inside that small little range. You know, the same volume imbalance I told you in the February 12th review on YouTube before the week even opened up. I told you, have them on your chart and extend them through the entirety of the week. I'll touch on that a little bit later in this discussion, but new week opening gap is fair value. It's a static value between the opening price on Sunday and the closing price on Friday and the midpoint of that, which is consequent encroachment. Those 3 specific price levels are going to be very, very sensitive throughout the spectrum of a trading week if it's going to be range bound. So you see people say, I don't do very well in trending markets. And they'll say, I do very, very well in consolidating or consolidating, choppy markets. Okay. And you see other people say, I can't do good in choppy consolidations. I like trending markets. Okay. I have something for all of you. My toys, they play in every market profile, every single one of them, which is why I teach market profiles, not market profile like you think. Market profiles or templates, think of them as schematics on what the market should do conceptually on a line basis. Okay. We're going to talk about that too. Because the market tends to do these types of things with a greater sense of repetitiveness and transparency. It many times telegraphs it's going to be doing these very things, and you simply have to align your expectations and then wait for the time of day of week for it to occur. What do you mean by that? That's too ambiguous. It's too vague, Michael. Think about what I gave you in my analysis throughout this week, in the live sessions, in the reviews, and in the pre-market analysis before Sunday even opened. I said that we're going to be likely to see a risk-off scenario. Risk-off means dollar index is higher. All other markets are lower. So if you haven't done this yet in your notes, risk-off, dollar higher, markets lower. Risk-on, dollar lower, markets higher. What do you mean markets higher? Anything other than dollar. Yen, pound, gold, oil, equities, index futures. Notice I didn't say crypto. I don't know, man. Don't ask me about crypto. Okay, I'm clueless. I have no idea. But every other market will be pressured. If you want to talk about buying and selling, pressure that exists between the mechanism between risk on and risk off. If the dollar's going higher, it's going to be very easy for other markets to drop, and your sell models can be trusted. Your institutional order flow when it's bearish can be trusted. Your premium arrays can be trusted. But if the dollar index is consolidating and it's stuck, that's going to be seen in other markets too. It doesn't mean that all markets in that condition will be stagnant and consolidating. It just means that that's the expectation you should hold. But within that, that tells you a story. What is that, Michael? What are you getting at, man? Lean in real close. If we have a range-bound consolidation in dollar index, in Forex, you can look at the relationship between pairs like euro, pound, because the dollar index is being held. It doesn't mean that every foreign exchange market or pair is going to be consolidating. It just means now, when dollar's being held in consolidation, the crosses like euro, pound, Aussie yen, pound yen, those exotic crosses will be manipulated, and you'll see the runs occur in those markets versus the dollar pairs. My techniques work in every market profile. The problem is you're not spending enough time looking at what market profile we are in. And I'm telling you where we're at before we even start trading. Let's go back to the 12th of February. Before the market opened up, I stated that I believe that the dollar is going to go higher. I believe still that the dollar is likely to trade up into those relative equal highs that I have shaded in orange. There's buy side resting up there. Unless we see something completely undermine that expectation this week, I'm holding true to that. The dollar expanded higher interweek. We're not trying to predict the closing price on the week. I'm not trying to teach you or have your focus on knowing where that closing price is on the weekly candle. That's not what your job is, not to do that. Your job is to anticipate the market gravitating towards a direction on that weekly chart, expanding higher on dollar and expanding lower on other markets. But the problem here is within your measuring of that tape that's going to be delivered over the day, over the course of the week, you have to consider also we are stuck in that range on the daily chart. Since essentially the first trading days of February, we're stuck in a range-bound environment. So when I give you that bias that I think is risk off, we're going to see what kind of market profile. Consolidation with Thursday or Friday expansion. Go back and look at the core content. Look at day trading section of the core content. For those that are really versed in keeping good notes with my concepts, or if you're a charter member and you know exactly what lessons and where to find it, what month should they look for the daily and weekly templates, those profiles that I teach in my core content. That's already on my YouTube channel, so you don't have to ask me for it. It's a consolidation week with or Thursday or Friday expansion. Now think about what I've talked to you about on Sunday. Higher dollar, but we're in a consolidation. So you have to wait for something to occur. It's going to be consolidation. Yes. It's going to be choppy. Yes. Is it tradable? Yes, absolutely. I traded. Other people traded. It's fine. But we are considering this big event coming into Tuesday, which was the CPI number. That's interesting, isn't it? Now, You see these folks out here, they're out there constantly running numbers. They're crunching numbers. There's a certain guru, and they're talking about me. There's a certain guru out there that says that when markets make the high of the week or the low of the week, he says it's 70% of the time. It's on a Tuesday. Yeah. Yeah. It's not an every week profile that delivers a bias higher or lower. Sometimes there's weeks where it's expected to do nothing but go sideways. You can't factor that because if you do that, then you skew your output. And numbers, like anything, if you torture them enough, they're going to confess to anything. That's what indicators do. They whip and torture data that's already happened that you can't make money on. And if you tinker with them long enough, the indicator will tell you what you want it to say. And I was victim to that. And that's all these authors ever do. They take something to form fit something that's worked in the chart in the hindsight. They did not do that shit live. Now you see me walking you forward on a 1 minute candle basis, calling every fucking candle exactly how it's going to happen. Now, there's no indicator in that. There's no retail thing that I'm leaning to. I'm talking about the candle that's forming based on the stuff that I talked about on Sunday before the market opens up. We're in range bound. We're expecting a move in the dollar. We're expecting weakness in other markets. But does it happen right from Jump Street? Does it happen, well, it's just going to be a straight decline? No, we have to be navigating through consolidating and choppiness. Looking for areas of what? Fair value. Well, what am I supposed to focus on, Michael? There's two volume imbalances I told you to focus on from the daily chart on ES. Told you to take those levels. In fact, you want to go back through that February 12th, and there's a lot of key levels I talk about. I'll mention them here for those that are lazy. But there's specific ones in there that I talk about, and it basically framed the whole entire week. Now, I leave that for those students when they see me talk about it, they have them on their charts. And then when they watch the end of the week, when it comes to conclusion, and they see, wow, the market did go up to that level. Wow, the market did go down to that level, and it didn't do anything else. That's real harmonic. That's the wave Elliott wants to ride on, right? Want to hang down on that wave. Well, if you go through the market review on the February 12th, you're hearing me talk about how we're expecting, and I'm expecting specifically, the expansion higher on dollar. So that means it's going to be easy to find what? The sharp, big magnitude moves are going to be in what direction in ES? Down. That doesn't mean that you're not going to have rallies that are tradable that look decent when you're on a 1 or 5 minute basis. It's going to look dynamic because you're zeroed in. You only have 3 candles on 1 minute candlestick chart. You're so zoomed in. You got to take some space and crunch it up and put more data on there. But you're going to see that these big sharp declines that we've seen in ES are in concert with what we were expecting on Sunday before the market even opened up. The market's going to gyrate back and forth all day, all week, that's going to happen, yes. But you want to know where there's conditions that's going to present range-bound, difficult times where we don't see these big trending days. Trending days are easy to trade in, and you don't have a whole lot of opportunities to get in. It's just, here's where you got to know to do it, this, and if it starts running after that, it's over. You've missed it. You got to wait now for the next opportunity. But in range-bound consolidations, like we're in right now, you have to be nimble. Pick your shots. When it gets to your levels, you get out. Don't think that we're going to keep on tearing off higher or tearing off lower. It's going to be within a predetermined range. So what's the weekly profile? We'll go back and listen to the 12th of February. I tell you it's going to be risk off, dollar higher, markets lower. So now let's take that one step further, Michael. Let's put further scrutiny behind all the things you said before. So what you're saying essentially is the market's going to go sideways, yes, but it has a lower tone behind that for markets being bearish and dollar higher. So while within all the context of a range-bound market over the course of the entirety of the week, we're essentially going to see the biggest move with the magnitude and speed that we like to look for as price action signatures is going to be in the expansion higher for dollar and lower for S&P, lower for euro, lower for cable, lower for all other assets. Okay, so if that's what we're expecting, overall, if you take a step back and pull up a 15-minute time frame on any of your markets that you like to follow, we had what staring us in the face on Tuesday? CPI. That was the big, it was the elephant in the room, or in this case, it was the bull in the china shop. It just went in there and wrecked everything. But did it do what it was designed to do? Let's take a closer look at that. On Tuesday, all of this was behind the backdrop of CPI, which is what mechanism? Manipulation. You're not trying to predict anything except for the volatility that's coming into the marketplace. Do not have high expectations on knowing anything specific about any key level holding this or that, because CPI, FOMC, rate announcements, they can sometimes literally destroy even my best analysis concepts because it's manual intervention. Manual intervention is within the scope of what I mentioned earlier at the beginning of this discussion, which is a black swan. You don't know when they're going to manually intervene. You don't know that. You don't know when a bank is going to come out and say, yeah, we're just going to do a surprise interest rate cut or hike. Oh, what? You don't think they can't do it? They can. They can go out and devalue a currency overnight. Boom, gone. That's always risk. And we know that when we first come into this business. We're welcoming that uncertainty, and you need to. Doesn't mean we want to see it happen, but you say, as a trader, it's not likely to happen, but guess what? Shit happens. But if we're expecting consolidation, through all that consolidation, ultimately, the largest magnitude move is going to be dollar higher, while other markets lower. Oh, well, if we look at the profiles that I teach and taught in 2017, that's when those videos were produced, the summer months of 2017. Now, that logic was with me in 1996, but I put it into students' hands in 2017. They're in those core concept modules and lectures on my YouTube channel. So we have a range-bound consolidation week with a Thursday or Friday expansion. Okay. What would that look like based on what I gave you on Sunday? A range-bound market. If we're going lower, so that means for S&P, if we're going lower, because we're expecting risk off, that means the dollar's going to go higher. That means on Tuesday, CPI should do some kind of manipulation and create what for the dollar on Tuesday, the low of the week. What should that mean for S&P and Forex? It should be making what? The high of the week. Okay. When should the new move occur? Because if we don't trade the manipulation, we're waiting for what to occur? Thursday and Friday's expansion, lower for S&P and higher for what? Dollar. Look at your charts. Did it do it? Yes. Let's go further. Let's look at the Tuesday high. What's some observations there? Well, February 3rd of 2023, the daily wick consequent encouragement is a premium wick. Okay, if you look at that, Tuesday's high just goes like 1 point, maybe a point and a quarter, past that consequent encouragement of February 3rd, daily wick. So the wick above that daily high on the 3rd of February, split that in half. Look at your high on Tuesday. Well, that's random. It also swept February 9th buy side liquidity. And it was all manipulated by what? CPI. Okay, let's flip it. Let's look at the other side of the weekly range. The low of the week, look at January 30th, 2023. That candle, the mean threshold, it's a bullish order block. The low actually is 40.57 3/4. So 4057.75. Just happens to be a level I've already talked about. Told you I have it in your chart. It purged the daily low on February 10th of 2023, which that low comes in at 4060.75. Incidentally, the only discounted rate I mentioned on the February 12th commentary was the 1st of February, discount consequent encouragement, 4067.25. So inside that range, that weekly range, what was the factors that you should have been paying close attention to? Go back to the daily chart. What did I talk about on the 12th of February? I said there's two volume imbalances there. You want to extend them throughout the entirety of the week, all the way through Friday. But Michael, I got all this shit on my chart. How am I supposed to see price? You're supposed to have different templates that do certain things. New week opening gaps, you're going to need a template just for that. You're going to have 5 of them on your chart at any one time. And if they're in close proximity to one another, it's going to be a lot on your chart. And you're going to add what? You're going to add all your rectangles for fair value gaps. You'll have too many things. This is the reason why I use a notepad. I don't have all that shit on my charts. I have it in my notes. But you, as a student learning this, you'll have to do what I did. How I did it was I had charts that I only kept for certain functions. The primary function for the new week opening gap, I have a chart that just simply has that on it. I have nothing else on it. And I refer to that intraday, intra-week. Whenever I need to reference something, if I want to check my notes, maybe I wrote a number down wrong. Maybe I didn't annotate a specific level correctly. I'm constantly referring back. Okay, so I'm making sure I'm double calibrating every one of my notes that this is exactly what it is. And I'm watching to see if price gravitates towards these new week opening gaps. The one you're in right now that starts tomorrow evening and Sunday, that's one. Then you're going to use last week's new week opening gap, the week before that, the week before that, and the week before that. There's 5 always on that chart. It doesn't mean you're limited to just that, but you have to have at least the last 5. Why? Because I taught that you're going to see that overlap of every month, that shift in money flow that comes into the marketplace. By having those last rolling 4 and the one you're presently working with, you won't be surprised. Maybe I wrote a number down wrong. That for the new week opening, I have it in my notes, a notepad. I don't have all that shit on my charts. I have it in my notes. But you, as a student learning this, you'll have to do what I did. How I did it was I had charts that I only kept for certain functions. The primary function for the new week opening gap, I have a chart that just simply has that on it. I have nothing else on it. And I refer to that intraday, intra-week. Whenever I need to reference something, if I want to check my notes, maybe I wrote a number down wrong. Maybe I didn't annotate a specific level correctly. I'm constantly referring back. Okay, so I'm making sure I'm double calibrating every one of my notes that this is exactly what it is. And I'm watching to see if price gravitates towards these new week opening gaps. The one you're in right now that starts tomorrow evening and Sunday, that's one. Then you're going to use last week's new week opening gap, the week before that, the week before that, and the week before that. There's 5 always on that chart. It doesn't mean you're limited to just that, but you have to have at least the last 5. Why? Because I taught that you're going to see that overlap of every month, that shift in money flow that comes into the marketplace. By having those last rolling 4 and the one you're presently working with, you won't be surprised by anything. You'll see how it's gravitating towards it and gravitating away from it. And because if it hangs around that new week opening gap, we're in consolidation. When it moves sharply away from it, and your analysis is already calling for a big trending event, then you know you have confirmation, the thing that everybody's looking for with indicators. You don't need it. It's going to tell you in price. So if you look at the range of the weekly high and low, what was taking place throughout the entirety of the week? Pull up a 15-minute time frame with those daily volume imbalances. You don't know which ones I'm talking about? Watch the 12th of February's analysis. When it gets to the S&P, you'll see I don't draw them on the chart for you. I tell you where they are, and then you draw them out. Usually I just draw it with a rectangle and extend it through. I will show you on Monday. I'm not going to be trading on Monday. It's a bank holiday, and it will be a pre-recorded lecture. So that's when you'll see my next, I guess, soiree with talking about the markets. So there won't be a live session on Monday. There won't be anything except for a pre-recorded lecture that I'll probably do sometime in the morning. I'll have it by hopefully 1 o'clock in the afternoon, and that's the next installment for the mentorship here. But before I show you that, I want you to take a look at your own chart and show where that volume imbalances are. There's 2 of them. Extend them through your chart and look at it over the course of the entire week with a 15-minute time frame.
So these 2, we use that as support here. We come up, break through it, refer back to that. So we had a consolidation profile this day. Then Wednesday came up, used as resistance, came up, used as support. Thursday we break through. That's actually crazy.
What observations do you see there? Notice all of the intra-day and intra-week imbalances all cluster within those 2 volume imbalances on the daily chart. See how that's... Observations do you see there? Notice all of the intra-day and intra-week imbalances all cluster within those 2 volume imbalances on the daily chart. See how that's creating a lot more of what we've seen on the daily chart.
All the imbalances.
Just spotty price action. Spotty meaning it's creating these little inefficiencies or gaps created at the new day opening. You can really appreciate it if you have your 15-minute time frame chart showing those 2 daily volume imbalances I refer to in the February 12th, 2023. See, this type of lecture here, for some of you, it's just like, I can't follow this because you're lazy. You didn't write down and draw into your charts the things I'm talking about when I do the analysis. You're not even doing it right. And this is exactly what happened when I had paid students. Paid students, I would sit down and tell them exactly what I just told everybody for free, openly and publicly. They didn't take notes. They didn't record the levels in their charts. They didn't stay with the bias I was giving them. They were doing opposite of that, and they bitch and complain, say it's a scam, and they run off and quit. That's on you. That's not what I taught, and you're doing the very opposite of whatever it is I'm telling you to do, and your results are going to be what? Fucked. So don't do that. So if you take that 15-minute time frame and you have those daily volume imbalances, I annotate and show you exactly with my cursor. I'm not drawing them on my chart because I want you to do them on yours. If you want to use horizontal trend lines to annotate the volume imbalance, okay. If you want to use a rectangle, okay, it's a preference. Your annotation style is going to be your annotation style.
Wow, look at the body.
Your colors, all that stuff, it's going to be yours. Don't try to mimic everything or use my charts. You're not going to learn the same. You'll learn to do it by doing it yourself. But if you take your 15-minute time frame, show the entirety of Sunday's opening to Friday's close, that's how much range of price data you have to have on your chart. Have those daily volume imbalances highlighted on your 15-minute time frame, and then toggle in the lower right-hand corner on Trading View. Go from, it usually will be toggled by default with ETH, which is electronic trading hours. You want to toggle that and switch it to RTH, regular trading hours. And when you toggle that,
I also want to make sure this one's cool. Yeah.
You're going to see all the new day gap more or less converge within those two volume imbalances the majority of the week. You're seeing visually why. I'm sorry, switch it to RTH, regular trading hours. And when you toggle that, you're going to see all the new day gap more or less converge within those two volume imbalances the majority of the week. You're seeing visually why markets consolidate. What's the mechanism behind why they are consolidating? It's creating these gaps, these inefficiencies that has to keep coming back to reprice to, because there is no overwhelming pool of liquidity above or below the marketplace to inspire price to go outside of it. There's too many of them near term all around in this big cluster that's being shown on the daily chart. You're seeing visually why markets consolidate. What's the mechanism behind why they are consolidating? It's creating these gaps, these inefficiencies that has to keep coming. Back to reprice to, because there is no overwhelming pool of liquidity above or below the marketplace.
Dang. Thankfully, I decided to listen to this.
Why markets consolidate? What's the mechanism behind why they are consolidating? It's creating these gaps, these inefficiencies that has to keep coming back to reprice to, because there is no overwhelming pool of liquidity above or below the marketplace to inspire price to go outside of it. There's too many of them near term all around in this big cluster that's being shown on the daily chart for the entire time we've been trading in February. So there's no reason for price to go explore outside that boundary yet. Why? Because they're holding price where it's at right now. It's at a point where it can go either direction, which is why I said we're going to have a consolidation market. It can go higher and it can go lower. That's 50-50, right? On a higher time frame basis, it's 50-50, yes. But on an intraday and an intra-week basis, we can still frame a bias. I gave it to you on Sunday. We're going to range bound, yes, but I do believe that the dollar's going to expand higher and S&P and foreign currencies and other markets will go lower. All of those imbalances throughout the entirety of the week that you've been seeing on regular trading hours on a 15-minute basis, all are occurring within those two daily volume imbalances. Let's go one step further. It looks like a mess, doesn't it? I mean, look at your chart right now if you've done what I just asked you to do. It's like, man, look at this mess. How could anybody decipher any of this? This is just madness. It's chaos. I'm at my wit's end, Michael. This is too much now. I can't see anything in all this. Go into Thursday, okay? On your 15-minute time frame, make sure your charts are toggled to regular trading hours now. That way you can see that gap lower on Thursday. That I talked about how we were going to trade back up. Into. And I said that we were not likely to trade all the way back up to the previous closing price. On your 15-minute time frame, while regular trading hours is toggled, not electronic trading hours. And again, you toggle that on trading view in the lower right-hand corner. If you look at the Thursday gap, we got lower. Look at the bearish breaker. That can be seen on Wednesday, February 15th. And if you're using a 15-minute candlestick chart, the time candle is going to be 14:45. And your chart must be set to New York time. If you're doing anything other than, if you're looking at in your local time, you're not going to find what I'm talking about. Everything that I teach, your charts and trading view must be New York local time. But if you look at the February 15th, which is Wednesday's bearish breaker on a 15-minute candle, the candle itself is at the timestamp of 14:45. Notice that how price, when it came back up into the gap that was formed at the New York session opening gap at 9:30, the difference is where we traded and closed the previous session, and we're at 9:30 opening. You're going to be doing this every day as a day trader in index futures. You do this every single day. You're going to toggle real trading hours from electronic trading hours, because that gap, the difference between the previous session close and the new session opening at 9:30. Yes, we traded all night long. Yes, it's really going on. It's being traded back and forth. Yes, but the premium or discount of that gap relative to where we closed the previous session. What do I mean by that? Are you talking about the PDA rate matrix? No. The term is we're opening up with a premium if the gap is higher than previous session close. We're opening at a discount if it's lower than we were. Of that gap relative to where we closed the previous session. What do I mean by that? Are you talking about the PDA rate matrix? No. The term is we're opening up with a premium if the gap is higher than previous session close. We're opening at a discount if it's lower than we. Were closed in the previous session. So on Thursday, we opened where? Damn, we were in a deep, deep discount. So it trades up to what the previous session closed? No, it doesn't need to. Well, how do you know when it's not going to do that, Michael? 15-minute time frame, bearish breaker, 14:45 candle, February 15th. Okay, note that. Also, if you've done what I told you to do by taking that volume imbalance and extending it through the entirety of the week, on your 15-minute candlestick on February 16th, the candle 12:45. Okay, so 12:45 candle on a 15-minute time frame. That high tick is the high tick of your daily volume imbalance. At 14:30, that high, the 14:30 high, is the high tick of that candle, and it's also the high tick of that daily volume imbalance. What happened after that? Free fall. Nothing's random. There is no chaos.
Wow.
It just looks unfamiliar right now. Everything I told you on the 12th, in terms of key levels, what to look for, what to watch, it's in your chart right now. The method of how price would deliver over the entirety of the week is exactly what your chart shows right now. Dollar went higher. Markets went lower. We had to deal and contend with what? Consolidation. CPI did the very manipulation that sets the tone for what? If it's going to be a consolidation with a lower market and higher dollar, that means in simplest terms, Tuesday's the event with manipulation, and then it's going to be providing what? Tuesday low of the week for dollar, Tuesday high of the week for other markets. Thumb in the eye to all these number crunchers. Well, it's not true what he says. No, it's absolutely fucking true what I say. I'm out here walking it. I'm proving it to you. You're looking at it. I'm calling it in every 1 minute candle that you can't fake it. There's no way of faking that. And you're seeing how wonderfully predictable price can be. Not all the time. Not all the time. There's certain things we have to wait for. But once it shows me what I'm looking for, it's on a leash now. And we're going to walk it right to where I say it's going to go. Don't believe me? Keep showing up every day. Keep showing up every fucking day. And you will get what you came here for. Proof, evidence, skill set, and the confidence to be able to do this at the end of the year when I'm no longer doing it. You don't need to worry about what I'm not going to be doing. What I'm doing right now is what you need to be focusing on, because this is where you learn to build these muscles up on your own. Working out with us together, training your eye to see these things in price action, real time. Not, oh, it's already happened, let's talk about it, cherry picking hindsight stuff. That's not what we're doing here. So we have had, in my opinion, in closing here, we've had a very fruitful week in terms of learning. We had some pretty impactful events within price action that we observed real time. The weekly consequent encroachment levels that I gave you also for the last 2 weeks, I told you when we were on the February 12th level. I'm sorry, the February 12th review on YouTube channel content. I mentioned that the 4178.25 level and 4161.25, they were key levels to have them also on your chart. I counsel you to go look at your charts and see how that was impactful to price action. That was the only thing I wanted to didn't touch on. I apologize. But apart from that, we had fun this week. We had a learning experience. It's fun to get in there and have these little laboratory experiments with price action. Does it do these things that we're looking for? Does it do this that we're looking for? Does it hold true? And right now, you're all seeing it. And I've had students for years that paid me, and when they watched this happen every single week, every single day. And that's why you never saw them come out in public and complain and say I was a fraud, that I wasn't doing it in front of them every single fucking day, every single week. Now you're seeing it more so than they did. I'm doing it on a 1 minute candlestick chart. And yes, there might be a 20 to 30 second delay in the live stream. But guess what? Once I talk and the live stream is projecting it out into the internet and you receive it, I can't call it back. I can't change my opinion about what I said was going to happen or wasn't going to happen. I'm out here, no safety net. This week, I had a live stream killed. You watch my battery thing pop up and say, okay, low charge. All I did was plug it in. I don't know why my live stream was cut. And I don't know why when I tried to start a new live stream, even rebooting, it would not start another one. So it just might be one of those instances where, it's just a connection issue. That's fine. But if it happens again, I'm going to take that as shut the fuck up, okay? And I'm just going to put that out there so that way I know, and you all know now, I'll have to change my delivery method. But it's pretty uncanny how we're out here and every single individual woman in candles dancing to the tune I'm playing. We're watching and observing price action. And until it tips its hand, I'm taking your attention on both premium and discount arrays. Yes, that's absolutely what's going on, because I need you to observe that moment, that shift in market structure, when things become absolutely clear. When did that happen? When I talked about those breakers. And I told you how to go into that breaker and the levels where the body's going to be respected and the wicks can go this far. And it went where we were looking for it to go. You can't fake that. You can't make up shit as you go in a 1 minute candlestick chart. There's no way. And for the folks that are doing mentorships, they're teaching you and you're paying them, ask them to do this. Because if they know my smart money concepts, if they know how to trade, if they know how to read price, if they know how to do that stuff they say they can do, they will gladly do what I'm doing. And they will be just as precise. But they're not going to be able to do that. They're not going to be able to do that for you. They're going to give you excuses as why they can't. If they have figured out Enigma, they'll do what I'm doing right now. But they won't. They'll have yin and yang symbols on their fucking chart and showing $15,000 max loss days and kill their stream before the trades go to shit. I'm going to say this and I'm going to close. There's a lot of YouTubers out there that might be a little intimidated because when I'm doing my live streams, there's a little bit more people watching me. I'm not competing against you. Okay? I'm not going to get on air and call you by name and talk about how you're not a good trader or you're foolish or this shit don't work that you're using. I'm not going to do that. I'm not trying to be that person. I'm not trying to compete with any of you. All I'm trying to do is make a medium for those that are interested, that want to see. You're able to see my thoughts, my expectations, the way I read tea leaves of these market fluctuations. I will get it wrong, folks. Something will happen where I get it wrong. And you're not going to hear me piss and moan. You're not going to hear me gasp. I'm not going to go into a fucking tyrant and say, it's bullshit. It's just, I did it wrong. That's okay. Take a step back, reevaluate what's going on. You need to experience that. That's the only reason why I changed my mind about doing it 2 times a week to down every fucking day. I'm going to make sure I'm in front of the charts where I read it wrong. You need to experience that. You need to see me in the frailty of my humanity do it incorrectly, where I bring in my gut and feelings about what it is I'm expecting because I've done it so long. And I try to finesse something that I know, if I was being honest, right there on the fly, my logic says to do this. But because I've been here so many other times, I'm a human. You're going to have that shit happen to you as a trader too. That happens, folks. You can be as rigid as you want to be. You're going to have all the rules, all the things that you're supposed to do. But you know damn well that sign said 55 fucking miles an hour. Don't go 1 mile an hour over. But you think that you can do 9 because the unwritten rule is, well, as long as you don't do 10 miles an hour over, they won't pull you over. What the fuck? You're still breaking the law, right? So it's no different with trading. You're going to do the same shit. Whenever you get that little itch to push the acceleration pedal down, when you're not supposed to do so, you're going to be rewarded with pain. You're going to be rewarded with an adverse reaction. And you will see me do that right in front of you. And there's no reason to be afraid of that. I'm not afraid of it. I'm not afraid of it. So if I'm teaching you, and I'm not afraid of it, and I know it's going to happen, and once I do it, you've already seen me take a loss last week, you can right back up, like it never even happened. The things that you're fearful of, they're nothing. It's all what if thinking. What if it does this? What if it doesn't do the shit you're afraid of? You wasted fucking time. You wasted opportunity. What if? What if this? What if that? What if everything I've been saying all these fucking years is exactly what I've been proving now out here in front of everybody? How much time did you waste now? And you're still, some of you. But what if you got off your ass and started training with us every day? What if you did the things I told you to focus on and don't focus on the shit I told you not to focus on? If you did that, what if you did that? I know. I did all that same silly shit too. You procrastinate because you're afraid. Okay. What are you more fearful of? Are you more fearful of losing your job and not being able to pay for groceries and meeting your ends because shit's about to go upside down? Or are you fearful of, while learning, when it's normal to make mistakes, where it's safe to make mistakes when you're not even trading with real money or even a demo, that you can afford to be wrong while you're learning? No ego, no pressure, no pride. Nobody looking at what you're doing in private to be able to laugh at you because you're not going to take your results while you're learning to the social media spectrum. There's a right way to do it and a wrong way to do it. I'm doing everything I can humanly, within the scope of reasonable and beyond that, to help you get this. I'm hoping I have enough time to get through what I want to get through by the end of the year. But the way the things are unfolding around us, I might not be able to. What do I mean by that? Shit's breaking out all the time. It's hard shit going on right now. And just pay attention. Everything I told you that was going to happen, and for those that were in my private group, you've known this now for 2 years or more. I told you what's happening and what's coming. It's all happening. In live sessions and in Twitter spaces, I told everyone, you get your ass ready because it's coming. Remember I told you you had 18 months? We're coming down the wire, folks. You have to get your house ready. You have to. Because what they got in store for all of us, and I'm not exempt. The money I have, it's a lot, but they can push a button and then boom, I have nothing. Nothing. There's no safe haven places. There's no, well, you gotta put your money in. I don't fucking know. So while you can, you stay busy, learning skill sets like this one. We may have a period where the market's not allowed to be traded. Something might happen that causes access to the markets to be interrupted for a period of time. Oh, that can't happen. That's bullshit. Well, guess what? Well, 9/11 fucking did. All they need is the reason to do it. That's all. Just the reason that would be globally accepted as, oh, that makes sense why we can't trade right now because look what happened. What's going to happen? I don't know. But I know we're coming down to the wire. Do I have time? Why even bother doing this? I might be wrong. And you don't have the skill set and another stream of income that can come from this. It's not guaranteed to any of you. But the measure of the tape is going to reach farther for some and fall short for others. And it's all going to be based on how much time and effort and energy you pour into it. And here's my thought process. Even if you get halfway to where you hope you get, 1/4 of where you want to be from having all this information understood and skill set from doing it, that's far better than sitting around paranoid because of what's about to happen, how everything's going to be expensive or not be able to be obtained. How much do eggs cost for you now? I said that was going to happen. You like meat? You like eating steaks? It's going to get real fucking expensive in the next 9 months. Real expensive. But guess what that means? It's hardship for most, yes. Guess what that means? We have cattle futures that we can trade. Ooh. So it allows you to channel what would otherwise be viewed as stress, anxiety, panic in the average person in that sticker shop when you go to the grocery store you're feeling right now. When you can pull out an extra $1,000, $1,500 a month in trading. Notice I said that, not a fucking Lamborghini. Not a fucking Ferrari. Not a $2 million house like ICT. A $1,500, $1,000 bump each month. If that's all you got, how many people do you know that are never going to get that? How much better are you off than them? I'm sure in one hand you can list 5 friends that you know that if you did that, you'd be better than them. And it's not about being better than a person, but in a position financially to be able to weather it. If I can be honest for a moment, and then I'm going to stop because I'm already talking about showing this that I didn't want to talk about again. What's my expectation? What's my goal? Why the fuck am I doing this? Because I keep asking, people asking me, why are you doing this? First of all, let's get one thing straight. I could write a fucking check to myself in the amount of millions of dollars every single month, again, if I wanted it. I don't want it. I could be charging you all money. I don't want it. I swear to Christ almighty, I'm never, ever, 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 ever charging for a mentorship ever again. I'm never doing it. I'm never doing it. It's February 18th, 2023. Michael Huddleston will absolutely never charge for a mentorship ever again. It's never going to happen. So why am I doing it? I have had this information for almost 25 years. You're not supposed to know it. I wasn't supposed to share it. And I had a case of ass one day because I was told you can't do something. So I've told you many times facetious like that. It's human nature for someone to see the sign that says, don't touch wet paint, don't walk on the grass. Well, I was that kid as a little one. I was quiet, but I always wrote my initials on the desk at school. Wet paint, I would put my finger in the cement that was just poured and put my initials in the year. I didn't mean anything mean by it. Just that was my human nature to don't do this. Okay, I'm doing that. That's what we all are. We're sinners. We do the things we're not supposed to do. Don't walk on the grass. I'm fucking moonwalking on it. So when I'm told you can't use this, I can't use it. The fuck do you mean I can't use it? You cannot use it. Oh, is that so? Well, what happens if I come out publicly with something that is real close to it? Much like Pepsi is to Coke. I'm not really sharing the recipe for Coca-Cola, but it looks just like it does in a glass. It has the same effervescence. It gives you the same sugar high, but the ingredients are not exactly the same. So when I'm not allowed to sit at the card table because they know I know how to count cards, I've spent years documenting a reason why I'm doing what I'm doing. And nobody that said, don't walk on the grass, don't touch the wet paint, can say I used that. Can my life be made difficult still? Sure, it could be. It's always being threatened all the time. But you're all benefiting from something that my hand's been in. And I'm proving that. What difference does it make? Who gives a shit? I do. And unfortunately, for those that don't like to hear about it, I drag you across it, not because I take pleasure in that. It's just I constantly have to remind myself. I do have boundaries. And I don't like the fact that I have boundaries. And I like to press into them as much as I can. Sometimes, too much. I wish I could talk more openly. I wish I could say everything that I want to say. But I have to be measured, calculated. And when I take a deep breath before I start talking, I'm making sure I don't lose control and go off the rails and say more than I'm supposed to. The opinions of others that listen to me, it's really not that big of a deal to me. It's me laying down a logic of what I'm using, when I'm using it, and because I made it public. That's as far as I can let the cat out of the bag. Do I have something that is outside of retail stuff? At this point, any reasonable person can look at that and say yes. Does it go further than this? Absolutely. Do you need all that? No. So why am I doing all this for free? Why am I pouring myself into it like this? Number one, it's been asked of me many times from all of you. And I'd be lying if I said that when I came home in the summer months of 2016, we come back from the beach, we spent a week. And I got all these emails from people saying there's a lot of people in the Middle East that are selling your free videos off your YouTube channel. They're just selling them. And you know me now because of being in these Twitter spaces. I'm bipolar, and it's very difficult for me to control myself. Once I flip the switch inside, not that I want to, but when it happens, I start running. And sometimes it's ugly things that come out of my mouth, and sometimes it's funny stuff. And sometimes I wish I could go back and erase that from history because I'm not in control of myself. So while I've never been drunk, I've never been out of my mind because of drugs. To me, I look at it, it's equivalent to that. And I got pissed off. I got mad. And I did the very thing I said I would never, ever do. And I went on Twitter and I said, here, you motherfuckers are never going to get anything ever for free anymore. You want to learn from me? This is it. $150. Now, looking back at it, it was stupid because I was thinking, I'm punishing them. How am I punishing them? The only thing I did was say, hey, look, pay me $150. I'm going to give you some really good shit so they can sell that too. And that's exactly what they did. My shit was leaked all over the place. It was in Telegram channels. It was in Discord rooms. It was on Google Drives. It was on flash drives being sold hand to hand at bus stops. It was the new crack. It still is. I got the Heisenberg shit. I mean, this is the real shit. Everybody wants this. That's cool. But all the time I was spending and doing all that stuff, making all the lectures and putting up with everybody's personalities and character flaws and impatience. It was just me doing it. Just me answering the questions, producing the videos and editing and everything else. It was hard. It was hard to do all that shit. And I wished I hadn't done it that way. And then I had an audience member say, would you ever let anybody else come in? Because I have a cousin, I have a brother, I have a sister, I have this, I have that. And they would come in with these requests. And I was like, I'll do one more enrollment. I'll do one more enrollment. And every year when I wanted to stop, it just was like bigger and bigger and bigger and bigger and produced more work for me. Then I had to stop. The 2021 group, that was it. A lot of young folks came in, no discipline, no respect, no courtesy. Just, what I'm talking about, young folks. And I was a young folk at one time. I was an asshole, a prick, arrogant little asshole. And I had a lot of those come into the 2021 mentorship. And a lot of them are running mentorships right now, teaching my shit. And they're the ones that I blocked. And they talk shit about me now, they still can't keep up. When I went through that mentorship, and I was looking for a way where I could feel satisfied and say, okay, I'm content. I'm done with this. I had a lot of people constantly emailing, and they still do. Can I join your private group? No. I'm going to tell you something honestly, okay? This is the God's honest truth, and everybody that's in my private mentorship can come out and say I'm lying if I am. Right now, the only thing they're getting from me is the opportunity to ask questions where you don't. When I present something, you get it the way I give it to you, and there's nothing extra. That's it. When I produce a lecture, I give them a medium, and I say, if you have questions about what I did here, you can ask me, and I will answer their questions. That's the group. I've already taught everything on those core videos. That's on my YouTube channel. They watched me do that live. That was what they paid for, that experience, that exposure to it before it happens. The lectures, being a part of that community. When I'm teaching publicly. That way no one can sell it and steal it and say, here, I got something cool, here's ICT's videos. I don't produce videos for that private group anymore. I haven't done so in years. Well, that's not probably true. It's about over a year or so. I give them a community place for them to talk with me and ask me questions and talk with other members. That's what that is. There is no way to join that. So why am I doing this? Because I know what's about to happen. I've known it for a while. When I stepped out on Baby Pips, 2010, I was reading a lot of people on there talking like they knew what they're talking about, and they don't know what the fuck they're talking about. And I was afraid to come out and talk about these things. I was afraid. I don't deny it. I was fucking afraid. Not because of being judged by the public. It's not what I came out and wore the demo badge forever. I coined that term, demo baller. That's who I was. So what's anybody gonna say about me? Nothing. I came out publicly and said, I'm doing this with a demo, but I'm doing it 50 times better than you, and you're selling shit. Pretend to be something elite. Lamborghinis and BMWs. But you ain't showing your trades, getting in and out, are you? And that's what people saw when they joined my mentorship before. What you're seeing right now, little recordings of me doing examples of trades. And now you have the benefit of doing what? Seeing why I've done those trades. So after I closed that private group down, I had a lot of people reach out to me and say, hey, look, you're an asshole because you won't let me join. You're being selfish. You're a jerk. You won't let other people do it. You did it this many times that you stop now. And I know there was a lot of people that couldn't afford to keep up with the payments. I know there's a lot of people that could have never done it at all. I had folks from Africa joined up 25 deep per account. That means there was 25 people chipping in just to make that one monthly payment each month. I didn't know that at the time, but that's how most of that shit got on Telegram. One family member got greedy and tried to sell it, and it got leaked and got leaked and got leaked and got leaked. That's how it happened. So I had all these folks reach out to me and put a heaviness on me. And that took me back to when I was on Baby Pips. When I first stepped out there, the very first post I ever made, what every new and aspiring forex trader wants to know. I had that thing typed out for like a week before I put it up. Edited, added things, took things away. And I was afraid. Like I was afraid to start it all. Knowing me, once I started something, it would just go on, and then I would just eventually get to the point where I knew I shared too much, and then the ramifications of all that stuff, I'd have to deal with it. So when I had a lot of folks all around the world reach out to me, and you see it still in my comments, and when I comment on other people's videos, hey, can you do more mentorship? Folks, listen, I'm doing it right here. This is my last time. I believe my family is going to need me, and I'm going to need them. It's going to get hard. It's going to get real, real hard. And having a lot of money is not something that makes one exempt, because money will be attacked. So I'm doing this because I want a clear conscience. I don't want to have to answer to, you could have did this much more and helped this many more if you would have done it this way. And I felt like I was being directed to do this. You can call it conscience. You can call it just guilt. You can call it attention seeking. You can call it whatever you want to call it. I'm doing what I feel in my heart I should do. No matter how many people find success or fail in it, no one's going to be able to say I did it half-assed. No one's going to say that I held anything back. No one's going to say that I didn't pour myself into it. And I'm going to have a clear conscience when I tell you the second Friday in November this year. Should we get to that point? Because something could happen. I mean, tomorrow's not promised to no man. But what happens when we get to that point? What are my hopes? My hopes are this: that you will have found a way to get out of your own way. Stop hindering your progress. Stop having lofty expectations of yourself in and/or trading. Be realistic with it. Go back and watch that end series. That's how I started Baby Pips. I wanted you to think responsibly about money, how to earn it, and how to use speculation, not get rich quick. I've never promoted get rich quick, ever. I've never, ever, ever done that shit. And anybody that gets out there and flashes that pump stuff, look, folks, I have the real shit. I have all that money. I have all those fucking toys. I can go out and buy a Lamborghini every fucking day of the week. I can do that. I can live stream that shit. I can go out there and show you the fucking receipts. Here it is. There's no fucking lease payment, and I don't lease a fucking car now at all. All my shit's for real. You're seeing Photoshop shit. 2019 was a lease until it was paid off, and I still own it. It's in my garage. I don't like Lamborghinis. They're shit. I like American muscle. And what I'm talking about, I took a Hellcat jailbreak edition. They had extra work done to it. I took it out the other day. They have a $50,000 markup on this fucker, which is insane. It's too stupidly expensive as it is, but they're not making them anymore. So I've been wrestling with it, and the dealer keeps calling me up saying, look, how can we do a deal? How can we do a deal? We got to come up with $50,000 because that just doesn't make any damn sense. I mean, I wasted a lot of money, lots of money over my lifetime on cars, but I know having that car, I'm buying it to not drive it, which makes no fucking sense, right? Well, I drive my Corvettes. I drive every car that I own. If you're going to invest money in something like that, I just don't have the disposition to do it. Like, I'm not a collector in that respect. I'm not a Jay Leno buy a car and put it in a fucking room and don't touch it. No, that's not me. So I've been wrestling with that. Nobody's going to be paying $130,000 for that car. So, but they're trying to argue and say the owners just watch someone buy it at an auction for $210,000. If that's the case, then you'll be selling your shit for $190,000, not $138,000. So it's all bullshit. I don't know how I got on that topic, but I want you all to be able to take what I'm sharing, formulate an approach that's unique to you, that matches your disposition, your personality, not chasing money, not chasing wealth, not chasing clout, but to be able to make your ends meet, or at least alleviate some, if not most, of the added increase that we're all going to experience. When I go to a grocery store, I buy groceries for 4 people and 2 dogs. And my grocery bill is anywhere between a low end $800 to $1,500 a month. Now, that might not be equivalent to you. It may be less, it may be more. But I can tell you, I wasn't spending that 2 years ago. So I thought to myself, around the fall of the last year, I was thinking to myself, what can I do to live with myself? To know that I've done everything that I could have done to make this accessible to all of you. To show you how to do it properly, to walk you through it, to show it to you real time what it looks like in the charts, and remove all the bullshit that these assholes out there claim that they know about me, what I really look like. You all see what I look like. I showed myself on Corpse interview. That's me. You see me without my facial hair. When I was driving my Corvette, that little short thing on YouTube. That's what I look like. Does that make you more money? Knowing what I look like? It doesn't make any sense. If I show you my cars, if I go out and buy that jailbreak edition, does it make you more money? No. I've lived my life the way I want to live my life. I don't try to live my life in front of all of you. I don't have an interest in doing that. There is a narrative that I want to use because it'll help me write off and depreciate the motorhome that I have. So I will be doing a separate playlist of like a digital nomad. That's what I'm going to call it. That playlist will be digital nomad, where I'm taking our RV out to different locations this year. And because I will be trading, you'll see me over the shoulders, I'm trading. And I'm in the RV, so that allows me to write that off. Because it's a series for me to do what? Collect ad revenue on YouTube with that series, which allows me to do what? Legally depreciate that RV, which I paid nearly $300,000 for. I don't just do things on a whim. I'm doing things that make sense. Now, anybody else that goes out and buys an RV, you eat it. It's the way it is. But if I show something that's part of my sitcom, my presentation, my YouTube channel, it's an element that is it's integral to what it is I'm doing. Digital nomad. I'm a traveling around the world trader. And here I am trading the S&P. We're in Arizona right now. We're in Utah. We're in Montana, which I can't wait to go up to. I think I already told some of you why. But because I'm doing that and I'm running a business with it, it allows me to do what? Legally depreciate it. Whereas if you tried to do that and you don't have a business, you're like, what the hell are you trying to do that for? You can't do that. You can't do it. So there's a way to be a master over money, or, which is what we're trained to be in school, a slave to money. I want you all to be able to do what you can within your own limitations that you hold right now that will be expanded over time through growing pains. You'll be able to do more than you'll be able to do when you first start doing this. But my hopes and prayers are that I have completed this year in a way where I've impacted your life, inspired you to make better changes, decisions about what you do with money and how to pursue it, and hopefully created a vehicle for you to go in and explore the opportunity for you to find that in this. I can't promise it to you. I wish I could. I would. If it could be easier or shown to you in a real straightforward 1, 2, 3 easy, I would do it. God knows it's my wish and prayer for you to be able to do this. And I want to stop when I'm done. That way you know I'm not leading you onto some keep paying me ad revenue, keep doing this and keep doing that. I don't want that. If it was about money, I would be putting up a PayPal link saying, here, pay me. And look how many people's following me right now. If just 20% started paying me, I'd be back to making millions of dollars again in a month. It's not about that. I'm already rich. I don't need more money. I don't need to do it. I don't ever need to take a trade ever again the rest of my life. Ever. Ever. Everything I own is owned. I don't rent. I don't lease. I don't do shit. It's all lock, stock, and barrel mine. And I'm proving to you that I'm not motivated by attention or people paying me monthly subscriptions. I don't need that. So when you come to me and you're listening to me, there's no ulterior motive. There's no upsell coming. And the easiest way for me, in my mind, I was thinking, how can I prove that there's no reason not to trust me? And what I'm saying, what I'm teaching you in the marketplace is do it for free, do it publicly, do it live streamed, do it every single day, and ask nothing in return. And that's why I'm doing it. I might not be successful. There may be some of you that I don't reach, that you can't do it. And in certain respects, I guess in some ways, you can say I failed being able to teach for every person, but I'm trying my best. I've never claimed to be the best mentor. I'm the mentor of every mentor out there teaching this shit. But I'm not the best mentor. I'm not the best. I'm not upset about that. I know there's limitations to me. But I'm doing everything I can to make this obtainable for you. And frankly, since I've started, every night when I lay my head down, I have went to sleep peacefully. Thankfully. I don't have anything in my heart that feels regretful. I don't feel like I have lived my entire life where I know things that the general public would never know. And there's many times I've been in situations I've watched other people hurt themselves in these markets. And I know how that can be prevented. And it haunts me because I can't fix everyone and I can't bring those people back, and some of them are friends. And I was afraid to tell them. What are you afraid of? Being able to see my family and them see me. Breathe. So it takes a whole lot of effort for me to create a language, present it where it is far enough away, but for someone that knows it, they can recognize it. And it has nothing to do with anything retail. Nothing. And when I'm done this year, I won't be feeling like I have more to do to not feel a guilt-free life. You're not entitled to this information. I'm not obligated. to teach it. But I made a promise. And I feel like this is the best way for me to fulfill that. I mean, if anybody has odds against me after this, whatever. I can't connect with everyone. Some of you have a issue with me because I'm doing this, and you try to sell something. So you want to vilify me on that, exaggerate shit, make up things, doctor my actual image, say things that are not true about me and my family. All because you can't be at this level. When my disposition and my character is, I want to help everyone, even other people that do this and sell things and try to make a business for themselves. I could be a selfish dick and keep growing in my community and never reach out to other people. But if you look at what I do, I reach out to other YouTubers, other traders, other people that are starting out their own little thing, and I bump them because that's my nature. I do that. That's who I am. I'm not a villain. I'm not an asshole that goes around with a club beating everybody over the head saying, you're trash, you can't do this, you can't do that. I've been blessed with a wonderfully, wonderfully supportive community. Some of you are just overzealous and you want to treat it like it's a football team. And we're not the Pittsburgh Steelers. Okay, we're not the terrible towel swinging. I think I got that right. I'm not a football fan. I'm probably going to embarrass myself here because I don't know sports well. But I know there's, I think it's the Pittsburgh Steelers. Pittsburgh Steelers. I think, yeah, I know it's Steelers, but they have this towel they swing around in the stadium and they start screaming and stuff. I don't understand it, but some of my students feel like that's what it's like, or like they're one of the 300, the Spartans. And they got to go out there and do war with people. That's not what this is, man. It's not what it is. But I've been blessed with such a huge community that just keeps growing. Like I got 20,000 followers on Twitter, and I don't even know how it happened. Like in a very short time, it just boom, they were there. More, 243,000 on Twitter, and I'm just a little bit below 500,000 subscribers on YouTube. I'm intimidated by that. Like I'm nervous because I know there's a lot of people listening, but when there's a number attached to that like that, it's very intimidating. And you hear me talk about the markets when I'm dialed in and I'm distracted by how the numbers and ears are listening to me. I don't want to see that chat window. I don't never know how many people are listening to my live streams or in this. Like I don't know how many people are listening because if I see that, I'll choke. It'll become an impediment for me to be able to talk openly and freely and be me because I'm still that kid from Middle River that will never have the pleasure, the sense of accomplishment. To hear the man that he loved tell him, "You've done good." And as many times as I hear it from all of you, and I appreciate it, it doesn't satisfy. So when I do these things, the scratch and itch that I can't ever satisfy. And I guess in many ways I'll continue doing it until I don't have my mental faculties or here. It's a pursuit of something that I'm never going to obtain, and I know it. But that's the passion and the drive behind me. That's why I do it. I like to think that he can look down and see me. The first half of my life I lived very selfishly. And seeing many of you through this medium of the internet, coming in contact with so many of you, it changed me. When I was a 20-year-old, knowing this stuff, it makes you feel immortal. Arrogance, pride. When you get older and you have a family and you lose family members, you lose children, that stuff weighs on you and your view about how you keep score in life changes. It's not about how much money you make and how much you have in the bank. It's the relationships, how you impact other people and how you lead them. And I want to be able to know that I've done as much as I can within the scope of my capabilities. Because I don't claim to know how to teach the best way. I don't know. I don't know how to do that. I've prayed all the time for the gift of teaching, for the patience to do it. And you can hear I am wrestling with real things that a human being in a better position mentally, because I can't fight these imbalances. I can't correct them, and I will never take medicine for it. I will not. To me, it's not medicine. It's changing who you are by taking that. And I don't want to be anybody but me. That's why I don't drink. I don't get drunk. I don't take drugs. I'm lucid all the time. I wish I would have had the courage to come out and tell you in the beginning why I only do things recorded. Because I know what it feels like for me to live like this, 50 years old, and 1,000 thoughts in my head all the time. And when I was younger, it was all violent thoughts. You would look at me and think, wow, this boy's quiet. He's so pleasant. He's well-mannered. But I had homicidal thoughts in my head all the time because I didn't want to be where I was. I felt uncomfortable, claustrophobic, pressure, anxious, not knowing that they were chemical imbalances. And how do you articulate that as a kid? You don't know how to. So you stay quiet and you say nothing. And over time, too much shit. I have to start talking. And that's why I can talk and talk and talk and talk and talk. And it's better for me to talk. Because if it stays inside of me, it bottles up. And then it comes out later on with a family member that didn't ask for it. Why do you do these Twitter spaces? It's therapy. Frankly, I don't give a fuck if you like what I'm saying. I don't care. It's letting me get rid of it. These aren't for my children. But when I make videos, they are. Here, it's just an outlet. And if I can help in the process, if you can see past my poor choice of language sometimes, and you can get something from it, all the better. If you don't get anything from them, don't listen to them. If you're offended by them, don't listen to them. They're unfiltered. You'll hear me have an emotional high sometimes, and yes, you'll hear me cry sometimes. I'm human. When people say things about me that aren't true, it bothers me, knowing that I put as much effort into doing what I do, when I'd be willing to help any of them. Too much emphasis is placed on image. And I don't want any of you as my students that become good at this fall victim to that stuff. You can go into it with all the right mindset like I did. Oh, okay, I was making $1,000 a month and I'm retired at 40. And then when you taste real money real fast, that stuff changes you real easy. And then when you make it known to people around you, your friends and your family, and they bring in their views about what it is that you should be doing and how you should do this and do that. And they can't even make their bills. They can't even get their car fixed because they don't have enough money. And you're making what they earn in 4 months in a day. And they're going to tell you what you're supposed to be doing. And they get angry because you're not listening to them. How many times do you have to listen to that before you blow up in their face and tell them about themselves? That's what I did. And I wish I could go back in time and take it away. Because those words cut. Your family members, they love you. Your friends, they love you. But they're not going to love you doing better than them. That's a rare quality in a person. And some of you are going to experience that, unfortunately. So the best thing you can do is mind your own fucking business. And don't let anybody else mind yours. Meaning, don't talk about what you make. Don't talk about what you're doing. Don't plan on sharing what you're planning on doing. The only thing you're doing is inviting people that are not doing it, won't understand what you're doing. They don't have the capabilities to even pursue it, because if they did, they'd be doing it themselves. Prove that as soon as you tell them you're trading. Oh, you're going to lose your ass. That's a pipe dream. They just communicated their view of it, which they adopted from somebody else because they've never done it. Ask anybody that's making money today if you should pursue what you're doing. Fucking right you should. Absolutely you should. Why is it taking you this fucking long? Why aren't you already fucking trading? That's the response you gotta get from people that are successful. Get the fuck in here and let's go. You're missing out. Let's go. But in the beginning, you feel like you need that comfort of a friend and a family member to encourage you. You don't. You don't need that. I thought I needed it. You don't. That's a mistake to do that. You know who your best friend is? Your journal. You want to pour yourself out? Confide in someone that's never going to tell your story to anyone else, that's never going to spill your mistakes and embarrass you? Pour it into your journal. It's therapy. It's useful. It's effective learning. It tracks all your progress. It's never going to judge you. It's going to show your highs and lows without any judgment. And it's the best fucking trading book you'll ever read. And you're the author of it. How impressive. Stop buying people's books. They're talking shit to you. Nothing new under the sun. Take all your attention, all your energy, and pour it into what you're doing. And once you learn how to do this, find a way to pour your efforts into others. Help other people. Take what you earn a month. It's okay. I'm going to take 5% of what I earn. And I'm going to go out and I'm going to find someone that needs it. Not these organizations, because that shit rarely ever goes into the people that they say they help. Go out there in the trenches, in grocery stores. You want to see somebody in need of things? Walk around your grocery store. Get yourself a cart. You get a loaf of bread, things that you can walk around and not fall out. Spend some time and observe. Read the faces of those individuals in there. They're going to tell you a story if you just look. And you want to feel like you've accomplished something? Buy their groceries. And when they turn to you, they can't even talk. And their eyes are full of water because it's tearful. That feels real good. That feels really good. And they don't know you from Adam. They didn't ask for help. But you did it because you want to. And living life like that is very, very fulfilling. I've had so many people turn to me and to say, like, you have no idea how much this helps right now. And to me, many times, that feels like a divine appointment. Like, I was placed there at that time, for that moment, for that very thing. And it feels good. It has nothing to do with ego. It's not virtue signaling, because the only 3 people that know about it, or 4 people that know about it, is God, the person receiving it, me, and the cashier witnessing it. I don't try to make a spectacle out of it. I try to catch them when they walk up to the register when there's nobody else around but me and them and the cashier. And I quietly, without embarrassing them, get the attention of the cashier, and I just mouth out and say, I got them, don't charge them. They usually smirk, and they think, okay. And they tell me, good, it's already done, it's paid for. And they look bewildered, which is funny sometimes, because they're like, what do you mean it's paid for? They lost their mind. I didn't even take my card out of my pocket. Yeah, it's paid for. It's okay, it's paid for. And then when you turn around and see me, I'm smiling, sometimes crying. It feels good. And I'm only saying this to you, and I've said it before, I don't want you all to say, oh, that's nice of you, ICT. Because that's my reward then. I don't want that. I want to encourage you all to not think about what you're going to do for yourself in your own image online. I live in this kind of house. I drive this car. I can go on these vacations. Look at this watch I paid too much money for. What do you think feels better? Going out and buying a piece of shit Rolex watch, which I don't own a Rolex. I would never own a Rolex. They're fucking shit. They're garbage. The Patek is the real watch. What matters more? Cars, trips, vacation homes, houses, or reaching out and touching someone else with your wealth and being impactful in a positive way like that? That's far better. I don't look at people that have more money than me, that fly around in jets and shit, and think, wow, I wish I could be like them. They don't live lives like I'm living. Even if you earned enough where you could take yourself out to once a month, you go out, you find someone in need like that. Randomly just pick them. Ask God to say, hey, put me in front of somebody that needs it. He'll find a way to get you there. And when you do it one time, the next time you're in front of your charts and you're looking for trades, you're gonna be like, I want to do that again and I want to help someone else again. Father, let me be successful in this because at the end of the month, I'm gonna take this much and I'm gonna bless somebody with it. You want to see your accuracy increase? It will. Doors will open up and things like that. When you know it in your heart, you mean it, you're gonna do it. Okay, let's see you do it. And you're gonna find things get real easy because you're not living the life for you, not just you and yours, but you're trying to be helpful with other people, and the oil will not run out. I don't want you just being good traders. If that's all I wanted, I would just stop teaching because I've already taught you how to trade. I want you to be better people, better human beings, and I'm learning to be better in the process. I want you to find a way to look at your life and try to live it a little bit more purpose-driven. And it has nothing to do with religion. I mentioned God, but you may not believe in him. Doesn't change the fact that he does or doesn't exist. But you can still do these things and be rewarding to other people. And it just feels good. It feels good. For some of you who don't have any money, you can't imagine doing that. And most of you lie and say, like the lottery, if I win the lottery, I'm going to give this to that person, I'm going to buy a house. If you won, you wouldn't have done any of those things. You would have been greedy and kept every bit of it. And that's why you don't win. But how many of you have sat down and figured out, if you could make this much as a goal, how much would you be willing to give to someone in need? I'm not going to say, here, go, let's give this to charity. Here's a charity. I'm telling you that you find someone that you know in front of you is in need, and you give them what they need. You're going to do it where they don't know you. They're not going to come back and ask for seconds and thirds and fifths. In many ways, you're appearing to them like an angel. You're not going to be there when they talk about you, but you can imagine they're going to go home and think to themselves, how on earth did that just happen when I can't make it right now and I'm barely struggling to just meet ends right now? And this person just popped up right then and there, and now I got these groceries that I didn't have to pay for. What a relief. I like that. I like the fact that they don't even have to know my name. And I'm thankful for the opportunities that I'm given when I do it. There's been only one time, and I can tell you that I did it. This young lady, she had a kid in her cart, and I said, I'm going to pick her. And I followed her around the store, afraid that she'd probably think I was creeping, right? So I'm keeping a good distance away. I'm waiting for her. I'm like, she's not putting anything else. She had a birthday cake in her cart. And I think she had a candle or two. So somebody's birthday party, right? So finally she makes it up to register. And I hurry up and run behind her. And I'm telling the cashier, I got her. Don't charge her. Lady goes, okay, you don't have to pay for it. She goes, what? How's it free? And she pointed to me. I just smiled to her. I said, don't worry about it. She's like, huh. No, thank you. No, I appreciate it. Nothing. Just out the door we went. That was a weird feeling. I didn't know what to think about it. I still don't know what to think about it. I guess entitlement. Maybe they thought that, maybe she thought I was trying to hook up with her or something to that effect. But that was only one time that I didn't have the experience of feeling like it was a blessing. And I'm sure, if you do it enough, you'll probably have one or two instances like that, but it never discouraged me of doing it. But if you sit down and you make a budget for in your trading profits each month, you're going to go down to the shelters and drop off blankets, food to the places that give to the public. And you do so without any, I'm going to get a tax write-off. Here's my information. If you do it that way, there's your reward. Test and see if what I'm telling you isn't true. Do it with the right motives. And that little bit that you're doing is going to magnify in your life in ways that you can't even imagine. Versus, I'm going to make so much money and I'm going to buy all these things that I see other people do that I want to have. I wish I had a car like this. I wish I had a house like that. Let me tell you something. Having all that stuff, it doesn't make me happy. Right. What I love most about my life is I don't have to go to work for someone else. I can choose how I wake up and how I spend my day. And largely it's all of you. You are my day. You are my week. You are my month. And this year, you're my entire year. My day is spent with how I'm going to pour myself into you, what I can do to improve, answer as many questions as I can along the process of doing whatever I'm teaching, discussing, and also get a therapy session out of it. But cars and fast sports cars and high dollar ticket things, it doesn't make you happy. It won't make you happy. And as soon as you share it with social media or you show your friends, as soon as you do that, it's done. It's done. Then what are you going to do to up it? How are you going to outdo it? For some of you, you're going to be in a lease payment for that sports car. We're going to lease another one. Look at this one now. And then look at this one. And then look at this one. At some point, you'll wake up and realize that this isn't what it should be about. The little hearts underneath a tweet or whatever Instagram does, I don't even know. It's too insignificant and short to last. You want your life to be purpose-driven. You want to be, in some capacity, philanthropic. You want to be a giver to some degree. You don't have to be a nutcase like I am, where I'm giving you more time than I give my own family. But in my mind, and this is what I reasoned with my wife with, I wrestle with this. So if I do this, I'm hoping that I'll have peace about it, and I don't have to do it. And that's why I'm doing it, and that's the drive behind it. I could make a lot of more money. I could be making millions of dollars every single month, again, over and over and again. I could charge for my live sessions. I could create that little join thing where only people could be a part of it if they paid. I don't want to do that, and I will not be doing that. I don't know any other way for the people that are on the fence about me and what I teach to finally say, okay, I'm going to try now. I'm not going to waste my time with a guy that's going to try to sell me something later on. I'm not selling nothing. I'm doing it in front of you. I'm calling it in front of you live. Everybody can see the same thing. If I'm right, you all see it. If I'm wrong, you all see it. I'm taking your attention to the very things you're supposed to be focusing on right now, and you're learning in your process of taking in all this information, the very right moment at the right time. What subject matters am I talking about? The ones I'm teaching in that order. Should I stop studying all the other stuff? You should be only focusing on what I'm teaching right now. All of your attention should be focused on this. Because if you look at the live sessions, if you watch them late, like if it's something you couldn't be a part of real time, they're at least an hour long. And now if you're watching them and you're doing it the right way, you're not just watching it, you're pausing it, rewinding it, listening to what I said, screenshotting it, and then taking notes. That's not an hour event. It's longer than an hour. And I'm doing it now every day. And how much are you going to study outside of that? Looking at something else. All these other videos you can go back to. They're not going anywhere. I'm not deleting any of the videos. They're not going anywhere. But you will not have this experience after this year. I'm not going to sit in front of you every single day over the chart and talk about what it should and shouldn't do. This is the only time you're going to see that. So if you are looking for that experience, it's being given to you for free. Second Friday of November, it stops. So it doesn't make any sense for you to look at videos that are already up there and been up there on the YouTube channel for months now. They're not going to be deleted. They're not going to be removed. And they're not going to lose any of their effectiveness. The same lessons in them now will be effective in the future. But what advantages will you dismiss and not participate in by not watching the live streams when you can? It would be foolish for you not to be engaged, at least with that, and keep your focus on that. How easier could I say it? Pretend that you just started as a paid mentorship with me, just like I was doing with my mentorship group. Look at what I'm teaching you, what I'm showing you at the beginning of the week, throughout the week, the reviews, and the live streams. Keep your focus there. Do that. Walk forward with me each day, each week, each month. You will get what you came here for. When you have more time, then you can delve into those other things. But you have to at least consume what I'm producing each day and each week. That's the fresh bread. You can still live off of the old stale stuff that's on my YouTube channel. That stuff still feeds. It still does good. But like anything else, if you want it fresh, piping hot out the oven, you're getting it every single day here. And by focusing on that, you will get the sustenance that you are seeking as a developing student. Your focus is being guided. It's being directed to what matters most right now. Over time, it'll be more. But in the beginning, this is sufficient. So, as a reminder in closing, I will not be trading on Monday. I will not be doing anything. I will not be talking about the markets, not Forex, not futures, not anything. I will be providing a teaching lecture that I will have up hopefully by 1 o'clock Monday afternoon, my local time, New York time. And with that, I wish you all a very pleasant weekend. Have, you can probably hear my son talking to me, he's hungry. Have a good weekend. Enjoy your
Like even that, bro, I don't even know. Like I think that like there's still value to that. Like personally. All right, I'm gonna low key grab something to eat. We have had manipulation above true day, in 75% of that wick on dollar. We have this breakaway gap here. Really, I don't really have a. Well, I'm gonna form a bias and narrative in a little bit. Overall, I'm expecting to see some form of consolidation here. We're now within this doing range high to low. Within a doing range high to low. I thought I had those levels up. Oh, they should be on the other chart. Yeah, so. Alright, I'm going to be back in a minute. and then I'm gonna take notes, and then we're gonna formulate a bias and a narrative, and then we'll tape read the AM session. Hey, first break of the stream. Work a little 7.5 hour shift.
Good afternoon, folks. Good afternoon.
I'm,
Give me an
I'm
audio check real
we're,
quick before I start jobbing. I'm using my Bose headset today, so I'm not sure if you guys can pick me up clearly. The volume's good. Just give me a 5x5. I'll be looking for a tweet in every response. Thank you. Appreciate that.
Oh, bro's on his shit today.
Hang tight for a minute or so. I'll put it by 4:30. All right, folks. Welcome back. This is going to be a very long one. Usually when I say it's short, it's a long one. So we're going to try to do a short and succinct presentation. It's about a subject matter I have very little experience with. Obviously, I mentioned on Twitter moments ago. I was asking folks with more insight and experience with these funded prop challenges and accounts that certain companies out there make allowance for people. And I asked several times, for the future side of it, and everybody was telling me, the Forex, prop fund and things like that. That wasn't helping me. So I needed to have some kind of framework to present. I get asked a lot, if I could talk about how to pass a prop fund challenge. I think I can speak pretty freely without me actually going out here and doing this, but I know some of you are going to be like, okay, just do it. It's so easy, so do it. You're essentially trading a demo account anyway. So I find it funny that people that will rag on me because I'm teaching with that medium for the protection that it offers me because I'm not a licensed financial advisor, that you're doing the same thing when you're trying to pass these prop fund challenges.
That's kind of true.
I just want to toss that in there as a reminder because if it's that important for you to pass it to get to your funded account, what makes it any less significant as a teaching medium for people that have no experience? So just post that as an opening question for all of you to chew on. All right, so how to pass a funded prop challenge. And I mentioned earlier by way of a poll, I knew I didn't need much time to see it. Right away, everybody was going to the $50,000 threshold. And I think most of that is because of the cost. Because you don't know if you're going to do well. You don't know if you're going to be successful. And in fact, if everyone was being honest and literally put on a polygraph, do you believe you're going to pass this? Probably not. They may say yes, but they'll fail that as a lie detector test. But most of them probably already expected they're going to fail. But they just want to see what's going to happen. The equivalent of what every trader does with a demo. Well, the charts are moving around. I got time. I'm on lunch break. I got my phone in my hand, smoking on my cigarette. Take my 10 o'clock people time. Let's do the smoke break in. Let's try to do a demo trade and push the button, see what happens. That same mentality carries itself into these funded challenges. They think, well, what's a couple $100 if I go in here and spend $165, $175 for a funded account challenge? Hey, I might win, right? I might get in there and might get lucky and get something. And then that might encourage me to keep doing this. There's a lot of times folks that have reached out to me that have failed these challenges and asked for me to talk on it, speak on it, give my mind and opinion about it, and how I would do it if I were doing it. My son is about to do one. He did not pass. I saw it in passing, but I have so many tweets. If you see it, you'll know what I'm talking about. Somebody said that my son passed a evaluation. No, he did not. The only thing he did was he used the 14-day trial. So I was working with him in that regard, and I showed that screen recording with him. 95% of the executions he messed around with trying to do his own thing, pushing the button, seeing what happens, getting familiar with the platform. I just watched because I'm not familiar with it either. But he had some drawdown, and I helped him correct that on Friday, and you watched that happen. Every one of those trades was me telling him, do this, don't do that. Well, you can hear some of it in the little screen recordings. So no, he's not an ace. He's not a trader that can go out there and make money right now. He's absolutely green. In fact, he's very nervous because he thought it was going to be a lot easier for him, like video games, because he's a video gamer. So I'm going to give you my opinion on how I'm going to work with him in passing his evaluation. But one of the concerns before I go into this topic, I know there's a lot of funded accounts. Well, I shouldn't say a lot. I shouldn't say that word a lot because I don't know how many there are. There may not be a lot, okay? But the bigger named ones are reaching out to me and tweeting to me, hey, look, we're waiting for you to do this. And to which I'm going to publicly respond here. I also know that you're waiting to do trade copiers. I'd do the same fucking thing. Trust me. If I saw somebody this good, I would be copying the fuck out of their trades. Okay. So of course it makes perfect sense. You all want me to sign on with you all. In fact, you probably would pay me to do it versus me paying you. I get it. I understand. But I'm not going to rep any one particular company. I mentioned in passing, I won't say the name here because I don't want to get the impression that I'm in an affiliation with any one of them because I will never enter an affiliation with any funded account challenge, prop fund account. I won't do those types of things. I'm not looking for partnerships, and I don't want the drama that comes with all that shit. So I like to be a free agent where I can talk and give my free opinion and it's not influenced by anything. If it's good, I'll say it's good. If it sucks ass, I'll tell you it sucks ass. Don't ask me about brokers because they all fucking suck. You're going to lose money and you're always going to blame the broker. Sometimes they run shitty operations. Sometimes their customer service is lacking. It is what it is. You're not going to find a perfect broker. Every broker out there sucks. There you go. There's your blanket statement. But my approach to teaching my son Cameron, who is now 18 years old, he settled on a company that I don't know anything about. And there's a gentleman I support with viewership on YouTube. He uses them. And I'll just say that, and you can kind of like draw the the lines together and see who I'm referring to. But he wanted to do the $150,000 account. And I asked him this morning, I said, why do you want to do that? He goes, because it's more money. And I said, what's wrong with the 50,000? Now, some of you assholes that are listening, always look for some kind of angle to troll and rag me and whatever. It's not about the cost, okay? It's the basis of why does a trader choose to do that higher rung, especially as their first option. Just because you can afford to do it doesn't make it right. 99% of you that are doing these funded account challenges don't even have consistency yet in demo. You're just trying to gamble. You just, what happens if I get a little bit of scratch, a little bit of money? That'll really help me. That'll motivate me. Then I'll take it serious. Then I'll learn. Then I'll start watching those fucking boring ICT videos, right? It'll be something to inspire me because I got some money in my pocket, some bread. When in fact, it's not advantageous at all for one of you to start with that higher end amount, whatever the higher thresholds are. I know there's other companies out there that offer larger quote unquote account balances, but you don't have those account balances. And I'm not going to beat up the whole idea that, if they say this is the most you can lose, this is the size of account you're trading with, that's bullshit too. That's not even accurate either. That's not an accurate assessment. You're not trading with whatever the max loss is. Because think about what you're saying. You're trading with full fucking margin, no stop loss, let's go for broke on every trade, and you want to lose your entire account. That makes no sense. So the folks that sit on the sidelines and rib anyone that does these types of trading venues, they're talking out their ass too. So I'm trying to, and this is why I waited for a little while, and I'm probably still premature talking about it today, but because my son's about to endeavor in it, I'm sharing with you one of the things I've brought to his attention. And he's kind of wrestling with it. Being a typical 18-year-old, he thinks he knows everything. Even the shit that I do, he thinks he has a strong opinion about. And I'm trying not to kill his spirit. I don't want to kill his will. I don't want to kill his spirit. I want to guide him. Okay, kind of like steer him in the right direction, but also allow him to fail a little bit. There's nothing wrong with that because he's going to learn more from doing that. But he wanted to do 150,000. And I asked him this morning, I said, why do you want to do it? He goes, because I can trade bigger. I said, do you remember what it felt like on Friday when that was just a trial? That's a trial. And I know the company that knows that platform was their company, you're not going to know that account because it's not his account. I had a friend sign it up with his cell phone number because I know all you motherfuckers are waiting for me. So anyway, but he will obviously have to do it with his own. And one of my concerns is this, let's just say he follows the rules I'm going to outline here. Okay, I have them written down. If he follows them and he does well and he makes money, I'm concerned that what I'm outlining here isn't like gangbusters types of returns. It's nothing like that. It's bread and butter, build a baseline income, and start there as a foundation. Not win Robin's Cup type returns. Not fucking double the account in a day. Not get $15,000. That was just me fixing the shit he was doing in the account. That's all that was. His aptitude as a trader is infantile, like starting right now, baby tips level, preschool. That's where he's at. He's never had an active interest in it. He works at a coffee shop, and I've made him work that job. He pays for his own car insurance. He pays for his own gas. He pays for his own spending when his little girlfriend, which is visiting right now. She probably hears me raising my voice thinking, who the hell is he talking to? But I make him do that because I want all of my children to feel the desire to do better. Giving them money isn't going to help. It's just going to make them do what my oldest son thinks. Give me more. You gave me this, so give me more. And I don't want to create and cultivate that in the other ones. I learned my lesson with my oldest, and my daughter has no interest still in trading. She just wants to be a perpetual college student. So hopefully they see what Caleb's been doing, which is one of the instigations with Cameron. So Cameron has seen what Caleb is doing. So now my hopes are happening like I wanted to see them unfold. Not to the speed at which I would like to see them happen as a father, but at least it's progress. And I'm trying not to be that typical dad. Join my alma mater, go to my college, do everything. I want them to find their own niche and their own little way of doing it.
All right, I just wanted to listen to a little bit of that while I was eating. How many hours do you backtest? At least 5 or 6. But like my version of backtesting is a little bit different. I backtest how ACT says to backtest. Therefore, I'm gonna listen to a Big Boss. Alright, got some notes to fulfill, and then I'm gonna formulate a bias, and then we'll probably I don't know how long the notes are gonna take, but we'll see. I'll get into the notes. Hey, appreciate it. Thank you. My alarm is just going off. I gotta turn that off. My charts. Well, that was just a. I do not care about other people's results. Look, he just wrote a paragraph there. What type of news do we have today? I haven't even really looked. I need to. Oh, we have 8:30 news. Yes, delivering right to that. All right, so New Day opening gap. We'll have a an effect on price here. We went all the way down to just new week opening gap. Like, I want to see how we're trading more. I want to see what news does first. If I were to be in a trade, I would rather be in a possible long up to these highs. London low. Institutional order flow entry drill because we have an imbalance right here. Backtesting, advanced backtesting. Oh, are you talking about this? Oh, I don't know. I just said like advanced backtesting. I don't know because I was trying to be like. I would say there's no difference. I backtest a little bit differently though. Like I don't go to try to take entries. How much risk is good on a 50K account? Whatever feels right to you. I would suggest risking small. Stay consistent to that, but I mean it's your account. It's gonna be personal to you. You might have different risk tolerances than I might have. Certainly, right now I don't trade with live funds. So if you were to do a 50K combine, I would recommend risking. You have $2,000 of drawdown. I'd recommend risking no more than $100 per trade on a combine. But also you could be a little bit aggressive with it. But I would recommend just saying, hey, bro, I'm just gonna take this at whatever pace it takes. Risk $100, maybe $40 per account, and then we're just gonna see what happens. Am I gonna finish these in time? I don't know yet. I don't know yet. Honestly, I might give it like a year and a half. Like I'm being very conservative for me personally. I'm gonna just be a tape reading baller for a minute. What's good, Dustin? I got 3 minutes. See, like, I don't know. I definitely like those Twitter Spaces, bro. Definitely some sauce in them. I'm gonna try to 85. How long do you think that's gonna take? Honestly, just sometimes I just be listening to them like while I'm chilling. Okay, let's look at the market right now. I'm looking at that opening price. You have a actually, I think I was measuring the 15-minute wick. Okay, constant approach from the 1 hour wick we are holding. We have taken sell side liquidity here in this imbalance. I think we could. I don't know, we're just kind of in some consolidation conditions. Yo, what's good, Evan? Long time no see. Yeah, for real. It's been a minute. It's probably been like a month at least. Oh, I've just been chilling. You know, doing this same things every day. How about you? How you been? How you been? We have news in 1 minute. I don't think DXY will manipulate. I guess not. That was quick, bro. I'm not gonna lie, nothing looks too appetizing right now. I do want to see these highs though. Look how well we held that new day opening gap. I mean, we're already within probably 75% of that. I would agree. I would agree, Dustin. I was kind of anticipating this. I'm gonna pull up my dealing range here from. Oh, I already have it. Bro, that just pull up out of nowhere, or have I just not been noticing it? So I'm expecting a maybe return back into premium, but even then, like, we don't really have any upside draws besides this imbalance. So I'm looking at this imbalance as like the only thing that's favorable. We've already taken buy side here, we've already taken buy side here, and we have this SMT here. I think we're predisposed to consolidate today. What's the shit on your chart? This is new day opening gap, the current new day opening gap, and then this is the new week opening gap. What do you do for a living in the meantime? I do this. I do this. I got monetized on YouTube, so I'll be making like 2 cents a video now. I'll be making like a good old 3 cents per video. That's sick. I can now tell my parents, yo, look at this. I'm making money. And it's like $2. Dude, honestly, I bought this light, like the red light in the back. And I thought it was an L at first, but I think it makes the lighting so much better. And I got like LED lights right here. It's got like some Sith lighting. It's kind of messed up right now. I feel like it's too far faced to the wall, but notice how all this happened below true day. I mean, it's a nice buy model here. I definitely want to wait for 9:30 for sure. I got a soft bias. Look like a villain, I would agree. It's like some Sith Lord type of Star Wars. I don't know. I don't really watch. I'm not like into Star Wars like that. Overall, I'm definitely anticipating this high than this imbalance here on ES. Let's look at everything. Let's look at everything. I want to look at everything. Everything. Okay, ES is already taken buy side. And then ES has this balanced price range here. So I'll be looking for that. We're currently within that gap right now. Seeing if we want to fill this a little bit more. On the 15-minute, this is not an imbalance at all. I mean, we have this small portion. It's already been repriced. I want to focus on just this right here. Preferably that. But we've already had buy side delivery there, so still gonna note it. We have taken sell side liquidity. Oh wait, I'm shrieking. Yeah, I think today is gonna be there's nothing to trade, honestly. There's no clear draw on liquidity. that is nice how we respected just the top end of that new day opening gap, but I think that this will be a good draw on liquidity later on in the week. I'm pretty sure. I would assume because we put a high right above that new day opening gap, so we're likely gonna draw to that for fair value. Let's check DXY. We're currently working within this wick. I think DXY is prone for more retracement higher. Notice how DXY and ES or NQ and ES both displace higher. I personally don't like to see that. There's like zero manipulation on news. I think on DXY, it's more likely that we're going to draw up into these highs than it is to maybe these lows, but we have equal lows. I just don't think it's the best market right now. To be honest. Check Discord DM? I will in a minute. Haha. Hey, the weekly outlook coming to fruition. I want to see these lows get traded into. Notice the volume imbalance. We either respect off of that. We then get daily changes to delivery. What percent of this order block do we respect? I mean, threshold never gets traded to. Today can be an expansion. That's a CL, bro. I've like never traded CL, and I don't think I ever want to. I've just heard bad things about it, but I think what other people say is not what should be the end all be all, but it doesn't look very. It looks all right. Let's look at some bonds. I don't know if I have the right like bond. Well, we have some divergence with the bond triads. Do we? Euro, nice delivery off of 4 hour. Looks like we want to head back to IRL here. We might create a swing high here, but I'm anticipating to see some consolidation on Euro. We just took a higher tap. We just took a draw liquidity. Therefore, I don't think we're gonna be in any rush. GU, same type of thing. Like I'm just not expecting much. Can maybe see this imbalance. Nice delivery on this pair. Looks like you want to draw back here. UCAD, not very nice delivery. Let's look at DXY's like one last time. So we have this imbalance right here. We also have this mitigation block. And we've just left these equal lows. So they're priming up retail support sentiment. So do we want to draw back into this imbalance and then flush this support? That could be a possibility. We don't have a 4-hour imbalance. We have that 1-hour imbalance. So unless we tank, I think we're going to see higher prices. Which would be lower prices for NQ and ES today. And then it would also be lower prices. So is this star right? I need to, because bonds we have an SMT. See, these are the yield though. Regardless, we do have SMT at the lows. We're so close to sell side though. Can you check your USD? Kind of did. Overall, I'm expecting consolidation. Alright, looks like we're about to take buy side there. It's kind of just like a wait. A sit and wait. Oh, that's equilibrium of the parent dealing range. We're now in equilibrium of the parent dealing range from body low to high. I was talking about that in the market review. We have a big wick here. Big news wick. This honestly is like, it's more intense than, like, that's pretty intense. Dollar and indices are looking kind of bullish. I'd rather see bear sentiment play out today. I would rather see lower prices. Overall, this is a consolidation. Something to accept. Something to note. Something to be careful of. Dang, Apple's at 235. I remember when this thing was at like 178 a while ago, a while back. Like, what happened? They just... So we're gonna have a gap higher from previous session close. Waiting for 9:30. That's what I'm doing. Waiting for 8:30. Bro, my legs are kind of fried. I went for like a decent run 2 days ago. We do have a divergence at these highs are too clean to not get ran. I want to see those highs get ran. If they don't, I'll probably stay on my hands. Overall, I'm waiting. Just waiting. We're about to draw back into that order block. Let's see if new buying will occur here. I need to. That's definitely got some value in it. Avoid the fear of losing. I definitely am paralyzed by that. Not paralyzed, but I struggle with that sometimes. Think about it. We've drawn into this 1 hour imbalance here. We don't have any clear draw on liquidity. No clear draw on liquidity. I'm gonna note that. I'm gonna put that in my morning analysis in my own server. And then I'm gonna have my tape reading ready. Should I just do this on Notion? Yeah, I need to start just doing this on Notion. What was this? Oh, that was an hourly imbalance. This imbalance though isn't. Okay. At about 30 minutes till market opens. Oh, I forgot to replay to that. She's there. All right, I might journal this day. Then 3 drive after a big sell side liquidity pool is taken. We are quote unquote exhausted. We've already mitigated that imbalance. So this now becomes a draw on liquidity. Then we have this high right there. Let's get market open. Equal highs left. They're gonna run out that sell side. Even here, like it's there. The model's there. Market structure shift. Fair value gap into that boy, and then a fair value gap out. Not gonna lie, I probably would have been looking for this one to get traded to. Oh, you see? I just sniped that, bro. You see that? It's happening within the 1050 macro or 950. I guess you kind of gotta like double click it. 250, 150, 1250, not 21, 1250. Lunch hour, we get a retracement. There's really not much within this day. I'm also just gonna screenshot the 5 minute. Okay, what is the market currently doing? I don't know if we do have to take these highs here. I have a soft bias. Overall, I kind of want to be bearish a little bit. I don't have anything that I'm submitting to. Really looking forward. Eight hour shift. Overall on ES, we have taken this buy side liquidity pool. We are in a 1 hour imbalance. Notice how we dropped down. We have this 5 minute imbalance there. Submit to these candles. Below 8:30 price and below true day open. So all I can say is that we're likely gonna head to buy side. I want to see 9:30 though. I do want to see that 9:30 price. Dang, we low key got 20 minutes. I kind of want to tune into this.
For the week, all you have to do is find 3 5-handle runs, and there's just 15 handles. There's just $750. The pressure is not being placed on you. You're removing all that pressure. You got to perform. You got to do it quick. Social media is fucking expecting you to do it quick. Fuck social media. Fuck.
Oh, but
Then you can go to the fucking pub and hang for the entirety of the week. Remember, this is easy stuff. I know some of you, these rock stars out there that have YouTube channels, they're laughing, saying, "Oh, 15 handles. Everybody can do that. Everybody can do that." Yeah, a lot of you can't. I'm giving you an approach. My son Cameron can't do it. He's just starting. He can't do it. So I'm going to teach him to do these steps here. There's 15 handles divided over 3 days. 3 trading days out of the 5 over the course of the week. All he has to do is find 3 5-handle runs. And there's just 15 handles. There's just $750. The pressure is not being placed on you. You're removing all that pressure. You got to perform. You got to do it quick. Social media is fucking expecting you to do it quick. Fuck social media. Fuck Twitter. Fuck Instagram. Fuck YouTube. Fuck Discord. Fuck the trolls. They're not paying you. If you get it right, they're not paying you. If you get it wrong, they're going to laugh at you. Who gives a fuck? Stop letting them know about what you're doing. 3 trades, 5 handles each. There's your 15 handles for the week. Once you get it, you fucking stop. You turn it off. Then you can go watch Netflix. Then you can go to the fucking sports channels. Then you can go to the fucking pub and hang out with your fucking bullies. Make fucking cookies with your girlfriends. Whatever the fuck you do, like my wife does. 15 handles over 2 days, or 2 trade setups at 7.5 handles each. There's your 15 handles. 2 trades, or 2 days, 1 trade in each day. Now remember, I've already talked and taught you that you can trade in the morning session. Then you can trade in the afternoon session. For some of you that want to do the reversals, you can use the lunch hour to run on the stops. There's really 3 really good setups each day between 8:30 and 4 o'clock. But if you're going to use a 1-minute chart, there's a whole shit ton of 5-minute runs, or 5-handle runs in a 1-minute chart. Shit, they're all over the place. Lots of them. You can't see them yet live, just like Cameron can't see them live. That's fine. But once you learn what I'm teaching you this year, you will walk through this challenge like it's nothing. It's easy shit. What makes it difficult is they give you the rope to hang yourself with it. They're giving you permission to do something you shouldn't do. Trade up to 5 contracts. You're going to fucking lose. You're going to lose. You shouldn't have a drawdown of 2%. You don't want to risk a whole lot. You don't want to have a $1,000 drawdown on the day. You don't want that. You want it about $300, give or take, $350, $300. That's about average. Oh, it's too much. I'm scared. How much have you lost trying to learn how to trade with a live account? How many times did you reset that by putting more money into it? I'm not a fan of these things, these funded account things. I don't have an affinity for it. But I know it's a resource that's being made available right now. So it would be foolish of me not to at least outline how, if I was being told this is the only way I could do it and start all over again, this is what I would do. Now, clearly, I can trade more handles than 15 a week. But putting you in that situation, like if I lost everything, obviously I'd be all fucked up, right? I'd be nervous. I'd be depressed. I'd feel hardship because I don't feel that now. And I had to start all over again. Maybe if I was living in a studio apartment crammed up in there with my wife and my youngest son, and I got 2 dogs and everything's piling up on me. I'm scared because, what does my family think's going to happen next? I'm trying to put myself in a situation where, because I can't, it's hard to do that now. I can remember how it was for me, but I can't really say exactly how it's going to be, but I'm trying to paint the picture that would be equivalent to what your situation is right now. You're having a hard time making your ends meet. You want to do better. Okay. So this is one medium that you can use right now while it's available. This is how you would do it. There's 15 handles divided up over 5 days. Listen to this shit. Every day, This is how I teach my son. This is how I was teaching him on Friday. He has to get over the fear of taking a trade. He's afraid. Friday was a manifestation of that right in front of me. And I even told him where to buy. And he was afraid. He didn't do exactly what I told him to do. And it wasn't even real money. And he was afraid of the outcome being what? Incorrect. He wants to be rewarded with correctness. Fuck correctness. It's profitability and managing risk. Preserving capital is the #1 goal. Every day, Monday through Friday, how many times does the market move 3 handles? Let me say it again. How many times throughout the course of the day does the E-mini S&P move 3 handles? All fucking day long. All day long. What happens if you see a move that's already started, okay? Because I'm going to put your asses through this. In the next 4 weeks, you're going to be doing a lot of this. The price run is running for a buy-side liquidity pool. Premium, something premium above market price. So we're expecting price to go higher, okay? It rallies away, and it dips down into a fair value gap. We can frame the trade risking 5 handles. I'm going to tell you to do what I told my son to do on Friday. When it enters that fair value gap, I want you to push your demo button to take that demo trade. And as soon as it moves 3 handles on a limit, you're going to exit. What did he just say? This guy just said, risk 5 handles to make 3. Yes, because I want you to see how often that can happen. You need to stop this myth of risk to reward ratio. Only works if it does this. That's horseshit. What works is price delivery. You're not gonna blow out if you take a full 5 handle loss. But if you're scared to take trades, this is how I beat it. I got in, had a little bit of move, and I got out. I got into a trade, had a little bit of move, and I got out. And I saw it didn't hurt me. It didn't go to my stop. Okay, let me go 1 more point higher, 1 more tick more in the bond market, because I was learning it here in the bond market, doing these types of things. I was afraid of the speed of the bond market. It wasn't really moving a whole lot back then, but it felt like it was speed. Today, if you could go back in time and literally watch price deliver how it was in the S&P in the 90s, you wouldn't want to trade it. Three and a half handles, 4 handles that's a good day. That was a good day. You're spoiled, rotten right now with these 100 fucking handle days, 50 handle days, 30 handle days, and it's the average daily range. Lots of opportunity. You're spoiled. You have no idea what it was like for us. And before that, when it was a very small range in the 80s before I even was trading. The S&P was down in the hundreds, didn't even cross the 1,000 threshold. And we're trading in 4,000s. And the ranges are wider. Trading like this, folks, teaching yourself to overcome the fear of getting gut, that's what it does by default. It lowers your expectation and removes the uncertainty of what happens when the market compresses into very, very low volatility, because that could happen too. Who says it's never going to go back to those low thresholds of volatility where we're having 4 handle daily ranges in the S&P market? I know it sounds like it can't happen right now, but I can tell you right now, there was not a day back in the 90s where I thought we would see 100 handle daily ranges. I couldn't fathom that. It was completely unrealistic at the time. But here I am as a 50-year-old, I'm seeing it. And some of you guys are 20 years old, and you weren't even alive when I first started trading. You think that you know everything because of what you experience right now. And you would never fucking survive in an environment like how we cut our teeth back in the 90s and 80s and before me, where the handle movements for the entire daily range was less than a stop loss on a trade idea that I'm teaching you with this model. So if you learn how to trade like this, overcoming fear of getting in, guess what it also does? It teaches you how to trade in very, very low volatility, and you'll always find fresh bread. You'll always find a way to make ends meet. You don't need big moves. We prefer it, but you don't need it. You don't need it. And every time Dick and Harry gets out there selling courses and shit, they're trying to teach you these 500 R multiple fucking setups that you got to do this or you're really not succeeding. That's horseshit. It's horseshit. They're not getting those. They're scaling out. They're getting out early. So those R multiples are not even real. They're implied. But you don't need those big moves. You don't need that. It's about making money. What if you made extra $150 a day? You're walking down the street, you see $150. Every time you pass this corner on a step, there's $3 bills sitting there under a rock. You keep coming back, you find, are you going to walk by there one day, the 6 or 7 times, say, you know what, fuck that, I'm not picking it up. I'm sick and tired of seeing that $150 every day. Fuck no, you're not going to complain about that. You're going to keep doing it. So why aren't you doing that with your trading? It's just 3 handles. Just 3 handles. It's happening all day long. You're not thinking about it. Well, how can you do it? Market goes down into a fair value gap, it expands and trades higher. Okay? It moves away. It's not reached your buy side liquidity pool yet. It's not reached your premium fair value gap that you think is the draw on liquidity. It's going to go higher, keep reaching, pressing higher. Nothing's indicating it's going to go lower. You got plenty of time. It's still early in the session. We're not even in the last hour before lunch. We're still in the 10 to 10:30 window, New York local time. And the market trades down into a bullish order block. Well, guess what you can do? Use that order block to buy, 5 handle stop loss, 3 handle limit. Do that 5 times. There's your 15 handles. And guess what? You're in and out of that probably many times in less than a minute or two. That's high frequency trading. That's all these high frequency algorithms do. See, you think it's stupid. Oh, it's dumb. Look, you're risking more than you're making. You're making more trades that way than you're going to find trading with 3 to 1, 5 to 1, 10 to 1, 21. You think the designers and coders of these algorithms that are taking those types of moves all day fucking long, up and down in the marketplace, you think they're sitting around and wondering and worrying, is their risk to reward model matching up with what every retail trader thinks it should be? When every fucking retail trader out there is working a fucking job, changing fucking oil at Jiffy Lube, and they're going to worry about the fucking opinions of risk to reward over the guy that's changing oil or lying and saying he did and ripping the people off. Come on, man. Seriously.
Some guy DM'd me the other day on Twitter, and he's talking about how he might quit trading.
That's the minimum. That's the easy shit. I'm going to point those things out this week live, and I'll show you what high frequency trading, where they move in and where they move out. You'll see it. Those little tiny little fluctuations, they in themselves can replace your job, and you don't need to have a full run. You don't have to even get to a buy side liquidity pool or sell side liquidity pool. 3 points of fluctuation. That's happening all the time. You can find that on a 15-second chart, literally every 15 minutes. Don't believe me? Go in and look for it. It's there all the time. You think these high frequency algorithms are sitting around in park all day long, waiting for a specific time of the day? Fuck no. They're in there constantly, chipping away, boom, 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 firing in between all these micro fluctuations. And they're making billions. It all adds up. And all you're worrying about right now is making one of your ends meet. $50,000 account. Doing this, you get good at it, right? Okay. You start making a little bit of scratch. So, okay, now I want to double this up. I want to build up from this. And I go to what? What's the next threshold? You can go to another $50,000 account. So that way you're managing the equivalent of a $100,000 plan. It's not $100,000. And you're going to do the same thing. But you're just going to do it single contract in one, single contract in another. You're not increasing the risk. You're not parlaying the number of contracts because now you're experienced, so let me just take on more risk. No, it's one contract. One. I made $25,000 with one contract with lots of losses that I didn't need to take. Can you live on $25,000 a month? I'm being sincere, folks. I'm not trying to be arrogant. I'm not trying to be a prick. How hard would it be for you to live with $25,000 trading with one contract over the course of, say, 5.5 weeks? That's a pretty good.
Okay, we turn it off. We're turning it off. Let's lock in. Let's log in and let's read this boy. Okay, so what is price currently doing? We have this order block. We accumulated new positions at new positions. We respected this imbalance here pretty much perfectly. Off of the current new week opening gap, I need to change this. Why did this get messed up? Current new week opening gap, and we're holding that new day opening gap. Look at the 15-minute bodies. So I think the favorable draw on liquidity is for sure, or is more likely going to be these highs, and then maybe this imbalance, and then these new day opening gaps too. If you look on the 5-minute, what do we have? Kind of just consolidation. I kind of have a pretty soft bias, so I want to see what's gonna happen. There's nothing that looks good to trade, and I need a little bit more. ES is now taking buy side here, and we could take buy side again. Just doesn't look the best. Like this in itself just doesn't look good. We have volume imbalance down here on ES. That could get traded to later. We zoom into the 1-minute chart. We're consolidating before market open, so I want to see which side of the range is. Are we going to take first? I would assume maybe the highs first, but if you look at this, What other PD array do we have that we might refer to? Well, we have this 3-minute imbalance here paired with that volume imbalance down there. That could possibly be an area. That would be like my last line of defense. Because we have this order block, this imbalance, and then that volume imbalance. And technically we got this volume imbalance first. We have this order block. We have this propulsion right here. I'm gonna stay on the higher time frame until we get something. Wait, there's a new day opening gap right there. Was that noted on the 1 minute chart? Oh, it is. I'm gonna stay on the higher time frame until I see something, because I don't have a bias. Dang, I've been live for 9 hours. It's crazy. So I don't know. We're definitely gonna be reading the AM session. But the max amount of time I can stream for is 12 or like under 12 hours. So I might have to end it a little bit earlier or cut it short. We'll see. Hey, appreciate the sub. Zavinci. Appreciate it, bro. I'll be straight up. I would recommend taking it a little bit slower. You know, that's what I would recommend to you. Take it a little bit slower. 100%. That's just my opinion, though. I have the mindset to where it's gonna take me a lot longer than it's gonna happen, so that I don't disappoint myself when it doesn't happen. You feel behind? Like I've blown so many. You feel so behind. I feel like I've blown so many extras and accounts. I'm just ready to really get this cash out. Alright. It seems like you have a gambling mindset with this. There's no such thing as being behind. Trust me, bro. I used to be addicted to gambling. It's exactly how I felt. I felt like I was behind. I felt like I was wasting my time. I felt like I was just wasting money. I'm in a hole. Bro, the best way to get out of a hole is just to stop. Just stop. And it's hard to do, but just stop and then actually learn how to trade, you know? And then that's what I would recommend. Like, do you think if you get that funded account today, like, do you think you're gonna keep it? You think this time's gonna be different? I don't think so. I think same result, different day. I mean, there's no such thing as being behind. It's your own race, your own journey. It's also never too late. Never too late to start. So I was gonna be looking at the higher time frames until I establish a bias. So that's what I'm gonna submit to early. I might pop into the lower time frames just to see the action. I am aware of London low could be a possibility. I would ignore this wick, but I think as of now, buy side's more favorable. We're just within this order block. So it sounds like you're not a good loser. Do you just not want to be wrong? Because that's likely a possibility. All right, ES is within a 15 minute imbalance. That red shaded area is a 5 minute imbalance. It's in a whole 5 minute imbalance, but that portion that I have highlighted is like a small. It's the unfilled portion of that imbalance. So technically, that still is an imbalance. I'll show it. Oh, I was like, what? Okay, so we are within that 15-minute imbalance, so something to be conscious of. And then we have this 5-minute balance, but it's kind of just like the one that we still haven't delivered to. I mean, like, what's the rush, bro? We said you feel behind. There's no rush. Just sit back and just say, hey, bro. I would say, I'm not where I want to be at right now. And just be aware of that and accept that. Hey, I'm not where I want to be at right now. But that does not mean that I can't get there at some point in my life. I'm going to allow myself, I'm going to sit back, and I'm actually going to give myself time. And I just want to take a break. I just want to take a break because I'm tired of doing these same mistakes. I'm grateful. I'm so grateful right now that I'm cognizant of the mistakes that I'm making. And I'm so grateful that I know that there's a way out of this. And I'm so grateful that I know that there can be some type of success. There's some type of way out from this adversity that I'm facing. Because this adversity is just a short-term roadblock to my long-term success. That's what you need to tell yourself in the mirror. And if you can't tell yourself that in the mirror, then you're likely just gonna do the same stuff over and over again. Just look at that though, delivered right to the high. That's nice to see. This could be something to where we do possibly have a reversal here, but I'm not gonna try to catch that. We are in that 1 hour imbalance on NQ. But if we just look at the overall momentum and order flow, right now it's bullish. So there's no clear trade that I like today. Yet. Well, the market just opened, so we'll see what type of opportunity that we get. Overall framework and narrative. I would have liked to seen relative equal highs here. But I mean, it's kind of just hard. I don't like my chart, bro. I feel like there's a lot of stuff on my chart. That's something to note here if we You feel impatient? Like, is it because you want success so bad? Like, what's your motive? Do you want success bad? You want to prove other people wrong? Do you want to prove yourself that you can do it? You just want money? Are you greedy? Do you want to show off to other people? Do you want to flex? Is that why you want? Like, why do you want what you want? You gotta. I would start with that. Like, what are your motives for trying to get success, or whatever it is? Yeah, I think we could. We honestly could have a run on this high today. I don't really have anywhere to frame a reversal from. Yeah, overall, I'm not really looking for a trade. I'm not looking for a trade right now. Simply, I don't like this PA. Overall, we are above true day and 8:30 opening price. Me personally, I would rather look for a shorting opportunity, but I really don't see any. It's looking like we want this high here today. And we just look at the hourly chart. Overall, like we had immediate rebounds here. I don't even see like a decent entry. Honestly, we had this imbalance that we repriced to, but I don't know, man. Uh, yeah, price action. All right, so you want to do it for other people around you? That's good. That's good. What I would recommend that I would just take like a month, take 2 months, or take 3 months, and just don't trade. Just don't trade. You're still gonna watch price. Just don't trade. Just don't trade. That's what I would recommend. I mean, it's probably not something that you're gonna want to do, because like if you're in that loop, you feel like you're gonna be wasting even more time. But time away is gonna be good for you, in my opinion. That's what I would recommend. Take 2 months, 3 months off. See how that goes. And after those months, if you don't have any improvements at all, if your psychology's worse, if you're still, I mean, I'm not trying to like give you advice. Well, I am right now, because I feels like you need it. But you know yourself best, and always trust your own advice. Always trust your intuition. That's what I would always say. Like, trust me, there's been a bunch of people that have told me like stuff to do, or oh, do this, follow me. Especially like someone you don't even know, someone that doesn't know. Like, I don't know you at all. I don't know anything about you, so you're gonna know yourself best. Red day for me. Hey, you're good. You're good. Tomorrow's gonna be open. Mark's gonna be open tomorrow, and the next day, and the next day. Maybe not the next day because it might be a Saturday, but the following Monday after that it'll be open too. It's cool. Journal that, and then ask yourself: was it a good one or a bad one? 15-second SMT and inverse inversion. I don't really have a framework yet to take a trade, so I'm submitting to these higher time frames. Not even I was just like not the 1 minute. Because I preferably like to take entries off the 1 minute. But like if there's no whoa. I did not see that. I did not see that. I'm lacking. Well, I'm not lacking, but that looks nice. Are we within an imbalance too? Oh yeah. I don't trust any of this right now. We have buy side swept here, then we have buy side swept again. I don't think we're immediately gonna reverse to these lows. Hey, we could. I would like a trade on NQ, but I don't think ES is just gonna displace lower right now, so I'm gonna wait. Yeah, I know exactly what you mean, bro. Like I've lost a lot of money because I was addicted to sports betting, and I felt that same exact thing. I know where you're coming from. Like you've spent a lot of money and a lot of time, and like you don't know what to do because you want to get back that loss, that hole that you're in. And it feels like to try and chase that hole is the best thing that you can do right now. When like the for real best thing is just to just start from square one again. Just like act like none of that happened before and just have the excuse to work harder. Because that's why I work a lot. That's why I started to work a lot because I lost a lot of money that I had before, and I was at like a low point in my life to where I just decided that, bro, like, yeah, a bad thing happened to you, and this didn't have to happen to you, but it did happen to you. The only way that you're gonna get out of this if you just work for it. And so like the good thing is just be aware that you're struggling through something right now. Just be aware that like you have this struggle and be grateful for it. You have something to overcome now, you know. It's always the first step. Just be grateful. I'm always grateful. That's just me. You like to use the 15 second? Nice. I personally don't use the 15 second. I think the 15 seconds like a little devil, you know? You don't I personally don't think that you need the 15 second. Cuz like for the market to move there has to be a narrative. And that narrative is not coming from the 15 second. I'm expecting to see consolidation. That's what I'm expecting today. You're trading complete darkness. All right, it's looking like we want new week opening gap. Look at the responsiveness. This is 50%. This red line right here is 50% of the whole dealing range that we're within. So like a bigger dealing range. All right, this is balanced here. I still don't know what to expect here. We just came back to constant encroachment of that. And we have a big SMT at these lows. $9.50 macro just opened. Yeah, I definitely need to stay on the higher time frames right now. What's the difference between a gap and a fair value gap? Well, a fair value gap's a 3 candle formation. So this is what a fair value gap would be. But a gap will like a new week opening gap and a new day opening gap is, that's what I have these levels as. And it's like a whole on gap that doesn't exist in the market. So from Friday at 5 to Sunday at 6 p.m. is going to be the new week opening gap. So there's no trading that existed within here. So therefore this area right here, like not a single trade got placed within this area. So this is going to be pretty sensitive within the future. That's kind of like the theory. The algorithm's going to look to offer fair value. I don't think there's anything here at all, personally. Checking on DXY too. These are tough conditions. Like trading compared to my regular everyday life. Like, why can't I break this face? So you're saying that your trading life and your actual life are like two different things you associate with, and like you're chill with your regular life, but then when it comes to your trading life, you just feel so messed up and dark. The Secret by Rhonda Byrne. It's a good book. I'll look into that. I honestly haven't. I have a bunch of books that I want to read in the future, but the main this might be a bad excuse, but the main reason why I haven't been reading is because I've been studying trading. And I want to get my trading down before I start reading a lot of other books, which it might be a trap because then I'm always going to be trying to learn trading. But that's kind of my approach. What's your organization when it comes to studying? So I have Notion that I use. I made a video on this before. It's pretty easy. Just go into Notion and then create a page and then just do just do the slash and start experimenting. That's what I recommend doing. But basically I have a table here that I have forward testing, which is going to be just like every day now. I kind of just started this last week. And then I have back testing right there. And then I have weekly, daily. I don't know if I'll continue with that. And then I have a tape reading section. And here for notes, I have like these pages and then ICT notes. And then I have 2023 mentorship. And I have all these pages within here. So I have lecture 9. And then I have my notes for that. And then when I went through core content, I did this like 2 or 3 weeks ago. Alright, it's looking like looks like we're going to break down here on NQ, but ES doesn't look appealing at all, to be straight up. And then core content, I was pretty work. I'm kind of proud of this, I'm not going to lie. I have a whole like journal here for core content, and then like I wrote everything down on a piece of paper, and then I went over, and then I have like I feel like I should do this for 2023 mentorship. I don't know if you can see, but it's like in paper as well. And I have like drawings in there too. I thought that was it's kind of sick. But yeah, that's kind of how I organize my notes. But other than that, I first start out with like a notepad, and then I write down my notes there, and then I type out my notes again. That's how I do that. I guess the short was here. That's hindsight. Overall, it does make sense because we've taken buy side here, then we've taken buy side again, and we've had a shift to market structure. And that new day opening gap. So are we going to fill in this whole new day opening gap, or are we going to reprice this low? How many points is this just from here to new day opening gap? 50, bro. That's crazy. 50 points. I feel like 50 points isn't even like crazy on NASDAQ. Yeah, of course. Yeah, I would say, I think I personally have, maybe I'm a little bit biased, but I think I have a good mindset when it comes to trading. So like the worst thing I want to do is go into the markets when I'm not ready to, and make that mindset worse. Or like second guess myself and doubt myself, which is why I've really just been tape reading. Like not even trading, just tape reading, bro. And I guess I'm not really like that locked in today, because I've established that, hey, we're in consolidation conditions here. On the hourly chart, it's not really much that we want to do. So I'm definitely expecting to see this low, honestly, today. And I never checked the regular trading hours. I want to see this low. I think that's very well possible today. If I had changed state delivery on the 5-minute, we swept this high. Look at this wick right here, and we've now displaced lower. So this does not mean that there's not going to be no opportunity after this move. There still very well is going to be opportunity. Now that bias is a little bit more solidified. We've broken through constant encroachment of this wick. I'm now looking for this mitigation here. And I'm looking at this low here. And constant encroachment of that new week opening gap. That's what I would look for. ES is still consolidating. We have equal highs here. So overall, it's not the greatest because we don't have sponsorship from both. And we're now below true day. Let's see what happens though. Got you. Law of attraction. You know the 48 Laws of Power? I have that book, but like I swear I've started to read it like twice. And I just haven't been able to get to it, you know. I low-key kind of I kind of miss reading a little bit. It's just like peaceful, especially if you can do it like outside. I feel like I should incorporate trading into my or reading in my everyday routine. Cause the thing for me is like I just try to I've been studying a lot, but it doesn't mean I can't read, you know. Yeah, I would agree. You know Jordan Peterson? You all know Jordan Peterson? If you don't, you probably do, but you just might not recognize his name. He has a book called The 12 Rules of Life, and his book is pretty dense. His book is like it was like kind of intense to read it. He had a good book that I read. Cybernetics. I've honestly never heard of it. I do have a decent amount of books in my bookcase that I need to read. I go to there's this one store that's near me, and it's pretty much like a thrift store for books. So you get them for cheaper. And honestly, like you could probably find any book for free, 100%. We never retraced that mitigation. We had an institutional order flow entry drill. That's cool. We kind of had like a straight down move here. We had an inversion there. We had a virgin there. Hindsight demon back at it again. Yeah, I guess we did have that. Next stop is this low for sure. ES is left these equal highs though. Like that is suspect. Let's see how much stronger ES is. Look into it. I got you. Do you invest in stocks? Of course, bro. Of course. I mainly have S&P 500. I mainly have shares of SPY. I have some of QQQ. Apple, and then I have a few shares of Tesla. And then that's kind of it. I'm a lot of Apple though. Me personally, I like Apple. I have Apple phone. I have Apple headphones. It's a company that I believe in, and I just have put money in, and it's gone up ever since I have, and it's just for my retirement. I honestly don't care what they do. Like 5 to 10 years. This is like 30 years in advance. It's for my Roth IRA. And other than that, I honestly kind of want to get into swing trading stocks. Swing trading stocks. I kind of want to get into that. But also, I want to have my main trading to be day trading indices for sure. All right, just looks like we're falling out of bed here. I don't think this is anything to FOMO. I really don't. There wasn't a clear bias and framework here. It was still there. Like I don't think there's anything to FOMO at all. We're in a discount. We're in a consolidation profile. So deep premium back down to deep discount here. And I want to see what we do at this imbalance here. This is going to be kind of influential in my opinion. The long's about to be juicy. Possibly. We're well below true day open. Smart money's going to be looking to take off their positions at this low for sure. It all depends, bro. We just melted there. Nothing like insane though. Like that's only 160 only, but that's like 170 points. What about Nvidia? I don't have like individual shares of Nvidia. I don't know too much about them. Well, obviously they're like. I just am not like into that. I personally would rather invest in things that I know, than things that I use for like long term. I really don't know what to expect here. We just had a sell off, you could say. I don't know why I don't have another chart pulled up. I have two monitors, but I'm not using them. I'm honestly not anticipating a reversal. I'm really not. That's me personally. After seeing this move here, I'm not thinking that we're just gonna immediately reverse it. And if we are, we're gonna go to like a 5-minute imbalance like this. All right, so let's talk hindsight here because it's now been hindsight. Buy side taken, market structure shift. We respect consequent encroachment of that wick. We displaced through new day opening gap, creating a fair value gap here. And then we respect that with the order block. Overall, it's definitely because of ES. ES was why I didn't really want to take or look for anything. Just reading the tape though, like none of this is FOMO. Like I don't care. I don't care to have quote unquote missed out on this because that just shouldn't even be a rational thought because market's gonna be open tomorrow. You know. But yeah, had I just been looking at NQ, I would have been more prone to looking for that, you know. We have manipulation above 830 opening price. We take it buy side here. We take it buy side again. Like, just beautiful delivery here. Breakaway gap. Immediate rebalance. Cost of encroachment. Displacement through a new day opening gap. Fair value gap. Breakaway gap. Like, just very nice. Very nice. That is something to note. I was looking at ES a little bit too much. But it's also not something bad. Waiting for sell sides to be taken, then look for a strong inducement with clear bullish structure. I think there could be a like 1150 macro type of retracement, you know, lunch hour retracement, that type of trade. Overall, we kind of had to move on Nasdaq. I mean, there still could be more. We've taken sell side. And obviously, we have this divergence here between NQ and ES. ES barely did anything there. So, this is an example where we're within a consolidation profile. What I mean by that is, if we look at this, we have a big dealing range here. Thursday we had a big sell-off, and then Friday we established a low to high here. So therefore we have created a dealing range where we're taking buy side and we're taking sell side. So therefore we're gonna be a lot prone to stay within this until something happens. In my opinion, that's what I see. So you can't really expect too much or I'm not really gonna expect too much when I see this. We had this big news wick. We have manipulated lower, repriced higher, straight to this new day opening gap. We originally respected consequent encroachment, or we were for a second. But since we had that 5-minute change of state delivery, that's just a short-term retracement up to new day opening gap to then displace lower. Like originally when I mapped that out, we respected that, and then we came back up. SMT at the high. That was probably. yeah, this one right here. I guess that SMT inversion. That's tough. That's tough. I kind of wish I saw that, but it's cool. I feel like the days that you can stay out of the market, if you're unsure, the better. I'd rather have one model that I stick to and like I have a nice, very nice predetermined bias and stick to that, than worry about missing out on this. And like this was a low resistance liquidity run. Like this was nice. We sold off point 0.8. We sold off 160 points in 20 minutes. I did kind of want to see a retracement up to that mitigation. Do you have a funded? I don't. Yeah, -2 hit. Here's I don't know. I'm not anticipating a reversal. If anything, I'm anticipating maybe more continuation. Oh, bro, I didn't have like any of these. We're respecting consequent encroachment of that wick. So I think we're likely going to have a swing high here, which means this imbalance could be a draw on liquidity. We have SMT here. I don't know. I could also see us consolidate, which is what I'm going to submit to. But if we look at yesterday was like mean threshold of that. I was doing like a chart, or I was doing like my annotations, and I saw that like after I've kind of done that. Beautiful. Beautiful. Oh, you can't do like in the trading view demo? Where are you from? Where are you from, AB? Should I start taking demo trades? I don't know how to reset this though. I was trying to run the account because I was doing the 2023 mentorship the first time, and what is happening right now? The world's ending. The world's ending. Click settings. Oh, I gotcha. I still have no intentions of using the demo account anytime soon, though. I think it's best to stay that way, too. You're from China? That's kind of cool, bro. Kind of cool. Now those buttons are red. I don't really like it, honestly. From Germany? That might be why. Are you going to college in Texas? I think I'm gonna stick to the 2022 model. Oh, look at this. Yeah, I'm not as locked in. With that imbalance. What something I want to get better at in my tape reading is kind of using the 5 minute a little bit more, or in the 15 minute when I'm looking at the charts. Because I think there's time. Well, I know that there's times when I'm looking at the 1 minute and then I'm expecting to see something on the 1 minute, and it's just like not beneficial to even be on the 1 minute. Note the imbalance on EOS. Like you going to the University of Texas? Like University of Texas? Gotcha. How delayed is chat? I don't think it's that delayed. Sometimes I don't see it. Yeah, it is expensive. I mean, it depends. It's nothing crazy. Like if I were to go to college, it probably would be like 35K for 4 years. maybe like 40K. I think I might have like be able to get some type of scholarships. Honestly, don't really know. Like whenever in school, like the counselors would come in and then they would like have you pick out your colleges. I never like really listened, you know, because like that wasn't even like on my mind. Like I don't want to even be thinking about that. Publicans, I would. It's not nothing like crazy. I used to think that college was like 300K. I used to, like bro three like I would, like I could afford college by myself right now. I just personally never want to go into debt, but also debt can be a good thing, but it's also something that I don't want to be in. Very slight SMT. I don't the type of SMT right here isn't gonna reverse the market in my opinion. Yeah, I'm not going to college. Hell no. Personally, me not me. I'd rather make my own way, find my own way, you know. And trading will give me that avenue, hopefully, and hopefully YouTube will too. Hopefully. But the reason why I didn't go to college is because I didn't know what I wanted to do. I didn't know exactly what I wanted to do, and I want to do this. So I'd rather take a risk but do something I like than try to go to college to impress my parents or to make my parents proud. And I'm thankful that they're not like forcing me to go to college. Like I'm very thankful for that. Cause like I was like, would you guys rather have me do something that I want to do, or would you rather force me into something that I don't necessarily want to do, and then that will lead me to be unhappy? Oh, no. This is not cool. This is not nice. You turned 18 in January? Nice, nice. Got some young blood out there. University's not needed for entrepreneurs. I would say it depends. I'm not like fully against college. People that say like college is a scam, college is a waste of time. I mean, it just depends on what you're trying to do, you know. I think college can be a good thing. It just depends on your situation. I'm 19. Your parents are supportive. Yeah, they know I work hard. My my mom wants me to go to college. She really wants me to go to college. My dad, he's more kind of chill with it, with me doing what I'm doing. But at the end of the day, like if they were like gonna try to force me to go to college, I don't know. I'm glad that I have supportive parents. Like I don't think they would kick me out. Well, I live with my dad because my parents got divorced. Yeah, I mean, especially with trading, like there's no limit to how much you can make in trading. I would agree. I would agree. Gender studies degree. That's crazy. That's funny. I'd rather take I'd rather take a risk than going to college and even your career isn't even promised. Wait, what's? I think pretty sure that this is 25% of the dealing range. Oh, I got you. Let's go. What happened? Did you just make 100K today? So did I. Dude, whenever I see any of that, oh my gosh, bro, it's for me, it's hard to like that person. For me, it's hard to like them. I just made $3,000 today. Any of that stuff, it's hard for me. I mean, I'm not gonna like hate anyone for no reason, but it's hard for me to like look at that person and say, "Hey, I want to be good friends with you," you know? You started at 16. How do you start at 16? I feel like it's crazy. You spend 10 plus hours a day. You started at 16. You're 18 now. Just keep going, bro. It's only gonna be time. I don't know. It's not like that insane. But when people say that they started trading at 13, I'm like, how do you even know about that at 13? Like, I was living life at 13. Oh, I got you. You took an L. We'll be back. You started at 14? How, bro? How old are you now? Yeah, I would agree. 19's young. I mean, any age is young, bro. 33 is young. You're 18 now. What I like the most about trading, and this is why I really wanted to trade, is the accountability aspect. And that's why I think trading is a good thing for me. Because I would say I'm pretty disciplined. I will say like the personality trait that isn't like the greatest for me is I'll go like all in on something for like a while and then I'll like slowly stop doing it and then I'll go all in on something else and I'll kind of just like little stop doing it. Like for me, it's like I don't balance my life out to do this that like that's kind of what I need to get a little bit better at because that'll help avoid burnout. But I don't know. I'm the type of guy that like I'm trying to go all in. I started learning trading. Dude, I started trading technically. I would say like a year and a half ago, but I wouldn't count any of that, bro. A lot of that stuff was just like me looking at support and resistance. Me like you looking at my phone, thinking I was trading off my phone. And I started trading with like support and resistance. I was actually in this one Discord, bro. I was in a Discord server that was so bad. It was the worst thing I've ever been in. I don't want to say whose Discord it was. I kind of said it in the past, but like literally this server, the guy would live trade, and I spent $50 a month. I was only in it for like 1 month, but like he would live trade, and he'd trade like basically like support and resistance, and like he wouldn't even show his screen. He'd just be like, "Yeah, I'm looking to long here. QQQ calls looks like the move. If we break this level, we're gonna go down here." It's like, I don't know why I bought it. SMC? Well, SMC is just ICT concepts. Because ICT pretty much created smart money concepts. But I don't really care, like, terms and such. I think there's literally nothing here. I would favor a run back down into this imbalance. We have this hourly volume imbalance that I think needs to get filled. $1. So that would lead for higher prices. Maybe like a 1050 macro. We have left these lows here, so I don't like that. Used to be in a penny stock signal server. That's crazy. Uses a playbook with market patterns. Yeah, I don't like any of this right now. Watch how much, like, it's about to be insane. Like, this looks so nice. But like the only thing is you gotta like switch time frames like this. And honestly, this ain't bad to do this. Is this CRT? Is that? I'm pretty sure this is CRT when we take a high and then close back within it. When we sweep a high like that. CRT. Alright, looks like I still don't like this run to buy side. Yeah, we're taking these highs here. For me, it's nothing that I liked, so I'm not gonna try to force it. CRT is used in candles as ranges, but studying candle closures is a big part of it. Like using Monday as a range. I got you. Do you think CRT is necessary? From what I think, I don't think it would be worth it. But that's necessary. Yeah, we're in such a like big consolidation profile. We're respecting both sides of this. Oh. High probability soups are the ones where we take a dealing range low. So we went from ERL to IRL. So I'm assuming this imbalance right here. Do y'all mess with the blue mouse? I have a blue mouse now, and I don't care what y'all say. I mess with the blue mouse, so therefore I'm gonna have a blue mouse. Should I think I might need to make it a little bit bigger. Wait, why does it not show up like that on OBS? Am I tweaking? Is the mouse big on OBS or on the stream? Because this thing's like half my page. It's crazy. I'm gonna go like 3. No, I'm gonna go like 2. Some light. Some light. I got you. I don't know, me personally, I'm not trying to be mentored by Romeo. That guy is definitely full of himself. But I used to say I didn't like ICT. But I think ICT's like actually a good guy. Like he's got a good heart. Yeah, ES looks like we want all-time highs. It's about looking at this hourly chart. NQ stuck within this range. We take this high, we take this low, showing respects to both sides of the range. Especially if this hourly candle closes within 15 minutes, we'll see what happens. I got you. So I'm guessing you've like actually dived into the CRT. So it seems like. I'll be right back. Personally, I'm never gonna try to learn quarterly theory. I think quarterly theory is I mean I can't say because I haven't learned it, but I feel like it's just an overcomplication, or not overcomplication, but like a little bit unnecessary. Like I think macros are. I got you. What do you? I use Notion. Notion's free and it's actually easy to use. But when I first started using Notion, I thought it was complicated. Or like when I first looked at it, I thought it was complicated. But like literally, when you go into Notion, I have a video on it. You could probably find other videos on it too. Yeah, I also think the people that say this is I literally just said that someone was overcomplicated, but I think the people that say that stuff's overcomplicated, they're just lazy. They're just lazy. They're just lazy and actually haven't put in the work. Like people say ICT concepts are overcomplicated. They're really they're they're complicated because it's not going to be easy. You think you're going to make as much money as you can ever need with something that's easy? I don't think so. I don't think so. All right, I'm gonna watch a lecture now. I don't like anything else, and I'm not going to read this tape. You consider us helping you out yet? I think I'm straight, bro. I appreciate it though. Hey, appreciate it. Dang, this guy was going crazy on Twitter for. I can't. People really like go crazy on Twitter. That's kind. It's kind of what I made a Twitter, by the way. Hopefully, I don't get caught up in it. I don't think I will. So this day we kind of had a consolidation day. Gonna go ahead and skip to the next day. We've liquidated sell side, by the way. Oh, I think this is the bank holiday. That's a bank holiday. We do deliver right to the new day opening gap. Yo, low key, bank holidays? Actually, I don't know. Damn. I'm in a long on Nas. Am I cooked? Maybe. The free resource PDF is pirated? No, I don't think so. Yeah, of course. Of course. Delivered right to that new week opening gap. It kind of was like an alright day, though. We didn't have as much manipulation as I like to see. Overall, buy side, shift to market structure. No clear model, though. Lucas, if you're still in here, DRT's dealing range theory. It's by Ali Khan. It's pretty much, it's just it's like the 25%, 50%, 75%, and he just goes more in depth into it. Oh, my ass is sitting here typing to you. I didn't realize you're still in here. Yeah, so it's just like market maker model. I'm not expecting any. I'm expecting a return back to these lows here. I don't think we're gonna put in a low here, but I think this is gonna be consolidation. So what might we do? We might reach a premium. Then we could have a sell model. Appreciate it. Best of luck. Best of luck to you too. Best of luck to you too, bro. You about to dip? Have a good one. Have a good one, bro. Appreciate it. Check the 4 hour. I mean, it does. But notice how we already taken buy side. We've already taken buy side here. It's like, why would the market wouldn't really need to want to go all the way up to this high, especially today. Especially today. And this is just type of profile that we're within, which is why I personally don't care about missing a short or missing a short here, even though like it was there. The framework was not. Like I guess the model was there, the pattern was there, but I didn't like so much the narrative around it, and that's cool. What market do you trade? What market do you trade?
Good morning, folks. After I get a 5x5 on Twitter, then I'll send the link because I don't want to send everybody prematurely without knowing that the audio is good.
5x5.
I'm trying the ultra low latency setting today on YouTube, so you should be able to know what I'm thinking before I say it. You wish, right? All right, awesome. Just bear with me 1 second, okay, folks? Good grief, there's already 3,000 people watching. Haven't even started yet.
How many viewers? How many?
All right, I'm just gonna grab a quick bottle of water and then we'll begin.
Yeah, he does say folks a lot. How many viewers do you think ICT would have if he went live today? Like if he had a mentorship, I think he would have like 30,000 at least. Live viewers. Bro, this guy in his throat, he's still clearing it. Feel bad for him.
So we are looking at the S&P. Upper left-hand corner is a hourly chart. Lower left-hand corner is a 15-minute time frame. And over in the large right-hand side, it's presently set to 2 minutes, which I'm going to toggle now to 5. Before we get into this, I want you to slow your roll this morning, okay? I'm going to give you the reasons why we have to be very cautious this morning, but we'll be here until about 10:30, maybe quarter of 11. Now, we've had a holiday this week, which interrupted the normal ebb and flow of price, sentiment, trading, speculation, order entry, just a lot of folks like to sit on their hands like me, and we don't want to touch those partial days where they trade 9:30 to 12. There was trading on Monday, but it's so abbreviated in terms of the time it's allowed to move around. It's important not to feel like you have to be part of that. Whenever we have a holiday, this is what you're going to be writing in your notes this morning if you haven't already decided to do so. I'm prompting you to do it now. On the heels of any holiday that impacts trading normal hours, anytime that occurs, the very next trading session, the morning is very, very, very low probability, meaning that it can be choppy initially, or the entire morning session could be a wash, meaning that we may not get a clean entry, we may not get anything that makes any real technical sense to be a part of it, but it's beneficial for you to be observing it. Now here's the thing that you want to know, if this morning is nothing that brings my attention to a specific setup, a draw on liquidity that makes more sense than I'm expecting, then I'll join you all in the afternoon session today. So you'll get potentially two. So don't be upset if there's nothing clean this morning. Now, pre-market, I shared a trade with you. I was trying to get in sync with what the market was likely to do this morning. And because, remember what I said earlier, not earlier today, but last week and such, and in Twitter Spaces, if I believe, if my analysis, if my experience, or I just get a hunch, I'm human, that I feel that the morning session is going to be problematic for me. If it's going to be choppy, if it's going to be listless, aimless, low liquidity run signatures are probably not going to be in favor, then what do I likely do? I like to look for a 7 o'clock in the morning to 8:30 in that time vicinity. I look for an opportunity to take a trade there. And what that does, number one, it removes the necessity for me to do what when 9:30 comes? Push the button, chase something that may or may not be there. Whereas pre-market, because I understand that if those conditions are, in fact, what we're going to encounter this morning, which is problematic price action. Remember, while you're being mentored by me, it's not enough for me to sit here and say, here's the best fair value gap to buy or sell in. Here's the order block to buy in. Here's the breaker. Here's the draw on liquidity. You need to know where to draw the line and say, I'm not going to step foot in this just yet because it doesn't look safe. Now, we never have an opportunity with markets. %100% risk-free. But there are times when probabilities are so shifted in our favor that it's almost a crime not to participate. That's what I'm trying to teach you to identify, these low resistance liquidity run signatures and environments, these market profiles that allow for very clean price runs. We don't have that this morning, okay? And I'm going to quickly go over why that's the case, okay? Number one, in your notes, you want to have a rough draft of all of your notes this morning, and then once you're done today, refine them and then add them to your journal, okay? Because there's going to be a lot of truncated statements because of me watching price action, and then I'll kind of give you a summary at the end. But going into it, this is why I elect to tell you and forewarn you that we're going to be probably in a very difficult morning session. If you look at the dollar index is all over the place this morning. It's choppy, it's range bound, and then, and I'm referring to a 15-minute time frame if you're looking at the dollar index. You can find that on TradingView with DXY, that symbol, and the 15-minute time frame is free. You don't have to subscribe to anything to get that information. If you look at what we've done, we have a range essentially around 103.87, if you want to call it that low, and then the high of 104.26 or thereabouts.
So watching, I'm doing like 1.5 speed. That's what I normally do, 1.5. He is kind of going crazy today. I'm not gonna lie. He's going pretty fast. Oh, I thought that was the current. How am I still in March of 2024? 2020, now I'm in 2020. What? Dollar kind of just consolidated.
So we're inside that range. It's range bound. It's listed. Now, if you look at what we've done, we have a range essentially around 103.87, if you want to call it.
So he's saying this low to high.
That low, and then the high of 104.26 or thereabouts. So we're inside that range. It's range bound. It's listless trading. Over on euro dollar, we've had slightly lower prices, but we're still in a consolidation, much like we had in dollar index, as you would expect. But then look what we have here in British pound. Pound dollar on its 15-minute chart, we've had a nice acceleration to the upside after reaching below the 119.90 level. So we reached as far as 121.30. That run, the fact that we're on the heels of a holiday.
Wait, hold up. This kind of looks. Doesn't look too bad. I don't necessarily love it.
And we don't have a lot of clarity in terms of the ES, what it wants to reach for. And I'm going to go and show you my new week opening gap template so that you can get a feel for what might be unfolding. And then we'll go into the details with ES and what we're going to be focusing on. Give me 1 second. All right, so you should be seeing the new week opening gap template for ES. And let me get to my chart so I can follow along with my own jawboning here. All right, so this is an hourly chart. This right here, and I know I don't have a way of highlighting my cursor, but you should be able to see it right here, about midpoint of the chart. Directly underneath my cursor, you're going to see a small little segment right there. That is this week's new week opening gap. Okay, really, really small. Then I have this one here. So I want to kind of scroll through and let you see the levels, and your homework assignment is to find out where they're anchored to. And then this evening, I'll give you a review as to where they actually are anchored from. So I'll make the chart a little bit taller so you can see the levels. Okay, and what you want to have in mind when you have these on your chart is think of them as dynamic support and resistance. Now we're trading down here, real time. For those that are watching that have the benefit of having real-time data, try to give me a latency. Right now, looking at my screen versus your data, how far away are we in terms of price? Is it kind of close? Because I'm using the smallest latency setting for YouTube streaming. A lot of people complaining, you have a delay. That means I'm probably doing something wrong or sneaking something in there, right? So 40.20, 40.19 and a quarter, 40.18 and a quarter. There should be one more down here. Yeah. 39.88.50, 39.87.75, and 39.87 even. Okay, so that way you have that. And the other ones you already know about because we've been walking forward with it. So there's the ones that we're actually having on our charts. If you haven't had those on your charts, then you need to calibrate your charts and show those levels as I've shown here, because that's what's on mine. On TradingView, you can create little templates and save them. I save mine as New Week Opening Gap, NWOG, and then anytime I want to refer to it, it'll ask me to go to this chart with no other additional annotations. Let's go back to the ES chart. All right, we're going to start in a couple minutes because the session's about to begin. Just want to flash the disclaimer once more, just in case you didn't see it when you came here. This is not a signal service. Do not push a button on anything I'm saying. It's live tape reading. Okay, it's help you get accustomed to reading real-time price data, which is an essential step before you even consider demo trading, and certainly before live trading. So we have gap opening lower. So we'll be looking for a reason to want to pursue a retracement back into the overnight price action. I'm not suggesting we're creating a low to go straight to the moon or anything like that, but there is a gap between, if you look at your electronic trading hours tab, that's what's being shown here. If you click on regular, we're a good deal away. And TradingView is not going to update and show for whatever reason. They didn't want to populate the chart on my end for yesterday's abbreviated session. So just know that we will have a very choppy, likely morning session. So the opening range, first 30 minutes of trading from 9:30 to 10 o'clock, we're basically observing, trying not to do too much, not having any kind of impulse to want to chase anything. Even if it tapers off and starts to run away, these conditions are the ones when you want to sit still and let it run without you. It's okay. These types of moves, they're 50-50. You don't know. And you want to try to trade in conditions that are very, very favorable, that low resistance liquidity run signatures will reside in. We don't have that this morning. But it's beneficial for you to learn this, because if you understand what we're studying and looking at, it will prevent, hopefully by experience and being in it, not jumping in blindly when you start trading with your quote-unquote funded accounts, or if you ever decide to trade with live account funded. So far, dollar is not showing any kind of willingness to want to leave its range this morning. And again, this is all based on what I was mentioning about the holidays. Let me take this up to a 60-minute. All right, so we have buy side resting around 40.90. We also have another pool of buy side liquidity resting at 40.73 even. We've already worked towards this low here. Let me draw a line on that. So we had a small little shallow sweep below this low here. Anything lower than that, we have a small little fair value gap. You can find that on your February 1st, 2023, 2 o'clock or 14:00, 1 hour chart candle. Let's drop back down to 15. One of the things that I was looking at this morning that gave me some confidence to work with that short position. If you look at the highs in here, after we trade up into a fair value gap, don't worry, I'm watching real time, but I've already warned you that we're not likely to see something so clean. So while we're waiting for that, I'm going to go over what I did this morning. I shared on Twitter. I uploaded the video too from my phone, and in case you missed it, I wasn't hiding my entry. I actually recorded it and put that portion on Twitter. When I was recording it, my boxers, I have 2 dogs, and they're a little bit rambunctious when I wait.
That was a decent 1050 macro, honestly. Come back down, right to volume balance, right to order block. Then we shoot up during the 1050 macro.
Wife first gets out of bed, and they ran out into the house. She had the bedroom door open, so they ran out there and set off the alarm before I had a chance to deactivate it. So I had to scroll through my phone to go to the deactivation thing for my security system, and then go back to recording again. So that's why it's truncated between a small little piece that's on Twitter and the video that you saw. It was recorded. I just couldn't show you all the pictures and such I have as wallpapers and things as I toggle through my phone. But anyway, we had higher highs in here on even the S&P and with the NASDAQ. If you look at the settings down here, I have set the high. So it's plotting the cumulative line. Remember, we're looking for a buy side run. Remember, we're pushed down. It's not high probability. This is what we're looking for to dig into overnight trading. Watch this one here. And then this right here, where I was shorting at. Anyone that's held on to their short, they might want to run against that because there's a small little civvy up in here. Right up in here. One of the easiest ways to find my cursor, this is something I just thought of while doing this. If you want to know where my cursor is, because I can't highlight it, look on the price axis on the right-hand side of the chart over here. And wherever you see the numbers going up and down, just go to the left and you'll find my cursor that way. Okay. But there's a small little civvy, sell sign of bounce, buy sign of efficiency, and order block right there. So if it gets a little overzealous on the upside and wants to really dig in against the shorts that's been holding overnight, they have buy side here. I'll note it for you. Yeah, buy side here. There. And a really nice one at the point at which I shorted this morning. I shared that with you on Twitter. Why didn't you call it live? I was just waking up, man. I'm trying to get my bearings. Got to be out here in front of the whole world so you can look at me through a microscope. What makes this guy tick? All right, so anyway, we have higher highs here. Lower high on NASDAQ after trading into what? A premium relative to the high to that low. Cleared buy side. And that right there was the nice run into it. It was a small little fair value gap also I worked with pyramid.
All right, so I get a lot of questions asking how long I've been trading and what exactly did I study in my early years as a trader. So I'm gonna try to just do a quick little rundown and just kind of show the things I went through if you want to kind of follow this path. So starting off, I learned from ICT, all right, and I highly recommend the 2023 mentorship playlist. I would sit through this, take notes. It's hefty. It's 105 videos. I think it comes out to like a little over 100 hours in total watch time.
And you can obviously look at the video that I posted on the YouTube channel. So I'm gonna take this way, minimize that, make these a little bit thicker so you can see it. All right, so we're gonna study and see if we want to drop back lower. I'd like to see this down close candle here at 931. These are all 1 minute candles. I'd like to see price maintain above that. You see we came down to it in here, tried to work with it, showed a willingness to want to trade up. But because this market can be choppy, we can go into what? Seek and destroy. Seek and destroy many times starts off like it's a good price run about to unfold. And then you will either engage it or wait for another array to get involved with that price move. For instance, like I'm building the case that we're going to run for these buy-side liquidity pools. Okay, that's where my focus is. I'm not going long. I don't want to sell short. But because of the conditions that are in right now, because we come off of a holiday, we had an abbreviated session on Monday, that affects a lot of trading, a lot of sentiment. There isn't a lot of interest right now because everybody's sitting with their hands underneath their hinder parts. They're sitting on their hands waiting to see what the market's going to show. They're waiting for the tip of the hand. Okay, so imagine we're all sitting at the poker table and we're waiting for the market who has the highest stack of chips. We want to see hopefully that hand that market's holding is getting flashed to us so we can play with a little bit more insight. Right now, it's too soon, too early. My attention is on this down close candle. I want to see price support it. Or I want to see price respect it, rather. Let me say it that way. But I'm looking at the likelihood of the market wanting to draw up to this buy-side liquidity. If it trades to this buy-side liquidity, I want to see it advance quickly through it and work towards this one. It may not do so. They're waiting for the tip of the hand. Okay, so imagine we're all sitting at the price run about to unfold. And then you will either engage it or wait for another array to get involved with that price move. For instance, like I'm building the case that we're going to run for these buy-side liquidity pools. Okay, that's where my focus is. I'm not going long. I don't want to sell short. But because of the conditions that are in right now, because we come off of a holiday, we had an abbreviated session on Monday, that affects a lot of trading, a lot of sentiment. There isn't a lot of interest right now because everybody's sitting with their hands underneath their hinder parts. They're sitting on their hands waiting to see what the market's going to show. They're waiting for the tip of the hand. Okay, so imagine we're all sitting at the poker table and we're waiting for the market who has the highest stack of chips. We want to see hopefully that hand that market's holding is getting flashed to us so we can play with a little bit more insight. Right now, it's too soon, too early. My attention is on this down close candle. I want to see price support it. Or I want to see price respect it, rather. Let me say it that way. But I'm looking at the likelihood of the market wanting to draw up to this buy-side liquidity. If it trades to this buy-side liquidity, I want to see it advance quickly through it and work towards this one. It may not do so. But as a real-time tape reading study, that's what we're looking at. In between all the price points that I'm referencing, you want to annotate how much of a price move transpires between the point at which when we draw attention to it and if it goes to a level that we were expecting it to draw up to. How many handles? How much time does it take? How much drawdown against that? All those things you want to be logging while you're tape reading. You're not just simply listening to me, hoping I get it right or hoping I get it wrong. You're listening to it and then you're observing and measuring all the fluctuations each time. But as a real-time tape reading study, that's what we're likelihood of the market wanting to draw up to this buy-side liquidity. If it trades to this buy-side liquidity, I want to see it advance quickly through it and work towards this one. It may not do so. But as a real-time tape reading study, that's what we're looking at. In between all the price points that I'm referencing, you want to annotate how much of a price move transpires between the point at which when we draw attention to it and if it goes to a level that we were expecting it to draw to. How many handles? How much time does it take? How much drawdown against that? All those things you want to be logging while you're tape reading. You're not just simply listening to me, hoping I get it right or hoping I get it wrong. You're listening to it and then you're observing and measuring all the fluctuations each time. Over time, you're going to see there's going to be a lot of things that work out in favor, and there's going to be times where it doesn't work out in favor. The main takeaway is right now we've already identified this morning as being difficult. It's going to be difficult. Where everybody else, retail Rick's he's probably got 6 trades in already today. Every short-term high and low has potential to be swiped, okay, above and below, above and below. That's really what I want to have your focus on there. But I'm primarily interested in seeing if we can drive up into these buy-side liquidity pools. That would also give me a little bit of a help for potentially what I'm going to likely do if we get a sloppy morning, what I'll look for in the afternoon. Dow futures on its 5-minute chart really had a nice reaction off of a 5-minute fair value gap. You can see that on your Dow, which is YMH2023. The candle on the 5-minute chart is the 7 o'clock candle this morning. Presently on ES, I may refer to charts I'm not showing you. I'm not going to keep toggling back and forth because number one, I'm going to probably get disoriented and do it incorrectly. So we're going to try to keep our focus here on ES, but I'm just giving you additional insights. You can look at it on your end. So I'm watching the Dow only because it's like a barometer, like the dollar is for me when I'm trading Forex. So far, we've had that down close candle supporting initially. It doesn't mean it's going to stay like this, but it's already shown a willingness to support price in here. And NASDAQ's reaching for its buy-side liquidity pool, essentially around that 12,275 level. So ES should have a nice run into that 40.55 level. 40.55 and a half. Dow futures are still a little bit heavy, but it's touching a potential bullish breaker on the 5-minute chart. So that's what I'm looking at. You can see that bullish breaker on the 5-minute 9:15 candle. So time candle, on your chart, you'd be looking for on the Dow chart 09:15. that candle's wick is what I'm looking at. So far on the upside, leadership is being shown with the NASDAQ. Just about there on NASDAQ's buy side liquidity pool. It just pierced it just now. So we want to see ES try to run to catch up with it. Not seeing any kind of confirmation with risk on, risk off across the Forex pairs, euro and cable, and dollars still stuck in the mud, which, that makes trading for the crosses in Forex better, like euro, pound, Aussie yen, those types of things. Anything that's not a dollar cross, they'll be moving around in a condition like this. ES should be piercing through that buy side next here. NASDAQ still holding above its buy side liquidity pool. And Dow still stuck inside of its middle of its range. Between its low and intraday highs formed since 9:30's opening. If Dow futures can move above its 33,635 low, that should give some lift to ES. There's your buy side liquidity pool. So now you want to screenshot that right there. So we outlined this down close candle. Let me make it a little bit wider so you can see it. We outlined the 931 candle. Okay, so that down close candle, I wanted to see price be supporting this move down into it. It shouldn't pierce through it. It doesn't. The candles also, on the next one here, goes right down to essentially mean threshold, which is the middle of this down close candle, which is an order block, obviously. So it comes down and then reprices higher. The next candle opens, trades down into a volume imbalance and order block. So it touches it here. And what I was taking your attention to at the time was I was watching the NASDAQ and my other charts. So that way you can have them on an additional window. Like if you're looking, even with a single laptop, you can open up another window that you just hold down Alt and tap the tab button, and you can toggle through your windows. So you can, when you hear me refer to, look at the Dow at this time frame on this particular candle, or look at the NASDAQ. That way you'll be able to see the same thing. You won't have to have 10 monitors in front of you. You can just do it with one laptop. But you want to be referring to other markets to support you, not just simply looking at one time frame of one asset. You might be specializing in trading the ES, because I'm not trying to push you all to do it, but I'm only going to limit my focus to this because it'd be very easy for me to get diluted, and I won't be as effective if I'm looking at all different things. And if I'm not doing requests like, hey, let's talk about this one. No, we're not doing that. It's not have your way mentorship. We're doing one thing, and everything I'm teaching you in this works in the US 500, works in the US 100, works in the German 30, it works in bond futures, it works in, obviously, ES futures, it works in Forex, okay? The impatience that you're feeling because you want to trade what you're able to trade and copy whatever I'm talking about, that's not going to happen. You're not going to learn that way. But we've talked about that order block, and the draw on liquidity was here. Now look what we've got since then. What was above here? Buy stops. What's below here? What's down below this low here? Sell stops. So if we're cautious, because it's a holiday, because it's not likely to be clean price action, the market can do what? It can create that what seek and destroy profile, which is every short-term high and every short-term low will get pierced and swept back and forth, back and forth. And essentially it can go nowhere all morning session going into lunch. But because we have such a large opening gap lower, we're opening with a discount. The discount is determined because of the opening price being lower than we closed the previous session. So when we have that, the market is going to do what? It's going to favor probing to the upside. Even if this is to go lower, it wants to go higher. Why? Why would it want to go higher? Number one, to move against those people that are short, or to move against those shorts to accumulate their buy stops, then ride that lower. So either way, it's more incentive for what from high and every short-term low will get pierced and swept back and forth, back and forth. And essentially it can go nowhere all morning session going into lunch. But because we have such a large opening gap lower, we're opening with a discount. The discount is determined because of the opening price being lower than we closed. The previous session. So when we have that, the market is going to do what? It's going to favor probing to the upside. Even even if this is to go lower, it wants to go higher. Why? Why would it want to go higher? Number one, to move against those people that are short, or to move against those shorts to accumulate their buy stops, then ride that lower. So either way, it's more incentive for it to go towards the buy side liquidity pools, which is why I've referenced them this morning before we even opened up. But it's problematic, even though we've looked at something that delivered 5 handles or more between the order block that I outlined and the buy side it should have drawn to here. That move from here to here, that is your bread and butter setup. That's what I was crowing about in my very foul language Twitter space this weekend, which I thought about after I closed out. I must have said the F word probably 120 times. I apologize, but I was very animated this weekend. And when it's live, it's unfiltered. So we've seen the buy side liquidity on NASDAQ swept above that 12,275 level. So far, we're back below it. Dallas is really unable to do anything. It's already making lower lows. NASDAQ is still way off of its intraday lows from 930. And S&P is in the middle of its range between its low and its intraday high formed here. So we have lower lows being formed on Dow. NASDAQ's near its high of the day from 930's opening, and S&P's in the middle. Does that sound like market symmetry? No, absolutely not. They should be in tandem, moving together. Plain and simple, clean price runs, moving lockstep. Higher, higher, lower, lower. It isn't seen. You aren't seeing that, are you? Exactly what we were expecting. So that is worth its weight in gold. Dow high of the day from 930's opening, and S&P's in the middle. Does that sound like market symmetry? No, absolutely not. They should be in tandem, moving together. Plain and simple, clean price runs, moving lockstep. Higher, higher, lower, lower. It isn't seen. You aren't seeing that, are you? Exactly what we were expecting. So that is worth its weight in gold. Dollar index is looking to challenge its intraday high. Let me get that high for you so you can find it on your chart. On a 15-minute time frame for dollar, which is the DXY symbol on TradingView, that candle's high at the 415 for today. The high comes in at 104.26. Right now we're trading at 104.17.4. Watch the sell side down here on ES. Even though that NASDAQ is way up there, high up in its intraday high range, it will likely smash down and catch up and take the sell side out on it as well. S&P's just cleaned out its stops below the low here, and Dow is really, really showing weakness. NASDAQ still not making that lower low. So when we have situations like this, you turn your attention to the NASDAQ. If you want to study like a potential setup, you can look for the NASDAQ to try to catch up because it's the stronger one right now. That might change gears, and it becomes weakened or sickened because of all of the weight that's placed on the marketplace, like we've seen in the Dow. If you look at the Dow, which is YMH2023 on TradingView, and NASDAQ symbol is NQH2023. Actually, I can do this.
All right, I'm low-key gonna head out of here. It's been a great stream. 11 hours, 11 minutes. I was gonna go live maybe for like 11 hours, 40 minutes, but it's cool. It's cool. I'll be back tomorrow. I might go live a little bit later today, but I'm planning on just chilling. So I appreciate you, and I will see you guys later. I'll have another video upload later. I'll have a market review later, and yeah, I appreciate you, and I'll see you in